It is April 3rd. We're going to be streaming stocks, options, futures, looking at some technical analysis, trading some ES, watching what's running. Keeping an eye on GME. BBY is now suspended. BBYQ. Barbecuing over here. And yeah, sub up, like up, comment down. Happy money sticks around. I'll get set up here. Got a little morning Yaz. Gonna share the streams on Twitter. Thank you guys that bought on here. Barbecue. See what sort of tags will generate. Nothing. Crash. Thanks, guys. That is our Twitter. It's at HappyMoneyYT. And put a link for Discord if you guys are on there. Economic meltdown. Bank implosion. Nice. Okay. So today's the day. Should have some good volatility. Morning, Jan. Hey, kitty daddy, get that hype. Bought some BYS morning. You could buy it. What? I thought it was suspended still. Did it fill? Huh. Yeah, let's listing and trading today. Very strange. The board just isn't silence. I don't know how strange that is. They have a lot of filings. Like the one does with Bye Bye Baby. Good crackpot foil. No one told the Germans? Did it fill? Did the order go through? You were able to buy a share of BYQ already? Yeah, it won't let me buy it. Got filled? What? Weird. So it's trading on the German market already, huh? Very strange. I guess that whole being suspended for 10 days. I know I wasn't so sure about that. It needing to have to file that Form 25, and then we'll see what happens. But I'm not too confident this thing's going to be suspended for 10 days before it starts trading the OTC. Thinking it's going to be able to be traded. I don't know today, but soon. Very strange. We've been duped. Got one thumb up this morning. Thank you, individual. Get some levels drawn in here. That's very strange. Build and trading already. I don't know where they got a lot of info about that form having to be filed, and then 10 days after that or whatever. I think that didn't apply to Chapter 11 maybe, or I'm not sure, but I don't feel like that's right. And yesterday's price action was so crazy to watch. I mean, we're gonna have probably big moves today with Powell. So I'm thinking you retrace all the way back up to the highs. You break down below 400. Just chill with that for a bit. From also low there, I like that. Yeah, I was looking at top. See what happens with this one. Nice little rallying to close yesterday. He's stuck again, happy. Oh, sorry, BUI. Morning rally. Where's the barbecue? What barbecue? I don't know, apparently you can buy it in Germany already. Barbecue and beyond. The U.S. Treasury says it will launch a program for buying back government securities sometime next year. First time since 2000. move intended to ease liquidity in the roughly 24 trillion market at the center of the global financial system. Ford Motors total vehicle sales 184,000, up 4%. Yuan is not a threat to the US dollar because China is not a predictable or reliable market. I don't know about that, Larry Summers. Russia's Wagner chief goes in. I believe Ukraine's counteroffensive has already started. NATO intel chief, we see a significant risk that critical infrastructure in Europe and potentially North America can be targeted by Russia as part of its war on Ukraine. And Griffin, the hedge fund CEO, seemed poised to back DeSantis 6 months ago, has been privately telling people he's deeply troubled by DeSantis currently. U.S. Treasury keeps refunding auctions identical to prior quarter. What? NATO chief, Russia is more active in undersea domain than we have seen in recent years. The Kremlin said it had foiled in a Ukrainian drone strike on President Vladimir Putin's residence. Foiled? And he was unharmed. Claim could not be verified. Oh, we had employment day this morning. ADP employment rises 296,000. Estimates were 150,000. Hey, Mosmus. Buy it on the Mexican market. Hey, trader. Last I saw, it's still suspended, but I'm not sure. I guess Jan bought it on the German market already, so might be straight up trading on OTC. If it is, I'll probably actually sell. Because my reason for... I actually bought yesterday. I don't know if you guys aren't on Discord, you didn't know, but I did buy in the after hours yesterday. A smaller position, but just in case, yeah, well, that list came out of all the interested parties. There was a lot, and Ryan Cohn was still on there, and the price had dropped down another 30% from where I sold it, so I figured I'd take a small position just in the unlikely event that it was suspended and didn't go to OTC and then just got resumed back on the market. But if it's trading today on OTC, then that's squashed. So I'll probably, I don't know. I mean, see how it plays out. I guess if it starts to sell off, then yeah, I'll just close it out. But potentially, it'll be somewhat flat. I don't know. Initially, I mean, just this move from this high is drastic. The 50 cents we had, 85% down. Rogers. OTC and pre-market? Maybe not, actually. Not certain. Germany was till now, no different in trading till now. Maybe you were trading... No different till now. Maybe you're trading the old ticker. Traded on eToro, so it's already on there. Huh. Yeah, your options data won't update until the options market opens. I've got 3 minutes. Here. OTC pre-market. Fidelity's updated. So you guys are all able to trade it then, huh? I mean, the ticker's update on Webull. We'll see what happens at market open. Morning, CJ. Morning, Damien. Let's see. We've got 2-minute warning. Up 20% in pre-market? Really? Alright, 15 seconds. Oh, IDEX. Oh yeah, IDEX is ripping. Wow, had quite a sell-off at close yesterday. I think this has a delisting warning going on too. The CFO resigned. 420. Ding, ding, ding. If BBBYQ opens up, we've got GDC was kind of gapping up. Thought so. Yeah, this thing's up 33%. I have a knot in my back. GME homies. It'll be a crazy day, yeah. IDX positive catalyst, if they did get a warning about being delisted, would be that they're now in compliance. Top starting to rally. Got 60-40 the high, one of the highs from yesterday. It's still waking up here. This doesn't look like a 57% gap up, but I think it is. That's crazy. Makes such big moves. Nagel, yeah, Chinese stocks are going again. Nagel's up 7.25. A little bounce on its way down, probably. Yeah, 666 closing. I saw that. In top, waiting to hold through some halts. I actually have a share of top also. One share. Yeah, top's moving up there. About to halt probably. Yeah, top. Still trading. GDC 52%. What's this thing doing? Hard to even tell. Maybe it's almost double, really? Could have just had a pre-pal run up on the IV. So I'm not showing that BYQ is trading. Oh, maybe it is. Is it at 49 cents? Is it down 25%? Oh yeah, I think it is trading. Dang, I think it's down 25%. Oh, we got our gap down. Alright. Weird. Yeah, here's BYQ. So it's trading. It opened at 48 cents. The low is... Wait, what? The low was 48 cents. High is 6 cents. Oh yeah, open down here. Very confused. Yeah, so it's trading. It's just not a Weeple. So it did have a gap down. 15% gap down. It did actually hit a high of 60 cents though, so that was actually higher than it closed. Or 6 cents, right? What did it close at? 666. Guess not. And I'm out. Yeah, so BBYQ. Gap down, it's down 20%. Is at the high of the day. Let's see. Here's basically the only candle from it. So all that misinformation about it being suspended for 10 days and that form being filed. Yep, wrong. Over 40%. IEP had a short report. They had bad earnings, and then they had a short report. So that can trigger a pretty big sell-off. BDC is halted. Keep an eye on BY though, guys. It's not on Weeble yet, so here's how it plays out today. The XAI down 13. What's up, Isaac? Ops up 25. Skills? That's one I haven't heard in a long time. Ops ripping 33%. Keep an eye on BBY. So it's down 17%. It's at 6 cents. So it did have a pretty big gap down, like 40% gap down, but it's bounced up 20% since then. So not bad. Volume on it. Wow, there's a lot of volume. That's crazy. 4 million. 4 million in the first 5 minutes. Okay, yeah. That's a ton of volume for OTC. Pops up 32%. It's skills, man. I totally forgot about that ticker. This will fly soon, huh? Why? BDC still halted. Still no data on Weeble yet. GME with a little move up. It's up 0.7. Any futures or options trading do today, just be wary of what's coming at 2. That will shake the whole market. No dark pools in OTC. Yeah, I think that's right. I'm not certain, but yeah. Yeah. BY's holding 6 cents. So 619. It's down 17% from yesterday's close. Mullen had a gap up. 4%. 90-day ban. I don't know. You might get a one-time deal. I'm not sure if Weeble does that. Can't be good faith violationing so much. COM up 5%. Yeah, I mean it's a pretty aggressive move on IEP. Oh, wait, they haven't had earnings yet? I thought they already had earnings. What was that interview with him talking, or that story about how he was so he was upset with their numbers? Oh, that was Newell. That wasn't IEP. My bad. Never mind. They haven't had earnings. That was Newell I was thinking of. So the earnings are on Friday. This is all from that short report. Huh. It is pretty aggressive. BBYQ down 20%. You know, at 6 cents. GDC still halted. Top up 37%. I can't believe it. Not 10 billion. I think it was. I saw the news. 100 or 1,000 vehicle contract. Is this what you're talking about? Excuse me. $63 million purchase order. I think is the 1,000 vehicle contract. That's probably what you're referring to. Yeah, it's had kind of a string of good catalysts. BYQ is coming down a little bit. It's in the OTC now, but a lot of volume. It looks pretty much the same so far. See if that slowly changes. But yeah, the first 5 minutes you had 4 million. 2 million there. Almost a million there. There's a million on that 5 minutes. So kind of waiting on just news catalyst. Anything that comes from the chapter 11 with that one. Not much else to do. And try and trade it. I don't know. Out of the OTC stocks, it's probably one of the better ones to trade. Just follow the volume. Where can you buy top? I mean, I can buy it on any of my brokerages. Not able to? Top 46%. No halts yet. Little inverted head and shoulders, including the extended hours. At least the doc claimed that they were being attacked. Oh, really? That would be interesting. Down 10% again today. Statement regarding short seller report. Is that what you're talking about? This is just a response to the short report. I don't see anything where it says we're being attacked by shorts. Okay. Yeah, IEP down 10%, top up almost 50%. Yeah, I think they just had a response to the short report. They didn't say they're like going after illegal naked shorting or that. Are you making a Neo? Yes, it's up today, yeah. I wouldn't. Oh, that failed. I just chop it around since open. Me's up almost 1%. Nails up 10%. And BBYQ actually making a bull flag. Look at that. Its first OTC bull flag of VWAP. This was a big wick down. Slowing down, consolidating a bit. Just above VWAP. GDC is still halted. Did it halt going down also? Halted both ways. Or is this just down? Megal's up 8%. BYQ. It just dropped 50%. It's down 20% at this point, 18%. But yeah, right at open it did drop like 40%. And then it just rallied since then though. Make a nice little bull flag. Volume's still pretty high on there. Nothing looks different about it. Still at this point. Yeah, top did bounce there on VWAP. BBYQ maybe gonna make a new high. Went down 16% now. I like E-Trade alright. I mean, it's similar to the other big brokerages where it has pretty awful UI and it's very cumbersome and awful to look at, but it does a good job. My fills, I think I get better fills on Fidelity, but it's very close. It is better. I'll get hammered after FOMC. Yeah, I mean the chart looks bearish. We had that inverted hammer 2 days ago, and then yesterday was very ugly. This is all to resistance, so TA is looking like that, but all up to the pal, man. But if it is expectations, which it probably will be, that probably won't have too much of an effect. Like, we'll see volatility, but it'll just be based on what he says, I'd say. 230. DNS up 7.5. Oh, did it fill the gap? No, not quite. I'm moving up here. DNS also 8.5%. BBBYQ close to the highs of its OTC existence. Mullen volume is 100 million? Wow. But there's SPY moving up. Scared to play any breakouts today, as the market really is just going to be waiting on Powell. So maybe taking shorts at highs and just anticipating a trade in the range. This isn't unusual volume, I don't think, for Mullen though. All right. Top 54%. GME up 1.6. Top 53. Etro not filling it. Trying to buy. Yep, new high of the day for BBYQ. Climbing back up. Maybe sold too soon. They certainly did. Only down 13.5% now. That's 6 cents. 648. So it closed yesterday at 666. Yeah, these days is you can get trapped before the meeting. There's been too many times where I've entered a trade and then I get stuck in it, and I'm just hoping to get a volatility move. Get me out. There's a new high on Le SPY and the futures. Ripping right now. Wow, look at that candle. Okay, I might wait for a pullback. Take her long. Look at these 1 minute candles, outrageous. BUY is still climbing up. It's only down 13% now. It's at 657. Looking better OT the past 8 months. Yeah, that's kind of true. We haven't had a gap down that big since, I guess, news. 666. Whoa, BBBY. Higher than where it closed. Dang, I should have held. Higher than where it closed. It's at 6.7. Are you short commercial mortgage-backed securities? Is that CMBS? Probably an ETF for that. Can I go ripping? Top, getting up to that resistance. Wild little pullback here. BBBYQ, man. Wow. Should have held. Should have held longer. I mean, there's REITs for just like the real estate market. Whoa, GDC zoomed up 93%. See, 115%. Might have to grab this one. What upside does this have? Halt it again. Yes. BBYQ. Wow. Higher than when it closed. Oh, is it showing it now? Weird. What is this? People's all confused. Oh no, yeah, it's starting to show it. Just very laggy on Weeble. It's already filled this gap. It's up to 6.9. It's up here. Why is it different? Weeble's either super delayed or something weird is going on. Yeah, I took a long on the futures there. Waiting for a pullback and I kind of missed it, but it looks like it's consolidating up here. Which I like. I think I'm better. Yeah, really weird. So the Weeble's showing it different than E-Trade. E-Trade says it's at 678. Weeble says it's at 532. Might be delayed. Yeah, I think this is way delayed. I think Weeble just gets delayed data on OTC. Because it's also not showing yesterday's close even properly. Oh shoot, man. Well, I can't watch on Weeble then if it's gonna be that delayed. I think this might be 15 minutes delayed or something. So here's BBYQ. That's 678. So it's actually higher than where we closed yesterday. All flagged and I'll move up. Good, line looks good. Yeah, this is inaccurate. That's too bad. Maybe it's a 10-minute delay? Yeah, I don't know. Spike coming down here a little bit. I'll look to get into more longs. Got a retest of that breakout. I was trying to buy GDC, but then it halted. Tops up 55%. Big wick down there. Only sellers? No. No, you can buy it. It just depends on your brokerage. Yeah. Yeah, I think there was a 15-minute delay there. That is it, probably. Um, so yeah, sucks for Weeble, but I'll keep you guys posted. I mean, it's below where it closed. Well, it actually is right above it. It closed at 666 yesterday. That's 668. It had like a 50% gap down to 484, and it's just bounced out of there, rallied out of there so far. So yeah, it's trading much the same. We'll see if it has the same sort of algorithm of morning liquidity pump and then a dump and new lows. This is basically what we've seen a lot of the days on it. BDC resumed. Oh, halted to the downside. Oh, screw that, dude. I'm not messing with that. Happy money ETF. Need more likes on this vid. Yeah, we do. What the heck? OTC is not favorable for the likes. Thank you for your 8, though. I appreciate it, guys. Wait. Want to get some more contracts. Very bullish looking. Yeah, I'm not sure if there's a way to do it on Weeble. Get real-time data. So yeah, BY is coming down. It's bull flagging. Down 13%, 12%. Holding up good though. I mean, like I said, this looks like the same sort of algorithm so far. If it flushes and makes new lows, yeah, it's doing the same thing. But if it actually holds a higher level than where it opened, then that is new. I'm picking up some more futures to the long side. Might have some upside before Powell. Okay, GDC's halted down, tops up 50%. Big wick below that resistance, so you gotta take profits quick on these ones that have already had their rallies. Because it's probably in a longer downtrend. Like you'll get pumps, but it's on its way down. GNS up 6%. Only because you forced me to. That's why I do it every day. Always forcing. SPI up 20%. BBBY. Yeah, it's good. Let's see, like by 11 o'clock, if it hasn't kind of flushed, then new algo, I mean, new market. We'll see. Maybe. I'm not thinking I'm going to mess with it until there's some kind of catalyst, though. Partially just because it's not convenient on E-Trade to look at that chart. I maybe could get flushing down. Almost breakout. 4 hops. Oh. Fidelity has they don't really have a browser version other than just their website. They do have a desktop version though, Active Trader Pro. Morning, Mohammed. Yeah. They bat down 10-13%. Basically climbed back up to where it closed yesterday. Sure. Four and a half. Top actually consolidating up here. Good to see. That's pretty strong top. Have we got services PMI 945. Is that what caused this rip? Yeah, maybe. So that might be it. And 2, we have interest rates from Powell, and then 30 he speaks. BBBY actually holding up. It's only down 9%. It's at 675.9, so higher than yesterday's close. Very interesting. It doesn't really look any different as far as volume. See if the price action is different. BDC still halted. I think it's halted down actually. Nickels up 13. It has 7.5 at $1. Sure why I have an 1835 line drawn there, but it is. Oh, baby, why? Look at that thing. Climbing up 7 cents. All it needed was OTC. Only down 6% now. I was much too early on my close. I could have been profitable there. I can maybe pop that out. Yeah, it's climbing up. Down 4.5%. Bull flagging and climbing. 70,000 cents to go. Daydog holding 62. I think it's Friday. Look at that. That is the problem with closing in the first 5 minutes. Comes the direction, dude. Gotta wait. But yeah, I mean, it gapped down like 50%. It's basically just, it's been strong ever since. Ever since the gap down. It is interesting to see how it's trading too. It's not, just with all the volume, it's just trading normally. Only down 4%. Where was the... Well, I guess we look for resistance at like 759. Getting there, it's at 7.3 right now. 732. Kind of filled the gap. Can it fill gaps across exchanges? Sure. Yeah, this is a 15-minute delay. People. BDC is resumed. Not sure. Not sure why there's a delay on Webull with OTC. Never really watched OTC on here and compared it, so I didn't even know that. I guess, yeah, so I could get it updated. Eyes coming down here. I guess that probably goes in with the options too. I don't pay for updated options data on Webull because I don't really look at Webull's options. BDC up, but coming down. Well, my longs are not faring very well. Like I just made a move back to VWAP on the futures, which is lower than that on the SPY. Top is bull flagging, consolidating nice. Of VWAP. Niggle. 14% also looking nice. And now market's getting a little fleshy. I should cut losses and trade it or wait. Just cut. If he's in a free fall. The volume on BBY, that's only down 3.8%. Volume's pretty good. 17 million this morning, I think. Okay. I'll have to climb out of this hole. Great. Yeah, I closed that long. It'll false breakout. I wait. Wait. IP down 18%. That's pretty crazy. I thought this was from earnings also. BBBY down 3%, but made a 50% move already this morning. There's some OTC numbers for you. You bought it open, you're up 50%. It's 729, so it's filled that gap. Even to climb, it wants to go green. Looky, looky, looky. 7.5. BBBYQ is green on the day from a 50% gap down. 1.5, 2.5. Look at this. Oh man, I should have held. That's crazy. The IP is just flushing. Dude. The wrecking icon. I have to start buying this thing up. Into a really nice price. $14 million. Up 3%. I'll have to consider when would I buy back in if there was no news. Just on a trade. 779. So 775. Yeah, this is kind of the resistance. I'm curious what it does here. Because this is kind of the lows from yesterday. The kind of support it built for a while. It is looking a little different though. Dang, it would have been green on my opens from yesterday. Oh, that's crazy. Yeah, this is a 50% move. Yeah, we're at almost 60%. Up 5% on the day. No, it's trading on OTC. Nope, immediately went to OTC. So, yeah, you should be able to buy it. If you can't, talk to your brokerage, see if you have to do something to be able to buy it. Buy GDC near 3. And I'm keeping an eye on BBBY. Up 5% though, yeah, it's up here. 791 right here. I have to buy the real-time beta. Fashion. Yeah, it is weird, TJ. I mean, that might just go along with the short and distort report. Bash him personally. Short it. Bash him. Put out your short report. All goes together. GNS up 15%. BY still hanging out there. It's up 3%, 5%, right around 7, 8. Select time 42T. It's like GNS doesn't want to fill that gap. But it must. You must fill. Top is moving up again. Oh, still consolidating, never mind. It wants to though. Bull flagging. BBYQ still up 4%. 5%. It's at 789, 787. Kind of just hanging out from the level from yesterday, really. BAC's halted again. I think halts too much. Halted up. Magel's starting to break out of its bull flag. Kind of want some Megel. I mean, Megel or top. Gosh, you gotta be quick on these though. Rally's gonna be short. Yeah, I closed my shorts right at the low. Great. Immediately bounced on that. Well, we'll wait. So you're probably getting a delay on one. Or you're seeing different charts. The Shaw law firm announced it is investigating claims against investors' losses contact firm. Yeah, that's pretty typical with a short distort. You're gonna get like class action lawsuit. You're gonna have all sorts of stuff going against them. FFIE up 15%. I think Bed Bath likes the OTC. We're not seeing the same big sell-off to new lows yet. Very interesting. Fine, moving back up here. Now it's just chopping. I don't want to mess with it. Thought we were breaking out, but oh. Can't mess. 16 million. Let's see. I'm seeing 21 million on BBBYQ today. Bed Bath coming down here. Has VWAP at 648. It was starting to trade like, you know, it's basically trading the same as it was. Big swings. I mean, this run up from the gap down is pretty impressive. That was a 50% move, but since it's been, you know, above VWAP, it's been somewhat similar. Yeah, we'll see. Keep an eye on it. It's down 2.8%. It's at 729. Two offsets, 6, 4, 8. Yeah, it filled the gap all the way back up. So here's Weeble's chart. It's kind of delayed, but yeah, you can see it's coming up. This is from 15 minutes ago. So it made it all the way to 795. So right here. Basically right to the resistance from yesterday. So we'll see what it does. I think it's probably going to be pretty dead without a catalyst. How are the options? Are they actually active on there? Not seeing any open interest on the options. Is it a different options chain? You guys that had options that carried through, is it different chain maybe? This new option chain just has volume, has no open interest. So see, it's just volume, it's like a whole new options chain. If that's the case, you probably want to close out of your options because you get less and less liquid if no one's able to buy them and just sell. That's it. GDC 117%. It looks like it's halted again. Yeah, halted again. Oh, what a morning, guys. It is May 3rd. Thank you for your thumbs up. We're watching everything this morning. Got 13 thumbs up. Appreciate it. BYQ is, they're having a barbecue, having fun. Bull flag breakout. From a 50% gap down to a gap fill. All in the first like 30 minutes. GDC is halted up. Top haven't broken that bull flag yet. S is still going 18%. Bed Bath is kind of consolidating up here. Let's see, might not have a big sell-off and new lows. Interesting. 7.5. I mean, it basically rallied back up to the resistance from NASDAQ trading. It'd be very funny if it goes to OTC and just starts trading higher than it did on NASDAQ. Like it just, that was the low. The low was triggered by OTC. It's the low is in. Now it's going up. They were moved over to BYQ. Oh, maybe it just hasn't updated yet. I'm not seeing any open interest on the options. HLP's up 6. I's coming down here a little bit. Floor is in, folks. I mean, I don't know. It is interesting though. FIE. You guys in this one? You guys mentioned it the other day. I guess it's probably not good from where you mentioned it, but it is from this morning. Eyes coming down a bit. What's the plan for the shorts to expose the world? Get trading on OTC? I don't know how that would do it, but interesting, yeah. A lot of PR came out today. Up 3%. We saw the purchase order. That was yesterday. Right, Provides company update. I'm not like bullish on this company fundamentally, so I guess I could become that way. BBBY is consolidating up here. Very interesting. 1030. Yeah, they might not have the same control over OTC. Voting. This one. Reuters. As of April 30th, cash available for company operations was 116 million. Has received 263 million in purchase orders for Mullen Class 1 and Class 3 EVs. Vehicle program moves from pre-revenue to expected revenue in August 2023. I'm not sure. The regulations are different on OTC. I think there's less regulations, but I also think it's less manipulated. So, if you think like somewhere where that has a lot of rules, but they're just all broken and there's a lot of manipulation and stuff like that, like say the States, you know, we have a ton of laws. They're just not enforced, and you know, people just cheat. And then as you compare that to somewhere that like it doesn't have as much laws but has corruption, where you can just kind of get by and buy your way through, and but it's actually kind of more has more laws in a way. I don't know, because people actually follow it. I like compare that to OTC. It's kind of the Wild West. There's like less laws but more law-abiding citizens. Yeah, Mullen's hanging out there, 3%. Yeah, Top's making that flag. Same with Megal. GDC's resumed. BY looks like it wants to keep going. Yeah, no, I know what you mean, Trace. It's nice price discovery. I agree. It's not. That's what I'm saying. If it's, I don't think the same algorithms, the same controls. So far, it doesn't look like they're controlling it in OTC. Yeah, I want to give it till like noon. See if we get it shorted down again, but so far it's looking nice. It's up 5%. Yeah. I know. I thought this might get me to start trading OTC. Oh, there's a breakout on BY. Move up to 850. Crazy. You guys see it? Yeah, you can see it. These are 5-minute candles. That's a 60% move from open to right now. Wow. It closed. Dude, an OTC squeeze. But this would be very unusual. Very unusual. But so far, today's price action even on it is very unusual. I showed you all those examples. They all had gap downs, but they didn't then rip out of it. They had gap downs and then they kept going down next 2 weeks. You're looking at delayed data. Probably 15 minutes off. I'm saying positive things about it. Post your covered calls? Dang, dude. I mean, it seems a bit premature for that, since those are 50-cent covered calls, but we'll see. I mean, I got to start looking at when I would even get back in this for a trade. It's looking strong. 8.3 it's at right now. Yeah, it's like right here. 8.35. Give it time. I mean, it's not like, I don't know. But yeah, it's up 11.5%. Oh, I jinxed it. Okay, yeah, sorry. No, BY looks trash. OTC is way worse than NASDAQ. Yeah, it might be because of the lack of dark pools. There's nothing off exchange going on. It's just straight up buy and sell orders. Legit marketplace. Who knew we had to get to over the counter to have a fair marketplace? And all of retail is pretty much trades on, you know, off OTC, so 0.84 on Fidelity. Yeah, I'm seeing 0.085. Still going. Average down in the German market. Dang, yeah, look at you, dude. That's true, most of them are off exchange. Some brokerages will probably give you a 15-minute delay. Unless if someone has even a more updated price than this. Just tell me it's at $1. 15 minutes. GME trade is delayed. 10 cents? No, shut up. No, it doesn't. I can't even see it on TD. So it's down 11.3%. Yeah, I don't even think it's trading it on TD. Not for me, not Thinkorswim. Spy set up a little bear flag here. Me popping up a little bit. Interesting. Interesting, actually. BBY is up 12%. Huh. We're gonna get a BBBY OTC pull on those that are in the NASDAQ. Dude, this is crazy. Yeah, this is super bullish looking. it is interesting to see GME also, look. With the SPY coming down like this. Come on, that should be easy. Wow. I'm moving down. I didn't open up the shorts. It said bear flag. Tried to open the shorts. Didn't fill, and I just decided to forget it. I don't like the range. It looks choppy. We still have PAL. We have all that. C up 130, top up 50, UNS up 20%. Some brokerages might not have it moving yet. Very interesting how GME is moving up though with it. We still get like eyebrow desk down. The borrow fee went up on BBY, up to 12%. A little bit. Huh. See if we get some profit takers here. Move back down to VWAP or so. I think my E-Trade's real market data. My Webull is delayed by 15 minutes on OTC stocks, so that's why I keep pulling this one over here. I think you can short it in OTC, yeah. Maybe not as much illegal shorting, like naked shorting, or any. You know, you might actually have to have a locate before you can short it. So much more natural price discovery. Potentially, I'm not too familiar. Hey, Bourbon. 1TX. I'm very interested on GME moving up here too, though. Just have a PDUFA date coming up or something? Like maybe I already had it? We've got to be careful with these. $14% fee? Quite a lot. Yeah, I think it's like a 6% fee on that's what it was saying on TD Ameritrade. On E-Trade it's a $4 fee, $3.95. Not gonna lie, I'm definitely tempted to buy back in, dude. The way it looks on OTC is nice. Thanks, Christopher. moving down here. GME's moving up. It's up 1.9. You sure you bought it closed yesterday? Well, that's not right. Try and sell them if it's up 80%. Buying has to do with your brokerage. That's it. So I can buy it on 2 of my brokerages. If you're in Europe, it might be more difficult to buy OTC. GDC is halted again. Yeah, BY it came down a little bit, but it's not even made it to VWAP yet. Very, very strong price action. Yeah, that's the thing, and that's what I was saying yesterday and this whole week. If you want to own it in OTC, you need to check to see if you're able to buy it in there, and if you're not, you need to have bought it already. Some people are saying the brokerages were liquidating them. I don't think that would be the case, but potentially. I don't know if any of you guys been liquidated. Did you have shares of it yesterday and now it's gone? So it's at 805. It's up 7% from yesterday's close. Well, SPY is kind of flushing here. Hey, the bear flag would have been a good trade. Alright, we'll see what happens at these levels. 410, 409. Hey, me with the inverse, man. This is kind of wild. This. Whoa, whoa, whoa. GME's getting poppy. What is happening? I mean, not crazy, but that's crazy for GME. And it's inversing too. Dude, did BY just literally break everything? In a good way? Yeah, that's not normal volatility on GME. Not like we've seen in a long time. What was that? Is AMC going? No, AMC is not. Linux still has those calls, I think, unless they expired. You get such short-dated stuff. The inverse, too, is very, very interesting. I'm wondering if this has to do with BY on OTC. That was weird. Weird. And with the inverse. I wanted to start picking up longs on GME, but I wanted to wait. Wait for this gap fill. Maybe a retest. Yesterday's candle was a hammer candle. This is an RSI divergence too. 36, 53. Yeah, that's an RSI divergence. This might be the bottom for GME. Might not fill the rest of that gap. Dang, man. Alright. How much time? September? Don't like the spread on these. Dude, I don't know. Very interesting. Okay, I picked up some just so I have some exposure. Dang, glad I closed my puts the other day. I would have totally wiped out my puts. BBBYQ is holding up here. Wow, the big wick. What's going on here? Dude, I don't have much explanation. That's my only thought. AMC's not moving with it, which is strange. I like that, but it's strange. Maybe this is nothing. So I got, what did I get? UI, it's holding up. Good, it looks like it's gonna keep going. I got September 22 calls. And I should spend more time and look through the chain. I want to get back into bed bath too. Oh, what is happening? Yeah, it's 11 o'clock. BY is not doing its normal algo sell-off. What time would that be at? Even before 11. Dude. Oh my gosh. Something might be going on. The FINRA thing, I don't know. Starting to get that tinfoil itch. I don't even think, can I not buy it on TD yet? Yeah. Yeah, I have to call in to buy it on there. Get GME, dude. What? And SPY? Blushing? Guys, what is happening? We haven't seen GME like this in a long time. Not just go up, just yeah, I don't know. It's strange. Inversing the market. I guess I haven't been watching GME a whole lot the last couple weeks, but that's pretty much it. Otherwise, I've been watching it like crazy. I'm gonna be patient, but something seems right here. Something's right all of a sudden. Maybe this has to do with banks that are having to close positions. I don't know. That DTC haircut, 100% collateral requirements. Throw out any of your guesses. Hope Linux got enough time, man. That guy always gets weeklies. I'm watching BBBYQ. I mean, it come down a little bit, but it's still. Let's see what happens at VWAP. I mean, it looks like natural price discovery. I wonder how many other stocks in OTC have as much volume and you can actually trade it like this. Even Sears and stuff. And maybe this is just because this is the first day. But if it's not, and this is continues, that would be awesome. GME 3.25. Something's happening. Yeah, there. Weeble even shows that hammer candle. It's legit enough for Weeble. But they don't like having to look at all these different charts now. Oh. Somewhat increased volume there on GME too. I know, whole Gene. Look at the screen, dude. Something's going on. I think it has to do with BY on OTC. I don't know, maybe shorts having to close because it's now on OTC and it's put all the pressure on GME, or I'm not sure. AMC is actually not even moving. Oh, AMC is just going with the SPY. I mean, it's not crazy yet, but this was something. This was something. Wasn't nothing. Carl Icahn is happening, maybe, yeah. I mean, his stock is getting wrecked, like, weird. Dude, why doesn't Linux tell us his data? What the heck, man? This is... Yeah. I guess he's concerned if he shares it, then those that are short will know that he knows, and they'll try something different. I assume that's the only reason why he's so secretive. Why anybody would be. BDC above VWAP. BY is still green on the day, still up 1%. Kind of consolidating now. Looks like it's probably making its way back to VWAP. Strong price action this morning though. Very crazy. What happened to my chat? You guys all turned into Germans. Yeah, I mean, we saw an inverse here though, so if it's time for GME to go, it doesn't care. Typically, I would agree with you. Moving with the SPY, and maybe I'll get algos will get turned back on. It does, but this is weird. It's still kind of melting up here. What the heck? I kind of want to get more. Got this RSI divergence. Oh. When's the last time you guys have seen GME wake up like this? Have I just not been looking? I don't feel like this has happened for... Honestly, like, it's mellow, but not until this spike back here, I don't think. 35. Even like the huge move on earnings was all after hours. Buys coming down more here. BY volume is, what is this? Hard because there's no commas. Is it 30 million, I think? Yeah, 30 million. 30 million volume on BBBY today so far. Buy's moving down. GME is untethered. BBBY is also coming down some. Still above VWAP. Still looking like solid price action. Hear the super stock crawling back in. Release me. Release me. LA Wave Guide chart. What's his price target and when? The Germans are coming. Well, how much time did Linux get on his calls? Since he didn't say. So I'm wondering if his calls expired last week. And based on how many he had, they were probably way out the money. I hope they worked out, but a 3% move. I don't think that's what he's expecting. A flag upstairs. Oh, yeah. Little upstairs flag. Yeah, we had this flag that kind of broke out. Now it's just kind of consolidating. Oh, natural price discovery. It's so foreign. Alright, spy at this support down here. Not expecting a huge move before PAL, but we'll see what level it wants to find. 409.90. Might take a long down here. So if there's no extended hours, well, let me see. Let me check. You can trade till 5. So there looks like there are extended hours on OTC. I hate that I have to call in on TD. That's gonna suck. Should have held my shares, man. Um, I'm not sure actually. I think it's different by broker. I'll have to ask them. Yeah, I agree, Cameron. It definitely seems like a good buy. For divvy stock, that's a nice long-term pickup probably. Up relocate. BDC up here just hanging out, consolidating nicely. I think it could break out though. Top came below VWAP. GNS above VWAP. SPY is still weak. 4990, we'll see. Your tinfoil origami hats. Red Hack data comes out at 2, so we've got 3 hours. I looked at the words. I didn't read the words, I just looked at them. BY's moving down a little bit to VWAP here. Just talked to E-Trade. No extended hours on OTC for E-Trade. Maybe some brokerages give you some, because I looked it up and it does say there are some extended hours, but maybe that's not for, maybe that's just for a certain brokerage. So I want to get on to E-Trade. Need to buy it before close. It's a trap. Well, it might be bounce on that level. 410, 41. If that flushes through. BBY down 2% now on the day. Still a nice bullish formation though. Like to see VWAP hold. If it doesn't, it flushes down. Back to the Goonies for it. DNS up 17, bounce off VWAP. Camping World is up 14. They have earnings this morning. This company makes tons of money. I don't want to take the long here, but oh wait, it's a pretty small range. Tin for sure. I did like seeing the list of invested or interested parties though. It was released yesterday. If you guys didn't see it, jump on our Discord. Ryan Cohn was on there. Yeah. What was there, like 13 other? I don't remember how many. You guys corrected me because there's like 2,800 total, but it's listing everybody, just the entities. Shorts have to cover? No. No, they can still hold their short. They never have to cover unless they run out of margin. Feeling good about it, Tony? Good, man. Yeah, so far this BBY is playing out as an exception and not a rule to the OTC. So, for me, I didn't want to roll the dice that it was going to be an exception, not a rule. But it looks like it might be. As far as the volume, the price action, yeah. For 2007, nice. He's coming down here. It looks even inversion the other way too. VWAP back to VWAP. See what it does from here. 20 on BBY. That would be short squeeze. Lunatic adrenaline chasers. Don't have any rolls at all. I mean, it's what roll do you have as a long buyer? When do you have to close a long? There's only one reason you'd have to is if you, I mean, of course, covered calls and it got assigned, but if you bought it at margin and you're out of margin, your count went against you and they had to liquidate. Thing with shorts is the short is always on margin, so with your long you could have it on cash where you would never have to close or get it liquidated, but if it's on margin, that's the only time you have to close on a long. You can't buy. Oh, you're saying OTC. Well, that has to do with your brokerage and potentially where you live. If you're in the States, you can find a brokerage that you can buy it on. I know E-Trade does, I know TD Ameritrade does. I might even be able to on Webull. I haven't tried. Oops. I could see Webull not allowing it because it's Chinese brokerage, and shares on here. Account's not. Oh, so I could apply. All right, might as well. There you go. Even Weeble, you can do it. It's applied. I have to wait now. Yeah, I have to wait. But yeah, even on Weeble. OTC crew. I mean, it was a BY is a great short trade. Look at the chart. That's the best short trade you could make. It's beautiful. So those percentages or whatever don't really matter. That's like annualized. So yeah.
106, a 32% rise year over year. And looking ahead, Generac is standing by its full-year sales guidance, expecting that soft product shipments design or area to go into the second quarter. But it does expect year-over-year sales growth to return in the second half to offset that first half decline. Sales of its commercial and industrial products is expected to grow at the mid to high single-digit rate. The stock is up pretty strongly. Year to date, it's up around 17%, and now it's actually nearly 50% down year from last year this time. So it's got a little bit of a contradiction there happening. We'll find out what analysts might have to say later.
All right, thank you for that. Renita Young, Senior Markets Correspondent on the TD Ameritrade Network. A look at Generac there. Thank you. Time to spotlight a top story, and that is regional banks. I have lots of questions, and I'm sure he's happy to answer all of them. Eric M. Corrigan's with us, Senior Managing Director, Commerce Street Capital. Thank you for being with us. Before I get into the nitty-gritty, what is going on, and what would you call it? How do you quantify what's going on? Do we say weakness? Do we say crisis? Do we say contagion? What kind of words are you using when it comes to what's going on in the regional banks?
I use the word overreaction. I think that we're conflating what's happened with some of the banks that failed, and we're assuming that that's going to happen with other banks. And I just don't think that's true. I happen to agree with Jamie Dimon that the worst is over, and we just have to wait it out, and these banks will certainly recover. They have strong balance sheets, strong capital levels, strong management teams, and there's an awful lot of opportunity out there right now.
I mean, there's no doubt there's been so much volatility, heavy trading, and concerns, and here on the floor of the stock exchange, halted over and over and over again. We're looking at Paul and Wall and PacWest and seeing the evidence in front of our eyes, this halt and trading.
All right, BY.
At the same time,
nice price discovery.
And these are actually in a good spot, not in a terrible one.
Back down to BWAP, down 4%, but
I mean, there are
it's looking beautiful even though this is happening.
Hedge funds and
I like it.
Sort of, different kinds of traders,
SPY's bouncing up here.
Are just sort of
see, tight little range. I was going to go long here. I actually would have timed both of them. It's just a small range. It's just going to be kind of choppy till PAL probably. GME back down to VWAP. I don't know what this was. That was interesting price action on
shorts, and they're really not looking at the underlying fundamentals of the companies, understanding what's going on with their balance sheets, understanding how that interact.
No way, bye. Threw me 3 times. And I tried to buy an FCL curl. Is it ripping now? Oh yeah, I tried. It never filled. I was greedy on my my price.
What they're doing is they're kind of
it could still be good. I mean, it's still in a nice range. It bounced off of long range support. So
if you could look back at Silicon Valley, you look back at First Republic, you look back at Signature. All of those were very unique businesses that really don't resemble any of the companies that you have there on your screen.
Yeah, I was looking at a debit spread on it.
Traded companies that had very unique business models that relied a lot on uninsured deposits. The big regional banks that you have there, those are quality companies that have taken this time to reinforce their balance sheets, to make sure they have enough liquidity, to look at their credit books and understand what risks are in there, and oftentimes have extremely attractive dividend yields. And so if you're a patient investor, even if you just buy them and clip the dividends, you're going to be getting 5 and 6% yields. And when this market recovers, you should be getting some capital gains as well.
Okay.
Jenny Hype.
Look,
Sorry to see you guys, Jenny Hype.
These were specific types of banks.
Probably moving back up to VWAP here.
Big uninsured deposits. I understand what you're saying there. And to your point of it's the stock that these traders are looking at, and they're using momentum, they're using machines, and they're driving this, and they're not looking at the balance sheets. But can they?
You do show us her financials.
I don't want to be a part of it. But can they drive it down so much that it's really detrimental to the company, to the shareholders, to the bondholders? I mean, we already have seen some failures, and my worry is that they're not looking at the balance sheets, and then they cause a run on the bank because of the stock tanking, and they're just doing something totally different and more advanced.
Yeah, I think not unless these companies are put in the position where they have to raise capital. I mean, there's a difference between wanting to raise capital and having to raise capital. And none of these companies need to raise capital. And so if they can cover in the ratio that they've all been disclosing, which is how much liquidity do they have to cover their uninsured deposits? And as long as that is above 100%, they're in a position to weather the storm. So whether the stock's at $2 or at $20, from an operational perspective, it really doesn't matter. It is a confidence issue. It may be bothering the employees. It's certainly bothering the CEOs whose compensation is largely tied up in stock. But ultimately, as long as they can weather the storm,
yeah, speaking the English,
does raise rates,
spraken the English,
and somehow signals that they're probably done, or
Nighthawk, nice.
Confident.
What? Nighthawk's in here? What the heck?
I think the banks will start to trade back up in the next.
Jump on jump on voice, Nighthawk. You're never in YouTube chat. What are you doing?
When we get a little bit of a relief rally.
I don't know if you name names either in a positive way or negative way. I mean, maybe there are some names you like in the group. Jamie Dimon did say that he was asked that the government asked
JP Deutsch. Everyone's speaking Deutsch now.
And, you know, obviously saying it has to be seized, then sold, right? He wanted it in a receivership after the experiences of what happened during the financial crisis and going backwards. So at this point, do you see mergers, acquisitions happening? Are there names that you like in the group?
There's some names I love in the group, and I'm going to start with two that actually were involved in the discussion around First Republic. So Citizens Financial and PNC.
Yeah.
The government is not going to let those companies participate in that process if they don't think that they're strong and well-run institutions. And
Nighthawk, you want to come jump on Discord?
5 to 6% dividend yields in the case of
BDC's halted again.
They're trading below tangible book
It's such
value.
a mess.
PNC is one of the best-run banking companies in the United States. You looked a little further down, Comerica, and names, small cap names like Bank of Marin and Alaris. These are companies that have, again, 5 to 6 to 7% dividend yields, are trading below tangible book, have really diversified business mixes. Alaris is a really interesting company run very dynamic woman CEO.
IDEX?
That has 50%.
Are there halts in OTC? That's a great question. I don't think there are. No, there aren't actually. And we've seen a 59% move just yesterday.
And they're getting thrown out. The baby's getting thrown out with the bathwater. And if you're a patient and very thoughtful investor.
All right, Jimmy's coming down. This was a weird little pump of liquidity, though. It looks like
Jimmy
something. I don't know what it was.
Premium to where they're trading.
Volume's been so low on Jimmy that
we have so many discussions going on. I can't keep track of it.
Yeah, any bit of volume that comes in, it just rallies.
Banks that have a lot of liquidity merging with banks that need liquidity.
Yeah, OTC is like basically extended hours.
The reason that they merge.
A good way to look at it.
By doing that, they're going to solve a lot of the issues that are vexing investors. So we will see a lot of activity.
BY back down to BWAP at 7 cents.
Thank you so much, Eric. I hope you'll be able to come on again soon. It seems that you're less worried if the Fed does 25 basis points today. That doesn't seem like a make or break issue for you today. More about making the point that it's an overreaction to what we've been seeing with these regionals and how they've been trading. Eric Corrigan, thank you so much. Commerce Street Capital. Thanks. Coming up next, George Sillis is standing by. He has his eye on Super Microcomputer rallying after its latest earnings. He'll break.
Kiev and some central eastern Ukrainian regions announced air alerts. Uh-oh. Kiev deeply disappointed at Berlin's handling of Zelensky's planned visit to Germany. The 3-month Treasury bill yield has moved up to 5.27%, its highest level since January 2001. A year ago was 0.85. And 2 years ago it was 0.01. U.S. Senate to begin work on new legislation to strengthen export control laws. Alright, BBY now below VWAP. Guys here. There's the chart. Big wide ranges for a stay on OTC. Actually can't really see the wick down. Yeah, okay, never mind. Yeah, it was like a it was an 80% move from bottom to top today on BBY. The United States is trying to validate Russia's charge that Ukraine tried to kill Putin. Kremlin drone attack. Oh, ISM came out. US ISM April services PMI 51.9 versus 51.2. GME holding above VWAP. SPY wants to climb back up to it also. Big hedge funds face 72-hour deadline to report major losses. I have no idea what that context to or what they're talking about. Walter Bloomberg, and then FX Hedge actually tweeted also. I don't know. Americans are spending more money at restaurants than on groceries. For a bit there, they were cheaper. Cheaper to go out. So there was a drone strike on Kremlin, it looks like. Or we're not, I guess it's not confirmed yet. Jenny.
Both in EPS and top line sales. If you actually compare Supermicro to some of the legacy competitors, we're all familiar with Hewlett Packard Enterprises, Dell, IBM, even Network Appliance. This particular company has been really outpacing those other competitors, and I think it has to do with the fact that it has, like I said, that application optimized total integrated solution, which includes machine learning and artificial intelligence, which we know has been a huge boom for multiple industry groups, especially for those that are in demand for optimized cloud computing in the technology stack.
All right. So with all of that and all those players in this game, how do you go about trading this? Give us an example trade here today, George.
Yeah. So if you look at the chart, one of the things about the stock is it's certainly in an uptrend. And then a lot of times, despite the fact that the price is gapped higher, some people think that it might be expensive. But what happens in these cases for the most part, Nicole, is we'll probably end up seeing what's called a gap and continuation or a gap and go, just because the valuation also looks very compelling. So in this case, what we'll do is we'll pull it on a bullish trade even after the fact that the stock has already made this move, with the expectation that it will continue to the upside. So we'll go out to June with 44 days to expiration, and we'll put on a bull call spread. So we'll buy the 125 call option, and then simultaneously sell the 135 call option. Now, earlier today, you could have put on that trade for about $4.50 a share in debit. That's what it would cost you. So ideally speaking, 129.50 is your break even, and max profit of $5.50 is achieved, assuming the stock hits 135 or higher by expiration in 44 days. So basically, we're placing a continuation trade here, assuming the stock will continue higher. And it's about a 1-to-1 return on risk. In other words, you're spending about $4.50 to earn $5.50.
I mean, and we've seen this run up really since the February earnings. 3 months, it's up 66%. And as you said, gap and go. George, you know, I thought I knew all the phrases. You just taught me.
Gap and go? You didn't know about that, Nicole?
But it's gap and go. I love it. And thank you
Gap
for that.
And go.
An extra, yeah, that's an
all right,
extra
Nicole, you bet.
for me to put in my brain. Good to see you.
BBY bounced up above VWAP. That's weird. The red candle.
Coming up next, time for our 360 round. We're going to look at those earnings from Ford.
I might consider picking some up. That's crazy.
Garrett Nelson standing by, covers.
Proving to be the exception, not the rule. Have a drone stock. Are those ripping on these drone strikes? Is that having these move? Cole's learning today. IDX pulled back, huh? If it was Jenny, she would already know. This doesn't look as delayed as it was before. Oh yeah, I think this is... What? Is this caught up? Weird. Let's say 51. Yeah, I think Weeble's caught up. Yeah, Weeble's caught up. That's so weird. The VWAP is weird on Weeble, which I've heard that the VWAP is actually off on Weeble for some reason. It's $7 for latte. It was delayed. Yeah, I had a 15-minute delay, but it looks all caught up now. Yeah, those literally both happened at the same time. Nice. Oh, maybe that's because I just applied for OTC. That's probably what it is. Oh, word. The order price for OTC must be greater than 1 cent. What? Greater than 10 cents? I can't buy less than 10 cents? Only limit orders? The heck? Nice. Yeah, this so Weeble's caught up. You just have to have a be eligible for OTC trading, and then it'll give you live data. That is neat. Okay, cool. I can get rid of this trash over here. There we go. Now we're barbecuing. Hey, Julian. I know, 666. I saw that yesterday's close. Yeah, so if you're if you have Webull or any brokerage, maybe check to see if you have OTC trading enabled. Potentially, just get it enabled if you can. And then if you can trade OTC, you can check to see if it's delayed anymore, because that just fixed it for me on Webull. I didn't have to pay anything, it just, now it's updated. pretty big bounce there on the SPY. I look at BBY, dude. Bounced off a VWAP. Crazy. Wow, that's a big rip. I guess I should have gone long. Never know how high it's gonna go or low. Buried the trend. Oh, BY chilled out. Yeah. Top is bull flagging, pretty nice. Very nice. Kind of even a little cup and handle too on the hourly. 30-minute. Happened to Meggle. Still shut down? Not yet. It doesn't look as good though. GNS kept going 30%. Whew. Rallying. We get at that $1.30 level again. HKD and major support. I don't know if you can say those two things together. Nighthawk, that's ridiculous.
The Fed announcement in a couple hours here. What's your takeaway from the market action today?
The fact that I may cough up a lung on the air, Tom, does not keep us from covering the Fed today. Make no mistake.
Still rallying.
There's no day off in this market, Tom. You know, we're waiting for the Fed to come out and raise by 25 basis points, but what
Tree, I think,
really waiting
didn't
for
IDEX have, are they going to get like delisted?
Tell us what his plans are for the rest. Is he going to acknowledge that there's
FRC is trading? Oh, that's right.
Come out with a 25
yeah, I saw they're gonna have FRC
dovish,
trading again.
Right? And pause.
So that guy with those puts on
That's
Wall
what
Street
the market
Bets was
is
able to close.
on right here, Tom. But I'll tell you what. Somebody
He had like
explain to me the
300,000 in
crude oil
him.
market, because this is incredible what's going on in this crude oil market. Unless there's evidence that Russia is not really cutting and they're delivering oil, and something's going on, because crude oil at $68, that is incredible, with a $1 million barrel a day cut by OPEC Plus. So, yeah, earnings coming out, data coming out, a lot going on here, Tom, and it's only going to pick up pace.
Yeah, that's a quandary right now.
This is a big news day. Yeah,
oil
J
prices
Powell,
are looking
interest
like
rates,
that we're going to see a real economic slowdown in the latter stages of this year.
You should get an exit on puts. I'd say puts and calls probably.
Today. This,
usually you get a huge move in both directions, or big in both directions before
weeks ago.
Kind of decides.
Yeah, exactly.
That's on in 2 hours. We'll get.
Just go back on a 10-day chart.
2 hours. We're going to get the
was $81
FOMC.
Yeah.
10 days ago on the chart. Now it's 60. Now it's 68. It's incredible. I mean, what is
we'll
that
stream J
telling
for
the
sure.
markets? I was
know
thinking
serious.
maybe it was a roll that was
Buys moving up here.
The price, but it's pretty across the board, the moves here. So it's pretty balanced. I mean, if you go all the way out to next October, 140 days, it's $67.
Mullen's
it's under
still
$68 there, Tom. Yeah. So it's not like it's
That is
You know,
neat.
they're rolling out of that front contract.
This is
and
on
it's
a
skewing the
D-list
prices.
schedule
It's
too.
not.
Yeah.
So,
Just because it's under $1, I
it's
think.
interesting, but we'll keep watching crude oil. I bet you when it was $80, if you would have bet $100 or 60, people would have bet $100, Tom.
Yeah.
It's pretty.
I was short oil up here. Wow,
Yeah,
dude, a
I'll
huge
take it
flush.
from there, Kev.
Woo.
But
Yeah.
another, you know, a stock that's down.
I was short here and then did that little breakout.
Substantially here today
then
is
my
AMD
contract
post
expired.
earnings. Let's bring in Caroline Wood.
If I got
senior
back in, that
markets
would have been a much
correspondent
better
here to
trade
break
than
down this
blowing it all
earnings
on the
story,
BS.
Caroline. You know, I looked over the numbers, Caroline. Slight beat
Dang,
on
dude.
EPS.
Big candles,
slight
big
beat on
gaps.
revenue. But the CEO, Lisa Su, came out and said mixed
That gas has
demand
been chopping around.
environment. That's not good
Actually
for a
been
stock,
dropping,
and
huh?
it's getting hammered today.
Ooh.
And I think it shouldn't actually be all that much of a surprise that it is a mixed demand environment, right, Tom? But I think also what's really weighing on shares, they're off more than 8.5% after earnings, is the fact that its current quarter revenue guidance is disappointing. And it seems like
Just
know
above
that, you know,
VWAP.
the headline numbers are all backward looking. The current numbers, the guidance, that's
You
what
said they want to raise rates further after today in the Senate meeting? When was that?
They're not too happy about it. But let's run through some
He
of
says
these
this.
numbers.
Well,
As
he's.
you said, it was a beat on both the top
He
and
said that
bottom line.
specifically, or he
EPS
didn't?
60 cents a
He didn't
share,
give a
came in
clue as to
4
what's
cents
going
higher
on
than
after this one.
consensus. Although, as you can
'Cause
see, it was a sharp
typically he doesn't
decline
give
from
much
the year
insight.
ago period. Revenue fell
That's
9%
what he has to.
to $5.35 billion. That still managed to beat expectations in what Lisa Su called a mixed demand environment. As you said, Tom, data center unit revenue was roughly flat from a year ago. Revenue in its PC business
Emotionless
fell
trade.
65, or client PC business
BBY
fell
bouncing there on
65%.
VWAP.
Gaming business dropped 6%. But here's the kicker, the outlook. AMD expects revenue for the current quarter between $5 and $5.6 billion. So if you look at the midpoint there, $5.3 billion, that's a decline of 19% year over year and below what Wall Street was expecting. They had an estimate of around $5.5 billion. So disappointment there. CEO Lisa Su did say the company remains well positioned to grow the cloud and enterprise business in the second half of the year. She expects the client PC segment to grow in the June quarter from the prior quarter and into the second half of the year. So maybe we've finally seen the bottoming out in the PC demand process. AMD didn't provide full year revenue outlook, but they did say they expect double-digit annual growth for data centers this year. Now, I will say some analysts are saying that's a little too optimistic for their liking. Prompted a downgrade from Bank of America, downgraded AMD to neutral with a $95 price target.
We don't get anything on the
One of
L2 and
headwinds he
OTC.
noted was risky data center growth outlook, as well as aggressive pricing and promotional pressure from Intel, a lack of exposure to China, and just a balanced risk-reward ratio. So a downgrade there, turning more neutral. Citi, also in the neutral camp, hiked its price target to $85.
Do they fulfill orders in 10,000
But
increments?
if you take a look, basically,
like
you know, not too far off from where
Why is
AMD
this all
is
it's showing
currently
up?
trading, saying data center growth estimates for the second half seem too aggressive given the macro environment. Here's a quote: "We believe there could be more downside to AMD's data center business as AMD's data center revenue has only corrected 22% from its Q3 peak 2022, while Intel's data center business has corrected 42%. Got a slew of other price target hikes and cuts. BNP lowered to 110, stuck with outperform. Goldman Sachs raised to 97, maintained a buy in the hold camp. Truist raised to 84. So a flurry of analyst activity following these results. I will say the median price target is $98 now, still implies about 18% upside from current levels. And keep in mind, AMD up almost 30% in 2023, but definitely taking
can I just get relisted?
about 8.5% after these results.
It's got to be over $1. And it can't be in Chapter 11. And then there's market cap, restrictions, how much volume is traded, all that stuff. We should be fine. Well, I think it's 50 million. Yeah, we might even be over the market cap requirements.
Because you're right.
But who knows? We don't even know what the float is. Is this the float? Maybe.
24 in the first
You can look up NASDAQ listing requirements. But I've actually traded I remember I was seeing back. I've traded a stock that uplisted from the OTC, and I actually bought it as an IPO. So kind of weird. I didn't know what I was doing. I should have just bought an OTC, but I didn't.
Say the fact that 66% of
but yeah, it happens.
have a buy rating on on this name
is
obviously a bullish, sign for AMD in terms of there's no sell ratings on the street, and it is up pretty significantly over 2023 so far. I think that Elisa Su talked about inventories improving, demand environment improving. Obviously bullish on the data center business, even if analysts think that maybe they're a little bit too bullish as they look further out. So
yeah, I like Baba.
Also, of course, we can't forget about AI. Obviously,
maybe at a support here.
The one to beat, but
look for some signs of a bounce.
Lisa Su says that they're utilizing that a lot. It's an inflection
I don't know when
point. They have a chip that's going to be
crash though.
NVIDIA.
Baba will hold up.
They're obviously NVIDIA's the one to beat.
We see kind of an inverse with Chinese stocks to U.S. stocks sometimes, but
that could continue
during a big
to
downturn, I don't know if that's true.
Higher, and that's why we
do have this massive head and shoulders kind of staring at you, though.
Higher than where it's currently trading.
Yeah, I think people soon forget that the stock's up nearly 27% so far this year. So it's had a nice rebound from those lows that we saw in 2022. All right, thanks to Caroline Wood, senior markets correspondent here on the network, breaking down the story on AMD post-earnings. But now let's bring in Nick Theodorakis, Financial Risk Management Director at TD Ameritrade. Nick, all the focus is on the Fed today. Now, I think what the market's trying to tell us or show us over the last several weeks is that
Cameron, so Jay Powell is saying higher terminal
economy, right? Yeah. That the bank crisis is not going away anytime
soon.
So
maybe he raises 50 points today, or maybe he's talking about.
Is the market getting this wrong?
No, they could pause
themselves, kind
and then keep raising
to what they want.
Well, that's a possibility
to
too.
Fed Chair Powell might give us, because if you look at this, the stickiness in inflation. Services data reflected it once again today.
Story at 11, ADP unemployment adds 290,000 jobs. Where did that number come from?
Right.
This is, every headline is layoffs, cost cutting, the banking crisis, yielding tighter credit, but then a ton of jobs are added. I don't know what it's like by you. We always kind of get into the local Chicago stuff. Every restaurant's packed, stores are packed, parking lots are packed. Something doesn't add up. I was down at our other office in the Loop yesterday here, and you hear, there's nobody in the offices, and we ran out for a break and went to Starbucks, and there was like 100 people in line at Starbucks, and they're down 10% on earnings today. These things don't add up to me, right? And, small anecdotal sort of things aside, I just don't know what this yields from a Fed perspective, because the economy, by a lot of top-line measures, is slowing, right? Inflation is coming down a bit. We saw weakening inflation in Europe as well, right? So I think he could talk a little bit about the international inflation story, and it's getting a little bit better than expected. Mm-hmm. But you go out there and you be in the world, and it sure feels like things are just booming. And I don't know how that comes together, and I don't know how that translates into what he's going to say. I think we have to be really careful here that the Fed has a lot of optionality, right? They're going to be able to tell us if things are getting better still, and maybe we do pause after this. We slow. We're not going 75 anymore. But I don't know that they're done and truly done. They could pause. They could take a break next meeting and then go back at it if inflation ramps back up. I think they need to keep that possibility on the table, because you just look at how strong things are in the real world. It's possible that if everybody thinks they're done, inflation ramps right back up, and that worries me a bit.
Yeah, Kevin, to that point, some of the ISM data, prices paid going up. I think that's one of the key metrics here. Reversing from some weakness that we saw the previous couple months here. Payrolls, 296,000 jobs added. Fed doesn't want to see that. We just saw
like you mentioned today would be
the Bank of Australia after they paused.
Right.
So, take a look at this, Kevin, and map it out for
Why
us.
People buying it?
Everybody wants
for the potential
to pause and be dovish
of
on
return.
This. What if he's hikes at 25 basis
on
points?
BY, they think it's
he's
undervalued.
Hawkish and says they got more work to do. What's that mean?
I'll give Nick an answer to where all these jobs
coming
are
back down to
from.
BWAP here.
The expectations
you might want to look into it for yourself. But I think it did have a
jobs
deal this
total,
morning.
Right?
Could be thinking of another
Just
stock though. So
in leisure and hospitality, they had 154,000 jobs.
Exactly.
So those restaurants that are full, that Starbucks that's full, all the service that's full.
Yep. Hertz was
where
a
the jobs
best case
are
scenario.
coming. Those don't get high-profile headlines when they do layoffs or when they hire. Those are for the bigger companies. But guys, this is the sticky part of this economy that won't seemed to calm down is leisure and hospitality. So now you've got to start thinking about the number on Friday coming out. So yeah, there's a lot going on here, Tom. But you're right. The ISM and PMI numbers for services were
So the volume on Webull
strong
looks incorrect.
and better than expected. In terms of the ISM, it was better than expected. The PMI came in right in line. That ADP number was
because E-Trade's telling me
way too
37
strong
million today.
for what they're looking at now. You
Webull's
can
telling
make
me
a case
15
that
million.
the correlation between that and the payroll numbers not always great, but
Not sure why.
that trend, that leisure and hospitality, that has been consistently the trend. So yeah, we're getting data, guys, that is entirely too strong. The question is, does Jerome Powell talk
But the
about
chart
that
looks like
today?
it's updated.
Yeah, and to your point here, Kevin, about leisure and hospitality, saw some of the airlines numbers. They were all pretty decent. The stocks haven't been doing that great. But then you take a look at Marriott, got upgraded today after their earnings, Nick. So, you know, until Fed Chair Powell or the FOMC breaks the back of the services industry and gets these job numbers to where they want them, why should they stop hiking rates at this point? Because if they pause, does that give
So we're good,
people
no negative
more
news?
Of that illusion that,
there's
hey,
no
I can
negative
take
news
a
on
little
BY.
bit more risk, whether it's in the housing market, whether it's spending, stuff like that.
If you're going to leave it alone,
Months ago, when
when
Powell
you're
started
nervous,
talking about
you
the
can't not
job
think
market
about it. I
has
would
to
probably
give
put
some
some
back. And we said, well,
stop orders on it, at
people
least
aren't
some
gonna
stop
go. I think
losses
Mr.
or
Hink
take
said it.
profits
He's
or
not here
something.
to take accountability for it, but we'll give you a break today, Kev. But we talked about, you know, people aren't going to leave these jobs. Meta was one of the first ones to announce restructuring. And people aren't going to leave, you know, $200,000 a year programmer jobs and go work at Starbucks. But you know, and I'm not saying
Zoomed
those,
out a little
those
too far,
translate
Ace.
exactly.
Can't be
but
looking that
that's
far.
what's happening, right? The employment is still really robust because even though there's been some high-profile job loss, there's been some medium
I know, sorry, not
profile
take
job
profits.
loss.
Stop loss.
The services sector is still really strong. Now, how long can that continue for, I think, is the game of roulette that Powell's playing. Because if credit tightens and jobs are less and less, you know, their wage growth slows, like you're less likely to go buy a $5 coffee than you were, you know, 2 days ago, right? Like that type of mentality. And he's playing that. Like, is this going to slow down and you get to a point where it really stalls and we get back closer to 2%? Or can the consumer stay just, you know, as strong as they are with this amount? I don't think he knows. I don't think anybody knows. And like, again, I go back to Europe because that data was real fresh. The inflation there fell a bit unexpectedly in some of the in the core, and you know, if they can make the case that we really are seeing a drop globally in inflation, and they think it's going to last, it gives them a reason to be dovish. I think this can go both ways, and it's why you're seeing, you know, it's why you're seeing markets flatline and really kind of wait on bated breath for this.
Yeah, we will find out in 2 hours and 15 minutes when Powell starts speaking. But to your point here, as far as spending goes, yeah, people aren't buying goods and services. They're still out there spending money. And there's still 9.7 million job openings out there. How can you get that unemployment rate to tick up with that type of environment? So we'll have to wait and see on that. Let's take a quick break, guys. When we come back, we're talking about another chip company, and this is Qualcomm. They report
Nice little meme for you. I promised the wife yesterday that I wouldn't buy any more BBY. You said you were going to move to a new ticker and not buy any more BBY. Moving on. Now on, I'm only buying BBYQ. Meh. I don't know the voices of that meme, unfortunately, so best I got. Bye, moving down a bit. What's up, cool for theme? Just 120,000% gain. Bank reserves could fall between 900 billion to 2.5 trillion by year's end. Lincoln says, take anything coming from Kremlin with a large shaker of salt. The number of employees cut from tech companies since 2022. Read charts and colors and stuff. We're talking about credit card. Here's your average credit card debt per generation. So Gen Z is still lower, but the change is greater. So it's increased the most, I think, recently. Not sure what that's saying actually. That makes it seem low. Line's coming down more. Nvidia short interest down 18% year to date. Is the #1 losing equity short so far in 2023. Ah, we suck again. I wish I knew about these numbers yesterday. Just kidding. I entered that short like a week ago. Maybe 2 weeks ago. GME settling down a bit. I don't know, that price action this morning on GME was pretty interesting. Consulting firm Bain is reportedly offering new hires $20,000 to become yoga instructors or go on a safari for a year. We heard this news like 3 weeks ago. Nearly 40% said that children currently in elementary school will be best off with a job in healthcare if they want to avoid being displaced by artificial intelligence. Oh my gosh. Talking to kids in elementary school, scaring them like they're not gonna have a job. BBBYQ moving up here. Kind of being patient and seeing if we hold above the low from yesterday. I mean, we're in somewhat of an uptrend. So far we've kind of rejected it, but yeah, if we're in an uptrend, I actually might be buying back in, which is crazy. Yep, there it's starting to move up. 1.8%. This price discovery too is beautiful. Gen Z only has $3,000 credit limit. Top. Whoop. I mean, it's a bull flag, but you know, this thing is sketchy. So if you want exposure to it, you can buy in here and set a stop for like down here. If it broke through that support, that's probably what I would do. You know, don't have to worry about it. You read that they do not want to reverse split on Robinhood.
Shipments. The lower end Apple
handsets
haven't done very well. They've cut production there. You know, we've seen that.
Yeah, they pulled the reverse split. They're not going to reverse split.
Expected in Apple's upcoming phone. So I think that the sort of tie to their biggest customer in terms of profitability isn't great right now, right? The watch chips, the phone chips.
Oh yeah, Vine.
You're right. Automotive's doing well.
Is Vine going bankrupt?
That could also be a little bit interesting in their report because we know that the demand for cars and the delivery of the chips has been the issue. So are they able to deliver enough production?
So this is probably rallying from
really get what,
drug
what we're expecting from a revenue
approval
standpoint.
or something.
So I think there could be a little weakness there, even though the sector's been strong. So short term, there's a lot of headwinds for frankly a lot of companies in a lot of sectors. Longer term, all the things you just mentioned.
The volume's
5G,
definitely lower.
6G, like they're at the cutting edge of all this stuff.
I'm confused. Let me look on E-Trade because
phones,
Webull doesn't.
All the AI, talk. NVIDIA is really
Webull's like not reporting all the volume.
But don't think Qualcomm's not pushing the envelope on chips as well and trying
even
to
now
break
the last
they're at the cutting edge of this space. But if you think about an economy that's pulling back over the next 6 to 12 months a little bit, your investments as a firm from an infrastructure standpoint,
827,000
from an overall expenditure standpoint, pull back on some of these
I don't
cutting
know
edge
why
technologies.
Weeble's not
I think
getting
they
like all
could
the
be in
volume
for a
data.
little bit of a bumpier ride in the short term. With a lot of obviously long-term potential.
The bull flag setting up on the longer time
frame.
frame.
Remember that they don't have significant exposure
This
to
hourly
the cloud
bull flag.
computing industry. They can't mention AI on their conference
And a little inverted head
call
and shoulders.
like every other
And
chip
they may be
maker
pushing, but we don't. They're
Yeah,
not
I
going
think
to
we
talk
get back
about
in.
that from a revenue driving standpoint.
Right, they might have a new.
This is
product
the
coming
exception.
out. But Nick, the option market's pricing about a plus or minus $6.50 move.
My very
in the
limited
shares
experience
at
trading
this
OTC
point, going into the results. How do
the
you
amount that
wanna
we've
look
looked at
this
it here
from
on
an
stream,
example
basically.
trade?
Yeah, so a pretty narrow butterfly. Kev will give me a
This looks
hard
like
time
exception
for
from
being
that
the
amount of
index
research.
guy here, but a pretty narrow butterfly, really playing that expected move time. If you go back and look at a chart, they haven't been below 110 very much, but they did spend some time there a few months ago. Like you said, about a $7 move priced in. So really, this trade, this butterfly is looking for that move to the downside. So really, with the pinnacle of profitability around 108. So what the trade is buying the 105 puts, buying the 111 puts, and selling that middle strike, selling the 108 puts. So it's just an even butterfly, $3 on either side. It's about, I think the trade example we have here is 35 cents. It's come down a little bit. We can get it from
this is very stable. This is
now.
whatever algorithms
So
control it on
I
NASDAQ
always
are
say,
not controlling it
dollar-wise, a cheap,
now.
Cheap earnings play.
What I'm
So
saying.
you're only laying out what is your max loss on the trade, which is the 30 to 35 cents. If this were to pin that 108 strike,
TD Ameritrade
that's the
allows
peak of the profitability there. And that's just the
OTC,
difference between
Weeble,
the 30 cents,
Thinkorswim,
and the $3 wide
I know
spread.
those three do.
So you do have risk both to the upside, but we're already at that risk, right? You need to move
I don't want any
down.
filthy
so you have
NASDAQ
risk
hands on
right
it
where we
either.
are. As it starts to move lower, once you get below 111,
Yeah,
you get into that
like I said,
sort of
if there was
break-even
volume,
range. If you get to 108, right,
and you can actually
that's
see
where
some
the peak is.
price
these
action,
trades
then
are
we'll still
very
be doing
specific.
TA on
It does
it.
require a
And
move.
so far,
It
we've
is
seen
a
it.
cheap way to get into it.
Hoping this
but
isn't
there's
just like
very
a
low
first day
probability of
thing and this
hitting that
volume's going to
strike.
slowly
Just because
dwindle.
we're going to,
That's my only concern, I guess.
Just because we're using the expected move certainly doesn't mean that expected move is going to happen. It's a 2-day
Next
option. So
resistance?
even if it does happen, even if we end up there tomorrow, it doesn't mean
kind
we're
of
going
here,
to
just
stay there. So
this range we're
there's
trading in,
always
yeah,
management
8
in these
cents.
butterfly
I'd say
trades.
so.
If we blow through the downside or the upside, you can leave the whole thing on and let it
836,
expire, right? But if you get
832.
lucky in the sense that you get close to your strike, you do have to manage that because you don't want
Yeah,
that
I
short
think I'm
pin
going to get
risk
some
out
more,
there.
dude. This is crazy.
Let's break this example trade down. Buying one of the May
Okay.
5th weekly,
I didn't
so
even do
expire in just
cover
2 days.
calls. I mean,
the
can you do
111
that?
puts, buying one of those, selling 2 of the 108 strike puts, buying one of the 105 strike puts, $3 wide put butterfly to the downside
Pretty
here.
big spread.
Paying
That
roughly
is
about
definitely
30,
an issue with
35 cent
OTC.
debit. There's your risk, $35 per spread on that. But your break evens, Kev, on this one, between 105.35 and 110.65.
I picked up shares
so you got
again.
a nice wide range.
Picked them up on E-Trade
Really
because
good risk
I have to call it on TD.
profile on this, Kev, but it's cheap for a reason, right?
Well, you need to move, right? Remember,
I don't even know
we
what I got
talk
filled
about
at.
a
That's
lot
a
of spreads
big candle I
that
probably got.
you're right. If Nick gets the move that he's looking
Yeah.
for,
Down
into that
2%.
109,
That was me probably made that
108,
happen.
107 range, this
Yeah, there
is
it is.
a nice return
Oh, my
on
fill?
a trade like this. But you got to have the move. Remember
filled
that.
even higher
That's
than that.
the
This is
key
my
to these.
fill.
If you get
Welcome,
it right,
guys.
it's
Yeah, we're seeing price
beautiful.
discovery.
It's
That's
a
my order.
multiple winner on this case, but
Actually showing up.
It's a $2-3 spreads, a long put vertical, a short put vertical, with the middle strike
Mine says
being 108.
774 though,
That's where
wait.
you want it to go. Not exact. You don't need to get right there, but you need to get in that range or towards 108, and you'll have a nice winner here. But you got to get a move. This is a trade, and you can see by the small debit, you don't have a lot at risk here. Only 29.30 cents, but you got to have a move, guys.
Nick, real quick here, on something like
see it.
this, say tomorrow the earnings come out, the stock goes down
741.
towards 108. The price
guys are buying
of
at
this
741.
butterfly will start expanding relatively quickly as we get into expiration
Is that me?
over the
No,
next couple days.
774.
Is that where, if the market's open, liquidity is provided, if it maybe expands to $1.50, that's when maybe you take all or a portion of it off, right?
Yeah, that's exactly right. I mean, you don't want
Maybe
to
it's
get
this
into a
one.
situation where you're I love the comment always about if markets are open, liquidity is provided, right? You see so many times, people are waiting till 258 to push the send button and get the last penny out of that, and it's really not the goal. And
pick up some more for you get back to VWAP
for that last second. Now, if it blows out one way or the other, there's nothing you have to do, right? You could let the whole thing expire, but you really want to manage it and give yourself enough time to get an order in. Certainly, the trade desk stands ready to.
You couldn't buy this thing if you saw a print of 2 cents. Pretty sure you couldn't buy it at that point. The lowest you could have bought it.
We always show those numbers here, but what is the realm?
Was this morning at open?
And work some orders.
I think this is accurate, like 4 cents.
Take a couple off and work some prices.
Yeah, that was it's like a 60% move from there to here already.
You don't have to wait to the last second to trade out of that.
Yeah,
for sure.
Definitely. But a good look at a different type of equidistant
cat food.
Here. Take advantage of that maybe one standard deviation move to the downside, like we're seeing in AMD. AMD actually outperformed.
I like the bull flag, I like the price discovery, I like the volume. I mean,
all right, thanks to Nick Theodorakis for joining us, breaking down markets and Qualcomm.
I slapped on ask.
The break, Kevin and I are going to be joined by Landon Swan from Lightfolio
but I'm not
for
seeing
a discussion on Penn Gaming, which is trading a pretty tight range over the last couple months into their earnings tomorrow morning. Stick around, we're coming right back.
Unless if I'm just seeing the little bit of slippage that E-Trade skims off the top. Probably more that than anything. Probably got a lower fill. I think I can sell calls on that. Calls are all worthless, but yeah, I bet the open interest. I'm hoping the open interest will update. Bro. Oh, interesting. So I can't buy options on it or sell. I can't trade options on it on E-Trade at least. Huh. No, I guess a bad catalyst for BY at this point would be Chapter 7. You know, they've basically done everything. We're in the OTC, in Chapter 11 protection, reverse split. We even got the sell-off from the reverse split and never even got the reverse split. You thought about that before? Was this the gap? One of these was a gap from reverse split, and then we never, it's not like we retraced, oh, there's no reverse split, okay, come back up here. We never got that with the reverse split. So, yeah, anyways, there's not much else. I think just Chapter 7 would be, and then you probably do want to sell, because I don't think there's much hope at that point. I don't know what layer and level of tin you have at that point, but I'd like to see it. What kind of data do
you see into this report?
Yeah, I just tried on E-Trade and said it all out. So maybe tomorrow, once they update the open interest or something, I'm not sure.
Trading money for more money with customers. I mean, everything's a winner for the house. So there's going to be fierce competition for these customers. And I actually really like their strategy of using Barstool Sports. They completed their acquisition of the rest of the company in February. And when we look at just Barstool Sports just mentions overall, you can see why. I mean, it is a
FOMC,
nice
the minutes losing in an hour and a half.
Up and to the right, looks very strong. I mean,
healthy, yeah, for sure.
This is why they were acquired.
Nice
They're able to get more and more
inverted head and
people
shoulders,
talking about them,
got a
using
bull
them.
flag on the hourly.
And when you have an audience that is captive and very engaged in what you're creating, and you say, hey, this is where you should go bet, that's where the audience is going to go bet. So I
sold this morning.
I
wish
investors are giving this so many looks because if you think about just normal competition across sports books or casinos or gambling properties in general,
you got to be patient.
It's tough to differentiate yourself.
There's no extended hours on it either. So if you want exposure to news after hours, you have to get your shares
enhancing their
or options or whatever before 4.
Technology and just
at least that's what E-Trade told me. So there's maybe other brokerage that has some extended hours.
So
you have to check. But E-Trade, there's no extended hours trading on OTC.
The only company among the
what do you know? Another legitimate thing about OTC, you don't have all this after hours trading.
2022. So I think a lot of that does have to do with Barstool Sports, Barstool Media. So I think there's a good reason why they're looking at that. And when you go across and you look at the happiness, this is actually this kind of just plays right into my point.
Kind of curious
Customers are more happy with these brands because it's entertainment, right? Like when you bet on sports, it's fun because you're betting on your favorite team and you get 2 or 3 hours of entertainment. Maybe you win, maybe you lose, and you're paying a little juice in the process. But when you do it with a personality that's you feel like you have a camaraderie with these guys, then it's just even more fun. So I think that Barstool plays into this happiness, but also just, again, the technology that they're delivering is just better. So I think that's why we're seeing the happiness. Now, that's the positive side. When you look at sort of the negative side, one of the things that we're seeing is that the overall purchase intent mentions for PENN are actually down, while trends like visiting a casino are up 8% year over year. Online sports betting is up 15% year over year. So PENN here in the green, the 90-day moving average of purchase intent, this is people basically saying they're going to one of the casinos or they're betting on Barstool Sports or one of those.
Too busy with stuff, but Zip Trader announced his stock buy this morning.
And then it started
GP
has been flat ever since.
Graphite won.
Actually,
really?
When you look at the stock, it's pretty much where it was pre-COVID. It had a really big run, over triple, almost quadruple, but it's backed out.
This illiquid thing?
It was like in January of 2020. So a tough run for the last year or so on this stock. And I think a lot of it has to do with the fact that even though they've got the happier customers and they've got this fantastic content
this was his
creation,
pick?
they're actually falling behind when it
That's
comes
crazy.
to getting people to bet more, getting people to play more. So I think they are attracting the audience, but maybe they're not just attracting the as active of an audience. So that could be a problem for them in the near term. I think long term, this is the one of the 3 to win on.
Is it with
the
the
near
F
term,
extension?
we're a little bit more neutral, even though a lot of what I said earlier was pretty rosy. The data itself is not
crazy.
showing that they're following up with the trends that should be supporting them.
FINRA definitely cannot be trusted.
Landon, is there a cyclical aspect to these casinos and these betting shops? Because I understand after the Super Bowl, after March Madness and the Masters, that there's probably
Daniel, I'm like, what are you talking about, Daniel?
Betting. You can bet on hockey.
Yeah, I think a
break
up here, and we're looking at a gap fill up here at 10 cents.
Football and March Madness.
So I'll probably keep adding to it.
The other things I
on
read,
VWAP touch, I will add to it.
Backs us up a little bit.
Breakout too,
Tom
sure.
mentioned that there's pretty incredible competition with these casinos, but is Penn National, are they starting to pull away?
I don't know.
From the other competitors? Because their numbers look really strong, or is this the whole sector getting a little bigger? Because it looks like the growth in Penn is fairly impressive, Landon.
Yeah, so yes, I do think there's cyclicality for sure. I mean, summer sports are not as fun to bet on. They're not as bet on. Baseball definitely is on the lower end of that. I think it probably peaks around Super Bowl, March Madness, in that area. That's going to be the highest point. And you can kind of see it here. There is a little bit of a cyclical nature with the winter being the higher bars, and we're actually sitting at about plus 15% right now for sports betting. So you always have to compare year over year.
GME had it earlier. Now AMC's doing
plus
it.
15% over this time last year, which is obviously good. So
maybe they're going
that kind of leads me to the second part is, yes, I think the entire pie is growing. I think that they're
BBY's
growing.
putting pressure on AMC now.
And again, everything
Look at
that
this
we
volume
have
pick up
as
here. You
far
can see it on
as
Webull.
the consumer level of happiness and acquisition looks very strong, but activity isn't as strong. So I think the pie is growing, and they're growing as well, but I'm not sure that their slice of the pie is growing. It depends on kind of how you look at it. Like, when we look at happiness, and just total people talking about their acquisition channels, it's very, very strong data. But when we look at people talking about actually placing bets and spending money, as you will, in these properties or online, it's actually less. It's growing less than some of their competition. So it's a little bit of a mixed bag here, which I know, it's always more fun to be hammering this one side of the table, but we're kind of playing both.
Thanks, guys, for your thumbs up. We got 28 of them. Day one for BBBYQ for the barbecue.
So neutral going into these results. You mentioned happiness. I think
Is
that's
that
the big
level?
key here, Landon, when you
Pretty
look
low.
at the comparisons, because
Dude,
we
sick.
talked about the competitive
Both these guys are
landscape
sick.
for these companies. But it seems
Yeah,
like
we're at 8 cents.
there's just
810.
one group of people that are betting is
There
the
it
key
is.
to continue to market themselves, spend on advertising. For, there's one piece
percent
of
range
pie
is
of
crazy in
gamblers,
OTC.
right? And it doesn't seem
Whoa,
like there's
breaking
a lot
out
of
a little bit there,
opportunities outside of
8-2.
that space. Is that untrue according to your data?
See if it double tops
No,
here,
I
or
think
what
you're
what
right. I
happens
think
at this high from
it's kind
this
of
morning.
like, it's
839.
It's been an old problem, I think, in the industry, is to try to invent new gamblers, and it's really tough. I mean, it's the same
The
demographic.
Volkswagen
it's
squeeze.
basically men, from anywhere from 20 to 60, maybe probably a little older than that, but it's men, and I think that's the key. But I think one of their strategies is going after that younger demographic, and generally speaking, younger demographics have less money to play with. I think that's probably what we're seeing when it comes to the less bets being made. But as those new customers age and they become more successful and they start upping their bets, instead of betting $10 or betting 100 or 1,000 per game, then all of a sudden I think this brand is going to take off. So long term, I really like this company and their acquisition strategy, and they're going after the top of the funnel, the younger demographic, which will eventually get there. They just have to get them and then hold them as they become more profitable. And one thing that we haven't talked about, if the economy does start to slide a little bit more, this is one of the best industries or best sectors to be in. It's extremely defensive. Sin stocks do really well during recessions. So I really like all the companies in this sector. This is probably my favorite. We've got a negative 18 going into this earnings report. Not quite enough to place a bet on this one tomorrow morning. But if they do sell off based on some of this, lower purchase intent versus their peers, I might actually think about going in long on the long term if they do sell off, because long term, I love their strategy.
All right, good stuff. Hey, there's plenty of sports to bet on during the summer. You got AFL going on right now. You've got Premier League soccer. There's plenty to bet on, and they're all listed on there, and you can bet during the games also. All right, Landon, appreciate all the data. Have a good day.
Thanks. Take care.
All right, that's Landon Swan, co-founder of Likefolio, breaking down the data for us here on Penn Entertainment. Kev, everybody talks about the Barstool aspect, but they've got regional casinos also. And if you've seen some of the numbers out of Las Vegas,
So the
and New
commissions
Jersey
on
and some of the
E-Trade
other gaming
for OTC
areas,
are
they're doing really
$4
well right now.
each way,
Demand
so
is out there.
paying
How do you wanna look
$8
at
round
this
trip.
From an example trade perspective.
So
43
keep that in mind.
properties in 20 states. Online betting
Fewer trades
in 15,
will benefit you better.
iCasino in 5 jurisdictions.
It's not a huge amount if you're trading,
So this company is growing.
large
and
amounts,
the
but
numbers that I read
it
about
does add up.
keep improving, Tom. So much like Landon talked about at the end of his presentation, I want to go long term here. So what I did, I went out to the June expiration, 44 days till expiration. Remember, this stock only trades $30 and some change. You could just buy the stock first and foremost. But if you didn't want to do something even cheaper, what you could do is go out till June, Tom, buy the 30 call, and then go into this week and sell the 32.5 call for about 1% of the stock, Tom. You do that total package for about $2.10, Tom.
Yeah, let's break down this call diagonal here in Penn Entertainment. Buying a June 30 strike call, 44 days till expiration on that one, slightly in the money. Then against it, because the near-term implied volatility is a little bit elevated, you sell the May 5th weekly 32.5 strike call, $2.50 wide call diagonal. Paying, I think we've got 220 up there on the risk
I'm looking at
profile.
the
It's trading a little bit lower than that right now.
most active
But if you
OTC
pay that
stocks.
220
I feel like I'm
on
becoming
that
an
one,
OCD
you've got
trader.
that break even near about
OCD and
$30.20.
OCT.
So currently where
OTC.
the stock's taking are currently trading at this point. Your risk is what you pay on this
First
one.
Columbia.
$210,
Why is this one?
$220 per spread.
How's this most
You
active?
do have that opportunity to roll the short option on a week-to-week basis.
The float is
as you
9.3
get closer
billion.
to expiration here in the next 2 days. You have some assignment risk on that.
Market cap's only
short option,
2.9
but
million.
as you mentioned, on a capital basis, this is a lot cheaper than buying the shares.
Says this is one of the most
on this
active.
stock, and it does not pay a dividend either. So call diagonal sometimes works in that that sense where if the stock
maybe it's
grinds
just today.
up, the
Yeah, there's a lot of volume on this
pricing about
today.
a plus or minus $2 move. If
This
it
isn't
does
like in
grind up
general.
that $2, that hits the apex of profitability on this
GTCH.
one.
I'm just
So
trying to see
good
if there's
look
many
at
other
it. Call
stocks that are similar to
diagonal,
BBY.
As opposed to maybe buying the shares, but remember you've got limited duration on this one. If you're using the June option series that we are here,
See,
44
why?
days till expiration on that one.
Yeah, this has a lot
So
more
good look at
volume,
that
but
example
BBY's chart
trade
looks way
there in
cleaner.
pen. All right, coming up after the break, we're going to take a look at Coinbase, which is up over 40% so far this year, ahead of their earnings tomorrow after the close.
BDW.
Fast market is coming right back.
Yeah, $4 each trade on E-Trade, each way. So $8 round trip. What's on SPY before JPOW? You'll probably get a better entry, either puts or calls. After the report comes out, and then again when he's talking, sometime after 2:30. Yeah, so you're up, Lords. Well done. Broker is $10 every trade regardless. Wow. Both ways, that's pretty rough. BBY is super close. It's actually only one letter off. Let's see. HCMC. What? Current most active. Basically on volume. We can look at gainers. UI might be double topping here a little bit. I think the spread is definitely wider on OTC, and it's probably less liquid. Look at this thing. Oh, you can have reverse splits on OTC? What? I don't even know why you would do that. Well, 1 for 250. So this one went from 0.01 of a penny up to $2. Oh, that's just because the reverse split, though, right? That's not right. Or is it? I don't know. Confused. Are there maybe some criteria that be above a certain price for OTC? Wide reverse split. That one is. I don't know if this is gonna last on BBY. I don't know. You guys have any examples of OTC stocks that look like this? Another reverse split. Why do people reverse split? They're doing that. Oh, Cosm is on here. We've traded Cosm. Wait, this isn't OTC. Get out of here. Been duped. Here we go. Here's a better list. Tencent is an OTC stock. There we go. Yes. I think this is just OTC because it's Chinese, right? That's why they have it on here. This one even has less volume than BBY does. Hey, Joshua. Oh, yeah, you just called Tencent. There you go. BBYA. AI. I'm gonna have a list here. I'm just through. Yeah, I guess Chinese stocks. I don't know if I compare to a Chinese stock. One actually OTC. Grayscale Bitcoin Trust. Oh, this is on. So this is on OTC. Then there's pink sheets. Yeah, someone was saying those are different. I really don't know, but I guess those are different exchanges. So Luke and Coffee is actually on the pink sheets now. We'll clamp my nips. It's only 9 cents, mate. Look at this thing. Woo. Very good. Very good. LCLP, good, nice old pump and dump, classic. So these stocks look normal. This actually one is Chinese also. Life Clips. Interesting.
But here's the kicker. Sales are expected to be down significantly, down about 53% year over year to 653 million from 1.17 billion. Now, what I ended up doing is looking at the
Switzerland
the
Nestle. So this is pink sheets. They have a dividend on this thing?
They're expected to lose about $3.50.
Yeah, these are just ones that can't trade on the American exchange.
2024, they're not expected to achieve any profitability.
So they're not like American stocks that have been.
They're expected to lose about $2.56. So I think there's going to be a structural challenge for Coinbase as a stock. It sort of has this sort of melting ice cube look to it, even though Bitcoin itself has done really well this year. Coinbase has as well. A lot of the technology names, especially the growth-centric ones, have done well. But I think it's going to come down to
BBY is breaking out here.
Forward for Coinbase, and there's only so much cost cutting they can do. They cut about 20% of the workforce. They've got regulatory issues with the SEC.
Crazy, whole new world.
They've got to deal with, and of course,
I feel like trading crypto for the first time.
Moving into cold storage. Their crypto assets, I think that's going to pose some challenges 70%. From a transaction volume standpoint. Lastly, I'll say this, just to compare some of the larger numbers going over the past few years, the company generated over $7.3 billion in 2021. That was more than cut in half to $3.1 billion last year. But back in 2021, they earned about $3 billion, where last year they lost $2.6 billion. So when you're losing $2.6 billion on $3 billion in revenue, that implies a negative yield, and I think that's why the stock is certainly going to be under pressure going forward.
Yeah, George.
Highest morning was 87.
72% in 2023, with Coinbase up about 39%. So yeah,
lagging
a little bit. Great rundown here, George, of Coinbase going into these results. Okay. Appreciate it. That's George Silla, Senior Markets Correspondent.
What do you mean?
Kevin,
it's more limited.
They just launched an international exchange in Bermuda, kind of getting away. Coinbase keeps on talking about they want regulation, right, to make this a viable product. But at the same time, the SEC still keeps coming down hard on them without really any narrowed regulation. Your points here real quick on Coinbase going into earnings.
Yeah, I'll give you the quick look. Their actually free cash flow is hanging in there and not going down. That's a really good thing for this company. They got to stay out of court. They got to stay away from regulators. They got to stay away from all things government and just try to do business, Tom. I think they'll be okay.
See the spreads. The spreads are definitely wider.
They are definitely the
not
leader
crazy.
in that space. Option market pricing of about $5.50 move either way. Kev, so I looked at a double calendar.
And do they like batch the orders?
In the near term, May 5th options,
it kind of looks like it.
15% on aggregate. In the May 12th, the next week, only 142. So I looked at a double calendar. I'm going to buy the May 12th weekly 58 strike call and 45 strike put.
There's a new
Some of
high.
the same option
Bass
strikes in
broke
the May 5th
this morning's
weekly
high.
series that expires in 2 days.
My.
The 58 call and 45 put. So I've got some upside exposure, a little bit outside of that 1 standard deviation range,
I need to get more.
and a little tighter on the downside. Paying
What
roughly
is
about
happening?
$1.60 debit on that, Kev. There's going to be your risk, $160
GME
per
reacting?
spread, but you've got a range between about 40, just under 42 bucks, and up to $65 range for this to be profitable. So if we do get an earnings surprise, Kevin, as you mentioned, free cash flow, if we do get an earnings surprise above that 1 standard deviation move, it works out for you as long as it stays within that range, right?
Cyber 002.
Yeah, this is a trade that gives you the
I'm waiting.
opportunity.
This might be a double top
if it
here.
moves towards those strikes,
But yeah,
close enough
865.
to be
Wow.
profitable in either direction.
Gotta be very
And you
careful with
line
your
up
entries and
strikes
exits.
near the 1 standard deviation move, which this case is about $5.50. Your strikes are about.
Can't believe it. It's crazy. It's the exception.
About $8, $7, $8, $13 apart if you look at the 245 and 58.
Blackberry?
So you're right
4329.
there in that range, a little bit more
Nice
to the
little bounce
upside
there.
though. But the deltas are really flat. You're collecting about $48 a day in theoretical theta. Tom, you're looking for a move towards the 58 strike or towards
Might be a little double
the
top here.
45 strike.
We'll see. Cup and handle
frankly,
being built
Tom,
or
you
something.
don't care which one it is.
Yeah, and I think the key with this type of
kind of
a
doing the
double
same thing.
calendar where you don't have to pick a direction is based on what your assumption is. If you think it's actually going to go down towards $40, maybe you skew this a little bit to the downside. Or if you have a directional bias, whether it's downside or upside, maybe only do the 58 call or the 45 strike put, or pick that strike where you think it's going to end up. You've only got 10 days in this trade. You've got some assignment risk on those short options also.
Don't want to be
This
too
definitely
quick.
takes
There's only the
advantage of a
first
move
few
a
hours of
little bit more
OTC,
to
but
the
it
upside,
definitely seems like it's
as we
doing
flexed
different
it
than
a
what
little
we've
bit.
seen
All
other
right,
ones
Kat, that's
do.
going to do it for you and I today here on Fast Market.
Which is
But stick around
very
right
good
here on the
sign.
TD Ameritrade Network. Next Gen Investing's coming up.
I mean, we can fill all these gaps that the crooks at NASDAQ made. We'll fill them on OTC. The bounces up they were never had, they were supposed to have, like, after just sell-off after sell-off for months and months and months, with no relief rallies. I don't know. Polishing off the clamps. Version 3.9, we'll see, we'll see. It's little red candle here. This thing might be fun to day trade, even with those commissions. I mean, yeah, if you bought it this morning, you're looking at 77% move. That's crazy. And I know other OTC stocks will do thousands of percent, but if they're super illiquid, you can't get in and out of them. There's not like a chart to read. Then I don't know how it's that possible. Alright, we've got 1 hour till FOMC. I might have to call TD up. Can't believe I sold those this morning. That's crazy. Hold on, what, right here? $50% from. Yeah, it would have been green on that yesterday. My average from yesterday was, oh, maybe even a little less, because I bought some, yeah, I bought it after hours, never mind. Bought it after hours at like 60 something cents. Up X liquidity on Twitter for a couple weeks. Wild and trips right now. I don't know what you mean, Lords. Been a long time since you've been around chat, though. Remember your name. Remember you. Zero 0796. Why are we both saying 0842? You're probably delayed. You need to enable OTC trading. So if you go to just make a trade, go to buy it or sell it, and then it'll ask you to enable it. And then you should get updated real time. Twitter. Yes, Twitter. Twitter OTC pumper fake accounts all say OTC wild and trips right now. Oh. I don't know why they're saying that. That doesn't make any sense to me. Nice ranges on SPY today. Could have held my long here. Could have opened that short here. Could have opened that long here. Very clean price action. Range bound. Not what I was saying at the beginning of the day. It's probably going to stick in a range. And it did this little false breakout. And I'm like, it's going to break out. But yeah, sure enough, just in a range till day pow. Watching OTC Twitter and all the bots come up. And I get some Jennies in the chat.
And even that first 30 minutes responding to the statement, and of course the decision that they make regarding the interest rates, will have a reaction. Doesn't necessarily mean that's going to be the ultimate reaction. So expect volatility one way or another, maybe like both, maybe a lot,
might
maybe
break
a little.
Out here, actually.
But what is happening right now doesn't feel that relevant. It's just sort of a quiet wait and see what happens.
It sort of almost feels like these earnings events where we say the earnings come out and then we get the earnings call. That is almost how we'll feel when we hear from Jerome Powell, of course, at about 2:30 p.m. Eastern time. But as always on this show, prior to that Fed announcement, we'll kick things off with our upvote and downvote segment. Following that, we'll chart and trade our upvotes. Our promo name is Wingstop, touching all-time highs today after its first quarter report. And then we'll discuss Estee Lauder seeing a completely opposite move today, down significantly, plunging towards its worst day on record. Last but not least, we'll look at Ruth's Hospitality Group surging after Darden announced acquiring the company.
Yeah, M&A action here, middle of the week in the restaurants.
If we get a retrace back to view up, I'll
towards the end of the show,
more there,
George, Estee Lauder,
gotta get someone to break out.
Arguably one of the movers of the day, down 14.5%, is not got the memo that today was supposed to be a green day. Apparently,
9 cents there. You saw it.
Some of that weakness that we saw in the market yesterday. Wingstop, though, certainly got the message because this stock has been nothing but flying to the upside. But let's talk upvote, downvote, not endorsements, not recommendations. We got plenty to get through. All of these are earnings previews, Jenny. We're going to narrow it down to a legitimate
breakout. Dude, this price action is so refreshing.
Worst one. We're just simply going to take a couple, and we'll explore those a little bit further with Ben. First one is Qualcomm. Huge, big legacy tech player. Has been more relevant, I would say, lately than some of its other peers. But I'm struggling a little bit here
adding
today
to my
before we
order.
hear from them.
Yeah, they are struggling.
Getting back to what I had basically yesterday.
To differentiate some of these chip companies.
I'll wait for tomorrow, maybe to get some more.
As exposed to the smartphone market, which we have seen.
We'll see, though. I mean,
deteriorate over the last year. Actually, last week we saw reports from a research firm that said first quarter worldwide shipments for mobile phones fell 13% year over year due to this difficult economic situation.
Mine too. It's up 22%.
A large supplier
from yesterday's close. It's up like
could be
almost 100% from today's open.
The Street is expecting revenue
of 92% from today's open.
$9.1 billion with adjusted earnings per share at around $216. Now on Monday, a Bernstein analyst did reiterate his outperform rating on Qualcomm shares, citing their low valuation. He did also lower his price target to $145 a share from $155, which does still imply a good amount of upside from
Okay, looks like that gap fill might be in play. 10 cents.
More viable once we reach the smartphone bottom, and in the meantime,
Jenny did it.
Not trading like investors are.
Jenny did the breakout.
Anyway, so to speak to that, shares
well
are
done,
only
Jenny.
up about 4% year to date, still down about 27%.
That's true. That's why all in on BY.
So not catching a lift at all from some of the strength we've seen in this semiconductor space.
Gave up.
Like Nvidia come to mind, but I think that's why
I just have shares. I can't buy options on BY. And I didn't want to buy it yesterday. I thought it might be suspended.
In the same space.
Yeah, they make a product, but those products are used for different purposes. And so there's this subsectors that amongst the semiconductor names that are really important to distinguish between when you're talking about this space as a whole. But in Qualcomm's case, this is going to be another story. Combine this with basically every sector of how are your margins faring? How are you weighing potentially falling demand and increased prices on the production side? Expectations are for margins to be a little bit worse, things to contract a little bit. We'll see. Ultimately,
I mean, yeah, that would have been quite a bit actually.
As you had mentioned, Jenny, it has struggled a little bit. So we've seen obviously huge comebacks in some of its peers. Not the case for Qualcomm.
Right, and I think that could be seen maybe as positive into this earnings event, but of course we'll have to wait and see because the AMD making a monster move lower today in reaction to its quarterly update.
948
is another name that has earnings today after the closing bell. That is
day one,
Etsy.
just
now, for
straight up starting an OTC squeeze.
Etsy anticipates total revenues to fall between 600 and 640 million, with Zacks now estimating revenue of around 623 million, which would indicate an improvement of about 7.5% on a year-over-year basis. Consensus for earnings is around 48 cents per share.
Yeah, we're barbecuing now.
A decline of about 20% year
volume?
over year.
I think Weeble's volume's wrong.
Estimates in 3 of the 4 last quarters.
It's saying 20 million today.
The company make really continuous efforts here into expanding its product offerings to deliver an enhanced customer experience.
E-Trade is saying
expected to have
48 million today.
In the first quarter, they have a really strong buyer base.
I think it's
in the
probably
US,
48.
As well as Germany and the UK, and they've also been really expanding their global footprint of Etsy payments, as well as some of their subsidiaries, those being Reverb or Depop. Now, however, we are expecting to see the
double doji, sign of reversal potentially.
Spend weigh on a name like Etsy that does operate an online marketplace that is, like we've said so many times, Alex, a fairly discretionary website overall.
Yeah, a lot of figures to look for in this one. First off, active buyers. Secondly,
Ruben, you bought it at 33 cents. How's that possible?
Of course, revenue and EPS, as we talked
about.
It's going to be a
adding
really
in the premium from covered calls.
Take rate is expected to go up. So Etsy's keeping more of the transactions, but if they sell a little bit less stuff and they have a little bit less people buying things, you can see
it's a 100% move from bottom to top today.
Higher revenue, but kind of a cloudy picture going forward. There's going to be certainly focus on this one. We'll see how Etsy fares. Certainly one that was a winner in the pandemic time frame.
L2 just shows
find its way now. Going to say down about though for Etsy. Next one is Moderna. Speaking of a winner
shows
around
one order.
The pandemic time frame, I mean that is this name.
Time and sales, you can gives a better picture. So maybe I'll just show time and sales.
It's been a little bit tougher go for this one.
Tougher go. Okay, so I was looking at the estimates for
L2
this
is kind of worthless
from the street, and they do not even compare to what they reported a year ago. They're expecting Moderna to lose about 177 per share on revenue of just shy of 1.2 billion.
Looking for a retest of this breakout for some more.
On revenue of $6 billion. So
looks like we'll probably fill this gap first.
These numbers cannot match up at all. I actually thought it was an error until I double checked with our producer, and that is correct. They are expected to lose 177 per share. Now they were involved in the drug development.
The Weeble volume I think is incorrect.
Vaccines, but they do also develop
saying 21
other
million.
Vaccines like for
E-Trade saying what did I say 40 something.
But the company
38
is also
million, I think.
looking at AI technology to
SPY moving down
even faster with more increased
very range bound today on SPY.
Recently partnering actually with IBM to incorporate AI and quantum computing into its processes.
95 or not 95 cents.
Will be using
9.5 cents.
Generative AI tool to
still going.
Molecules
got a gap fill
to increase the pace then of their vaccine development. However,
that's
in the
crazy.
meantime, the company will need to find a way to really fix its balance
silver
sheet
doubloons.
we are not seeing that lift from COVID-19 vaccines anymore.
955.
In the fourth quarter, the company did miss on both top and bottom line, and we saw earnings decline almost 70% on a year-over-year basis, and this is expected to decline even further now in this to-be-reported quarter. Research and development expenses also rose almost 90% in their fourth quarter, so that's a little.
And they haven't even unlocked options yet. I don't know. Can any of you guys buy options on it?
Almost 90%.
Is anyone able to buy options?
Your top and bottom
Let me know.
line fall so significantly.
If
Again,
you,
I don't think they're
if you don't know,
to the lift
try it for me. I'm curious. Just put a really far, you know,
so that's
really low limit so you don't get filled.
You're seeing this reflected.
Then it should be able to tell you if you can or not.
This year, shares are down about 27% since 2023.
Yeah, I mean, this
I actually can't even. Yeah, I guess I can buy it on the phone on TD, but some brokerages.
Market for them, there's not really any use for those ideas.
Actually, why is that? I should be able to fix that.
It's got to spend on R&D. It's got to find other vehicles for delivery of its RNA technology. This is why this company is so different than, let's say, a Pfizer or a Merck or whatever it may be. This is basically a one-shot or one-trick pony here when it comes to a product, and if that product loses demand, you got to find another way to sell stuff. So I'm going to say downvote for this one. Expect volatility potentially, but this seems like a very binary story. They're going to either figure this out or they're not, and it's got a lot of value left in this stock, potentially to go significantly lower or to potentially go significantly higher. Very volatile, as it probably should be. It's almost like a start. I hate to say that for a $50 billion company, but like it's very startup-y in the sense that it doesn't have a wide variety of things that it can generate revenue from. It's basically got one thing, and now it's trying to figure out other ways. So gonna say downvote. Next one is Paramount. Kind of a different story here, Jenny. We're talking about a legacy content and media player that is watching sort of its traditional avenue of revenue kind of go away.
It is, and I think with that shift, we are expecting to see some growing pains. I say that hesitantly because shares are up about 0.75% today and up still 37% this year. But Paramount, like a lot of its competitors, is still losing money in its streaming business. In its most recent quarter, the company reported a direct-to-consumer loss of $575 million, which was steeper than what we saw a year ago. The Paramount CEO did say on their fourth quarter earnings release they expect to return the company to earnings growth in 2024. So we'll have to be waiting and seeing until then. Adjusted earnings per share expected to come in around 12 cents on revenue of $7.4 billion. Their Paramount Plus subscriber net additions are expected to come in around 3 million, with their global Pluto monthly active users expected to come in
consolidating a little bull flag
million.
Up here.
Ad softness is expected to be one of the biggest hurdles this company faces ahead of this first quarter report, amid some of these macroeconomic challenges as well as just general softness in the advertising market. Management has maintained the second half of this year they'll see improvements in this ad market.
Hold and exercise.
I think guidance will be very critical for this company, as it's been the theme really throughout this entire earnings season. They did also recently announce they would be merging.
But you already had those. Can you buy them now?
And Showtime streaming services, as well
550 calls for
a
June.
Restructuring plan to then combine Showtime with MTV Entertainment Studios, which feels
May 15th.
like a blast from
you're talking about
past,
the strike,
a lot of changes. So like I said, I think this company is experiencing
I'm wondering if you can buy them.
Degree of growing pains.
Are you able to buy options right now?
Reflected in their quarterly updates, at least the last several.
Yeah, we talked about digital ad spending being kind of pressured, Jenny. I mean, TV ads are even more so under pressure.
You have to actually try though, Tony. If you don't try, you don't know.
Decline.
TV ads. There is an order book. I'll show you the.
How bad is that situation?
The time and sales is
how strong
really all you have. The order book doesn't show much. It just shows the spread. 955 and 959 is the spread right now.
Headed monster, if you will. Those
955, 956. There's 20,000 on the bid, 10,000 on the ask.
It's a name that is in a very critical time. It feels in its long history. We'll see where it goes from here. But
no, this is L1.
Yeah, and up 51% from its 52-week low. So even though I'm
is there not an L2
in the
for
negatives, this name has been an outperformer, at least on
I don't think there's an L2
basis.
for
we'll be diving more
OTC.
Into our two upvotes, those being Qualcomm as well as Paramount, coming up next. We'll also be
it's
looking
filling
at
that
some
gap.
trades. Stick around to Next Gen Investing. We'll be right back.
It is by. Yep, 10 cents is the next stop. Not a bad day for the old Bed Bath first day on the OTC. Not a bad way to start it off. You gotta imagine there's some OTC traders that are watching this and trading this. So we're gonna have push from them. Given we've lost probably a good amount though of individuals, individual traders, just because they're not able to. Which wouldn't matter on NASDAQ because there's zero, just zero price discovery and it's all fake, it's all internalized. So, but on OTC it seems legit. SMX kind of at a nice level there actually. Huh. $9.8. BBY made it to. What a ride. Trade on Trower price. 103% from the lows. Dude, those lows. By the time I even saw it, it already gapped up like 25% from the low. Like I saw my position on TD and I was like, oh no, it's down 50%. Yeah, 102%. And then once I figured out how to find it on E-Trade, it was already at the top of this candle, so. Might be the beginning of a long ride up. 30% to the upside is nothing compared to the thousands of percent that we're due for even just a dead cat bounce. You've never seen stuff. I haven't either. I don't watch them though. Do you watch them a lot? Lords, or do you trade OTC pretty often? And have you traded them first day on? I'm wondering if this liquidity and this volume tapers.
4% this year, but not necessarily seeing the strength that we've seen across a lot of these semiconductors. So here to tell us more now, I'd like to welcome in our chart master, Rick Ducat. So Rick, Qualcomm earnings today.
There's 10 cents.
We know it's been somewhat of a mixed picture post.
Congratulations, you guys.
These other names that have reported.
We made all-time lows this morning.
It was a bit of a mixed picture.
4 cents, and now we're up 100%.
Couple weeks here, we had a triangular type price pattern, starting with these lows to the downside.
All right, we've got an inverted head and shoulders. We've got a bull flag breakout. Look for consolidation. Maybe even holding support of 10 cents. We might not come down and retest this breakout. It's very possible we come up here and then just trade in this range before continuing up.
Previous lows from back here in March, but we didn't make a new
Wrote stocks into expert market, huh? Sounds intense, man. Did you get a high score too?
Well, actually, we did make a new closing low. Sorry about that. We did make a new closing low below that new area back there. So the 113 level is a place where we want to watch to the downside for
Imagine
some
half the time it'll take to retrace
going forward. We've kind of established a bit of a double bottom.
It's proven to be true so far.
Here. So we did break through this trend line. Now that's
down
90%.
How are you only down 90%?
Well. This blue dashed line is
silver doubloons.
Was old support. Now it can become
1025
here going forward. Looking at our
it's
RSI
glorious.
Measure of momentum, we can see that it's more tilted toward the downside here below the 50 midline. Not really any big surprises.
Glad you guys are here.
I guess you could
this
say
is pretty exciting. Thank you for your thumbs up. Got 34 of you. That is neat.
These lows, we did not cross into the oversold area, so that's something worth noting there.
BBBY coming in to OTC with a barbecue, fighting all the homies, saying check me out.
All of them are trending down and diverging farther apart, which suggests
buy orders are good. I mean, what's good?
Bias is toward the downside.
I don't know.
In
Yeah,
this
it's
name
good.
Here.
46,000 on the bid, 5,000 on the ask. So right there, it's good.
As well. So it's been a bit of a drop off here in this name. We also during
the
this
time in sales.
Recent downward
1026
excursion down here, we closed below our two shorter term moving averages and our volume profile point of control. So
awesome.
Things are definitely more tilted toward the
picked up a couple here on the just after VWAP bounce. Picked up more on that break, and I'm waiting for another purchase.
Is the support to watch
I actually sold this morning. That's crazy.
I
did sell this morning.
Check out around 118. That's the point where our yellow.
I thought this was going to be another OTC stock, down 50% and then down 80%.
So that could be a potential stopping point for price
but
if we do move
it
to
is
the
an
upside.
exception.
We have a similar situation just above it. with our
The
orange
gap's not
63-day
totally
EMA
filled. 102.6
and
it
our
hit,
white trend
and
line
the
going
gap
across the
I see
highs.
is
So that's coming in
103.0.
around the 120,
That might be within the margin of
mark.
error.
So let's call it 121 for easy measure.
My average. Those were just ones I was day trading. I picked up yesterday like 70
cents.
cents. Picked them up in the after hours, like 67 cents or something.
Higher, so still an underperformer even on today's session.
I had a great price on them. Yeah, would have been up
Alex, I think considering
at least 30%
today from a technical front as well as just
it's okay. I mean, like I said, this is 30% up of potentially thousands of percent that this thing could retrace.
Conviction on this name. Walk us through what you're thinking, and then leaning more neutral to bullish.
Yeah, utilizing some of the recent weakness in this.
Yeah, and the only reason I bought them yesterday was
pumping up some implied volatility, kind of combining those two elements.
I was thinking potentially it could just be suspended for an extended period of time. All this stuff was going around, all this misinformation about how they have to file this form before it can be traded on OTC. Well, I don't have enough experience. I've never seen that before, and I didn't think they would suspend it for like 10 days before it would trade on OTC. But at any rate, just in case they were right, I bought shares in the unlikely event that that was true, and then the even more unlikely event that there was some sort of merger acquisition before it went to OTC, and then it just resumed on NASDAQ up at $5 a share. That, along with seeing the list, the interested parties, seeing Ryan Cohen on there, that helped also.
Out of the money here with our spread. So selling the 110, 105.
Anyways, it's fine.
That is
it's good.
One quarter the width of the strikes, 3-to-1 risk reward ratio.
Controller
$375 in risk with a 108.75 break even
on this. I think he's been busy with work.
Where you stand to gain a max profit of that credit received, which is $125. That's most likely to occur if these options expire worthless, which is most likely to occur if they're out of the money. So above 110, in other words.
Because it does file some confident one slide into expert. Expert's an actual exchange? That's crazy. That's for stocks that don't file? Don't have any filings?
Below 105 is the worst case
That's
scenario.
like the sketchy of sketchy.
This is one that is basically
they don't do anything.
to find its legs
no reporting, no accountability at all.
Just don't go any lower.
Yeah, and I think that's really well put. Now
it hit 102.6. We've got
almost the complete inverse move today.
You have an inverted hammer up here. We'll see if it consolidates like here and just continues to go.
On the session, but has been a notable outperformer this year. And I said they're underperforming the streaming space, but that's not necessarily true.
Like I said, I'll pick up. We retest here. I'll be picking more up. 83
well,
cents.
The story of this chart is that we're in a bit of a transitionary phase here because
not sure though.
We had this
could stay up high.
Trend line,
$1 today.
Was breached here, and
that would
now
definitely make some news.
Upward sloping channel. We can see that we're right around the lower end of that channel right now. In addition to being within this channel,
Lords, if you have experience on OTC, have you traded many that have been
63-day EMA to the downside where we found
same day onto OTC?
And we just saw a rejection at our 252-day EMA in purple there on Monday. So
the few that I looked at, I don't know how many it was, maybe 10 or 20 last week.
We didn't quite make it above that for the close.
All of them.
So RSI, not really.
All of them sold off.
In this one either.
So this is doing something different from that so far.
The bullish side of this indicator here.
As far as volume though,
is more tilted toward the upside in this name.
That,
we have been making higher highs
different than those two.
And higher lows still for a while as well too.
Have you ever seen one do this first day on OTC?
Suggesting that there's not a lot of directional conviction.
It's okay,
in
one red candle.
Picture here, but in the shorter term, we've got our two shorter moving averages, our yellow 21-day and orange 63-day trending upward here. We can also see that we moved above this volume node, and that's another indicator that can be viewed.
You have seen him do this first day on OTC.
So in this case, it's a good sign for the bulls that we were climbing above that area.
Oh, it is. It's like an OTC squeeze.
In terms of further support and resistance, we have once again a confluence of our
more corrupt. See, I'm wrestling with that notion.
Line here, right around the
I feel like there's less corruption because it's less regulated.
And just below that, we've got
that makes sense.
Our lows,
because they're not corrupting anything because there's not as many regulations, and since it doesn't have retail in it as much,
just above that as well, we have our 63-day EMA.
The corruption,
so those are 2 points.
There's not as much money to take.
To the upside, obviously, our
they're not going to rob someone that's poor. They're going to rob someone that's rich.
Coming in near 23.65, and our previous high close there
retail
near
trades
the
mostly on the stock
24.50
market on
mark. So that could be
NASDAQ,
a
on
point
New
for
York
the
Stock
bulls to watch
Exchange.
either if earnings surprise to the
And
upside.
then
All right, so 24.50.
they even push them into options, which
just around
is a huge money grab if you don't know how to
like you said,
play
just
them.
slightly above where we're currently
90,
trading. So
whatever.
we'll leave it there. Appreciate all the technical.
What's the
insight,
percentage
as
of
always,
options
with
expire
our
worthless?
Chartmaster.
I don't remember.
So Alex, now we're
80%
looking
or
at
something?
Paramount. Different story here because this name has outperformed
I'm not convinced
on the
OTC
year.
is
We'll also seeing
corrupt.
some relative strength today. So then walk us through what you're
You don't have
thinking
extended hours
utilizing
trading,
this
which
strength,
is
but just looking at a more neutral example trade.
Yeah,
which
this
is
is a name that I think has
a way
very
for manipulation.
clear fundamental issues that it's got to figure out. And will maybe do so.
Are
and
there
maybe it
even?
won't, but the street's going to have its reaction.
Is
There's volatility.
there any
priced into
internalizing?
this, but
Are there
there's
any
also a
dark
ton of
polls?
Trading activity and some of this more sideways
Sell-offs
trend
get up
that
to
we've
tens
seen
of millions.
recently around
That's,
22.5.
yeah,
And so
but
I looked at a
that doesn't
strategy
mean
that would
correction.
benefit simply from a move to and near that
751.
22.5 mark. And so
Your German exchange is probably
for this
delayed, or it's
trade
just not been updated yet at
an
all.
iron butterfly centered around 22.5. An iron
It's probably
butterfly
just
is
not been updated.
effectively a straddle with risk-defined wings
And 39.
outside of
Yep, it made it fill the gap.
that's sold. And so
got some profit takers.
Buying $2.5
see if we find support here at 83 cents.
Credit means if it perfectly pinned 22.5 and all of these options expired worthless.
I'm not day trading this today. I guess
managed to keep
could have, but oh well.
$1.50 credit. So not the
I like it for the
likely,
reversal.
Chance to get that max profit, but always important to know what
I'm
that
hopeful
is
that this is
and what you want to happen. I
bottom.
think the risk profile does a good job of showing you what exactly you want to happen with this type of a trade, which is a move towards those.
And you don't think they're
So
spoofing on the
break even,
NASDAQ?
simply add the credit to
That's
those
all you have on
strikes,
L2.
24.21. $100 in risk is that's the difference between $2.5 wide spread minus $1.50. And this one, really what an investor is hoping for is it's a short-term trade just for this Friday, is a slight move lower towards 22.5. And then hopefully, if that secondary market was there, they'd look to buy this back for a price under $1.50 whenever they could. It's not the most likely chance that you're going to capture that entire credit.
Yeah, I think that's really well said. And of course, these are two pre-earnings looks at both of these names, but also important to keep in mind for both of our example trades today. They do contain multiple legs that can lead to.
So the other stocks that you saw perform like this
short options can be assigned
first day, did the volume taper off?
Into expiration can add risk like unanticipated exercise or assignment. Now coming up next,
This could just be even bull flagging up here, and not necessarily coming down here to retest support.
New all-time highs following a really strong first quarter report.
Yeah, it looks like it. Wow. Yeah, I'm gonna be patient. Could just be consolidating above this level, or I have a bit more of a pullback. $50x till you're satisfied. Yeah, might be the beginning of an uptrend. Hopefully a long, sustained uptrend. Even without news, I mean, UNS kind of sold off there. They announced a stock split? Oh no. Oh no. Not my Mullen. Okay. I closed it. Thanks for the heads up. It might not have much more of a sell-off than this, but yeah, I'll close out. Don't like that news. Then up a little bear flag on the 5-minute. See if that plays out. Oh, tomorrow. Oh yeah, that's not good. I mean, they have to though. They're out of compliance, so we'll see. We might get a split squeeze on Mullen. Reverse split squeeze. Be the first time. Yeah, barbecue looks like it's just consolidating up here. I like barbecue way better than trying to say BBBY. Stock was born for OTC. Tomorrow is Thursday. Got JPAL or FOMC in 30 minutes. Look at this V on the SPY. Doing the same thing it did. Well, not quite, but sort of similar to yesterday, just much smaller. Thanks, Sterling Archer. Appreciate it, mate. I'm ripping up here. Might grab a short at that 412. Seems like too obvious of a trade not to grab. Not selling before 50 cents.
Ultimately, the impact that has on lending kind of feeds into that slowing economic narrative environment. This is a good thing for the Fed for the most part, but definitely a lot of attention here towards this meeting and ultimately market reaction too.
Especially with the regional banks' price activity just even this week, just yesterday. But I have to think this will be acknowledged at least by Jerome Powell in his remarks. But we often joke about the give it and the take it. So we're seeing markets
just depends on what's going on at 50 cents.
Gain on the session now. Could we see then the take it once we start hearing more remarks from the Fed?
Liechtenstein.
Comes back hawkish, yes, in theory, right? He could push back against those expectations for a rate hike later in the year. He could make it very clear that, one of the things he's talked about, and I think will continue to talk about, how it's a mistake to pause too early. We actually saw that from the RBA this week, right? With the surprise rate hike after a pause, they had to come back and again put forth that second effort to kind of drive inflation down. Fed Chair Jerome Powell talked about once inflation gets entrenched, how it becomes more difficult to wipe out. Now, headed into this meeting, I just want to point out, we're seeing, you mentioned indices kind of mixed.
It was uncorrelated this morning. I don't know. That did definitely get me.
Situation. Look at the bonds. I'm sorry, the 10-year, the ZN around 116. You've got 10-year yields hanging out just below 3.4%.
And it was inversing SPY.
It's not just the indices, it's not just rates, the dollar. I mean, we could point to multiple products that are in a bit of a holding pattern, waiting for the news here today, and then we'll see how things play out over the next couple of days in reaction to.
Running on a margin.
Again, looking forward to the announcement this afternoon, the question and answer session. Any insight in terms of what to expect in June? And this one could move here. Yes, if Powell comes off a bit more hawkish than expectations, the markets ran up into this one in anticipation.
Probably worth it to hold BBY shares and to have margin for futures.
The economy slowing a little bit. It'll be key to watch if there's a hawkish tone, how we see stocks, investors, market participants respond.
There's no, I mean,
definitely the market event of the day. If
on
not
E-Trade,
you
don't. There's no, you can't trade OTC in after hours. I don't know if there is no extended hours or if it's shortened.
To actually break down, but we will leave
on
it there.
Google, it did say.
All the insight. Ben Lichtenstein, the host of Futures.
It did look like there maybe was like an hour after 4 that you could trade it. But I'm not sure. I know on E-Trade, I can't trade on E-Trade after 4 before 9:30.
Hitting new all-time highs, and I have to say, I know they are very different companies, but they both fall in the restaurant realm. A completely different move today than what we're seeing in Starbucks.
Yeah, no doubt, but one that seems kind of similar to what we saw from Chipotle, and to a lesser extent maybe what we're seeing with McDonald's as well. It does seem that there are winners and there are losers in this space, that it's coming down to cost management, but the ability to grow. What has Chipotle done really well over the years? The same as what Wingstop has done. They've continued to grow at pretty incredible clips. So smashing the comp sales expectations as you go through the numbers, I'm sure it'll provide more clarity. But this is just a really, really strong report, and it shows that this is a market that is willing to react positively to numbers that are better than expected and still show strong companies. So we keep projecting this slower economy. We're worried about Fed. We're worried about all this stuff. But if you just execute as a company, you'll find a way to make new all-time highs.
And I think a lot of it had to do with their conviction going forward. This company gave no pause about the future, still expects the same growth trajectory they previously promised.
Yeah, you can shorten OTC.
It's really, really important in these markets now. So they did report their first quarter revenue growth of around 43% on a year-over-year basis to just shy of $109 million, beating consensus.
Yeah, because I did see conflicting stuff.
Around 59
we won't
cents
even
per
show me
share,
extended
which is
hours on
well
Box
above
D.
the 34 cents per share they reported reported a year ago.
Yeah,
also beating forecasts.
I'm not sure.
System-wide
On E-Trade, I'm
sales
not able
increased
to.
over 30% year over year, while domestic same-store sales
Ready for that
also
barbecue
rose
short
20%
squeeze.
versus last year. Digital sales increased a whopping 65%, and we saw that domestic revenue AUV was also around 1.7 million. Now, adjusted EBITDA increased almost 60%. Operating margin was also up by 182 basis points, and we saw operating income actually for the quarter also rise 55%. All really healthy growth metrics. I saw no year-over-year declines in this company for any of the figures that I could find, Alex, and that is always really promising. They also declared a quarterly dividend of 19 cents per share, which will be payable on June 9th to those on record as of May 19th. Now, for the outlook, they expect in high single-digit domestic same-store sales growth going forward for 2023, and they do continue to expect to open the same number of stores they promised, about 240 global net new adds. So really strong levels of growth, really strong year-over-year numbers. And if you can recall, Alex, I think this was during the pandemic, there was like this wing shortage. They rebranded some of their stores as Thigh Stop, like chicken thighs. I thought that was totally bizarre, but hey, it shows this company's resiliency and also
Thigh Stop? I didn't hear
sort of work through. It has been a difficult environment for a lot of these food-related companies as food prices have increased. And then there was the whole chicken shortage. This company has done a really good job.
And I Stop. That's hilarious.
How strong they've been. Shares are now up 216% from their 52-week low and up 140% over the last 12 months now.
Yeah, and I was just going to say, if you even zoom this chart out, let's say 5 years on a weekly time frame, for example, really capture so many different
That's a good memory.
time, including, of course, the volatility of last year and the subsequent comeback, but also the
barbecue's doing
the
it.
disruption that we saw not only in restaurants, but really every industry. This has been one of the few winners.
Let's put another shrimp on the barbie, eh?
It's actually continued to be a winner. And you can see that generally it has been an uptrending stock. It's had its periods of volatility. It certainly struggled at times last year, but it's come back with a vengeance and continues to soar here, Jenny, up 8% here to a new all-time high. I think the only names that we've set all-time high
1,000 or
around
2,000%.
are McDonald's, Chipotle, and now Wingstop. I see a trend.
Yeah, and I think that's a really, really good comparison. It's sort of difficult to, I'd say, pinpoint what makes these all winners among the group of restaurant stocks because, you know, Chipotle
I think
is
we can see it easy.
low fares.
What do you see, dude?
I know McDonald's has been
20,000% moves in
also relatively
OTC.
lower priced. We were talking about Wingstop in terms of the quality of the food. I know it's up 8.5%, but not exactly the place I'd be going to for wings, at least not here in the Chicagoland areas. Have you been to Wingstop in the last decade?
Totally have. I mean, I'm not a big
No, but I've been to Thigh Stop.
Guy, you know, don't crucify me for that, but I don't want to work to eat my food. But you know, they're convenient. I mean, you watch a sporting event, you're with some friends. It's like pizza. You simply get a bunch of wings. It's easy to share with this. But yeah, Wingstop's in a lot of locations. All of these chain restaurants tend to do okay in those kind of environments. But you know, when I think of Wingstop, you think of it in the same light as a Buffalo Wild Wings, and of course, you're always going to have your local places as well. But it's done a really good job. It continues to keep its pedal on the
so
if there's no, if you will, towards growth.
Can you still have gaps?
Sacrificing too
you
much
still have
of
gaps
its
on OTC
margins as it continues to improve. So I think it's impressive. I think like Chipotle, like McDonald's, it's sort of in that.
There's no extended hours
less
though,
so
right?
McDonald's, but more like Chipotle.
I don't know how that works.
Tier, and kind of caters to
I was trading.
that at
I'm using E-Trade, TD Ameritrade, and Webull. I can trade on all those.
Which is maybe why it's doing better than, let's say, a traditional restaurant might be doing right now.
Yeah, and we heard strength from a name like Uber Eats, which is definitely helping bridge that gap because I do know that I have myself even Uber Eats Wingstop before, but I do have some hometown bias. I get a lot of flack for my Domino's pizza habit, but I do eat Chicago local wings, not Wingstop typically. But when trading this name now, definitely FOMO feeling to the upside.
Chicago local wings.
Clearly now outperforming on the year,
and he supports
on the week.
the locals.
I mean, really, really strong chart like we both pointed out. So walk us through what you're thinking then for an example trade today.
Yeah, this one's going to look pretty similar to what we looked at in Qualcomm. It's hard to discount.
Consolidating up here on a bull flag. I'm not sure if it's going to test this 83 cents or so.
Cheap price. That's not to say that it can't go higher. But even with the fear of missing out to the upside, still neutral to bullish in its conviction here for this illustration. Looking at selling the June 200, 195 put vertical below the market here. Really, this was more of a function of pricing, less so than picking a particular strike price for a support level or reason. You could make the argument that that 200
some more barbecue
psychological level could come into play there as well. But $1.25 on $5 at risk is a quarter the width of the strikes, or that 3-to-1 risk-reward ratio. Returns once again here on the show. 198.75 is the break even to the downside. $375 in risk. The risk profile will highlight and look very similar to, again, what we looked at in Qualcomm. This is a strategy that benefits from a stock maintaining
had an order
its
before
value.
and I canceled it.
It's not asking for it to go
Wait,
higher.
I'm gonna wait.
It actually gives it a little
it's right
bit
at
of
resistance, so
in the event that it gives back some
still
of these
could have a bigger
gains.
pullback.
About a 7.5%
Fly coming down here.
Strike. Of course, the worst case scenario would be a downturn in this stock, in which it falls below 195 over the next 40-some days to this expiration.
Probably try and close this short.
This is one, Jenny, though, that is a
happy
short
to close
volatility trade, a
2
short
o'clock. So
time decay trade, the one that looks for
some exit in the next 20 minutes.
In the stock to
maybe to VWAP,
hold
that'd be
its
cool.
value once again. It would be fine if it continues higher, but you have profit definition, risk definition, and this is one that benefits from a stock above 200 come June.
So sort of utilizing the price activity we're seeing today, not necessarily needing a swing
so Windstream, you're gonna go OTC.
Direction. But that does it for our FOMO segment. Now coming up next, we will look at Estee Lauder with shares now down.
Ace just keeps throwing his controller at the screen
after missing some third quarter marks, as well as giving disappointing outlook for the 2023 year.
A stop loss on this futures. But yeah, I'll probably close it at VWAP if it gets there. The 10 and then rip. I mean, the 100% move we made today is not a rip. Not in OTC standards maybe, but pretty good move. 108% bottom to top. It's just the first day in this exchange. It's just gotta get stretch its legs a little bit, you know, get comfortable with the surroundings, see what the neighborhood's like, and just go crazy first day. Oh sure. That's good. You gotta be dead inside, Ace. What once was yesterday might not be what is today. You gotta, the quicker you can let go of it, you do better. UDC halted up. First MF day. $1:47 p.m. Oh my gosh, here we go. Shooting like a G. Even like a barbecue. Might get stopped out here actually. I don't want to. I might cancel this. I like this position.
Especially compare that to Ulta, which I would say operates in the same beauty sphere, and they look completely different on a chart basis. So here to tell us more now on
probably shouldn't. There's only 18 minutes left till FOMC. We'll probably listen to Stock Market Live for his breakdown on the minutes, and then for Powell, we'll just listen to it ourselves. Market's about to get volatile though.
Hey there, Jenny. Yes, this is definitely a case of an earnings miss, but also disappointing guidance based on an uncertain post-pandemic recovery in Asia. I guess the good news is shares were actually lower earlier today, down as much as 20%, so 15% off those earlier lows, but obviously still down sharply. In terms of the actual numbers, adjusted EPS fell sharply to 47 cents per share. That missed analysts' expectations by about 2 cents. Revenue, meanwhile, tumbled 12% to $3.75 billion. That came in ahead of estimates. Breaking it down, skincare sales dropped the most. They dropped about 20%. Makeup sales slipped more than 2%. Fragrance sales actually rose 1%, and hair care sales rose about 1.4%. But Estee Lauder said it's seeing a slower than expected return to growth in Asia. Its CEO saying as the shape of recovery from the pandemic for Asia travel retail comes into better focus, it's proving to be far more volatile than we expected and more gradual relative to what we experienced in other regions. Also, of course, smaller indie brands in the U.S. have taken market share away from bigger beauty companies like
just random
Estee
stuff.
Lauder.
It's
so in
still
turn,
sitting
Estee
here.
Lauder cut its full-year sales outlook. Says fiscal year 2023 sales will decline 10 to 12%. Previously, the expectation was for 5 to 7% decline, so quite a bit steeper there. Full-year adjusted EPS is expected to be $3.29 to $3.39. That's down from a previous estimate of $4.87 to $5.02. So we're seeing that certainly reflected in the share price today. The disappointment from investors.
Maybe I can't trade on
will say
Webull.
one other notable thing from the earnings call, Estee Lauder CEO saying, we are obviously not satisfied by the profitability in our revised outlook for fiscal year 2023. But he says for the future, we are focused on a plan to further accelerate our growth in key markets, return to organic sales growth in our Asia travel retail business and skincare category, and to progressively rebuild margin across brands, categories,
I did it twice
and regions.
though. I then bought back in yesterday, then sell down today 20%, and buy back in today up 30%.
Sales growth, but it's all about that outlook, I think, and of course the missed earnings. And yes, shares getting hit hard today because of it.
Yeah, it seems like the investors are keeping companies on a short leash and do not have patience for disappointment
3 days
right now. How about analysts? Does that sentiment mirror that of the investment community, or is there a little bit more confidence potentially down the line in this one?
Interesting.
You know, I haven't seen a lot of changes at this point, Alex. I was taking a look at the median price target.
I want more barbecue, but right at that resistance.
That's only $2 lower than it was at this time last month, so it has only come down a little bit, and it implies about 40%
it definitely is bull flagging.
upside.
Price action
is
very, very bullish.
Breakdown of analysts, 75% at this point have a buy rating. So I haven't seen any adjustments following these results. We'll have to see if maybe later today or tomorrow we see any. But overall, analysts bullish and see that Estee Lauder still has quite a bit of room to run, given that median price target.
Right, and I mean, gosh, Caroline, with this move lower today, it doesn't feel abnormal to see such a steep day of selling because we see these volatile swings post-earnings all the time, but it just is odd then to see the disconnect from the analyst community, not really acknowledging at all the weakness we're seeing in the Asia region. But we will leave it there with a really monstrous move to the downside today in Estee Lauder. Caroline Woods, appreciate all the insight as always. Now coming up next, it's time for Under 30, and we are looking at Roots Hospitality Group surging on the session after getting buyout reports from Darden restaurants. We'll look at what that combined company could look like with George Tillis coming up next.
Yeah, Mark is getting a little scared coming into Powell. This could be, we get a little sell-off into it. Got 14 minutes to that FOMC. Don't get me started on that one, dude. Come on. Maybe that inverted head and shoulders, bull flag, consolidation, setting up for maybe another one. And we might start breaking through resistances today even more. 13 cents is like top of this little range we made. Crazy. Dude, an inverse run on barbecue? Along with all this price action? That'd be fun. Yeah. Some butterflies coming in before this. Minutes. Let's get nuts. Alright, I'm gonna pull up Trading Fraternity. You guys can follow him. He streams on YouTube. Very smart. Macroeconomic streamer.
Including jumbo-sized low.
We'll just see what he has to say.
Door handles. The Fed started raising rates in March last year and ratcheted them up. For jumbo sizes of 75, it has slowed that pace at
Maybe
the
a
last
little double top here on BBY.
Data continues to show moderating price increases. Policymakers may opt to
coming
hold
down.
rates at this level until inflation is on track to their 2% goal.
See if it breaks here or not.
Bloomberg's they are expecting the committee will prioritize inflation despite First Republic and will hike by 25 basis points. In Chicago, Goolsbee could be the only dissenting president. One focal point on the deliberations will be the degree of credit tightening after Silicon Valley in March. Cumulative Fed rate hikes, not the banking crisis, explain most of the credit tightening to date. The policy
new high there on
statement
BBY.
will
On
retain
barbecue.
language describing inflation as
1027.
elevated, but remove references to robust growth. And our base case is
Jeez,
that
you're gonna make me
officials
buy
will
more, aren't
replace
you?
the clause in March stating some additional firming may be appropriate, with language suggesting rates are now sufficiently restrictive. Again, that is what Bloomberg's base case is. I disagree 1,000,000%. But let's find out. So Anna Wong, chief economist at Bloomberg, says that they're expecting the Fed to follow through with another 25, marking the terminal rate for this cycle. Signs of softening economic data and tightening credit will likely drive the consensus the committee that rates are sufficiently restrictive, hinting at a bias to pause at the next meeting. Still, with inflation
Phil at
stubbornly
22.
elevated,
It just
Fed
makes
Chair
sense.
Jerome
It's
Powell
got to do
will
it.
stop short of assuring markets that a pause is a done deal or that rate cuts are imminent. So, looking at the chart, what is this? This is a backward-looking real Fed funds rate using actual CPI versus forward-looking Fed's fund rate. The chart may explain why the Fed thinks it has more room to hike, and while participants may feel the Fed is going too
Uber
far.
and Domino's Pizza.
Huh. So
all right,
this
10
is
minutes.
The Fed funds rate using actual CPI, and then this is using the 12-month swaps.
Weevil's not showing the right price?
So pretty much,
Hold on.
the Fed is like,
You have to,
we still got a long
I'll double
way
check.
to go. That's an interesting
1007.
Swaps show a 25 basis
109.
point is
Yeah, that's
likely
right.
priced in for May.
You have
and
to
that the market message is that the Fed is
get
one and done.
approved
The
for
latest
OTC
chapter of the
trading.
US
So
bank failures
try and make a
and
trade
stress
on it
saw
on
swaps for
Webull,
the June meeting
and then
raise
apply for
expectations
OTC, and
of further
it'll
Fed
update.
tightening. Treasury yields are now back under 4, roughly in the middle of April's range of 3.6 to 4.3. Alan Ruskin, chief international
barbecue.
strategist at Deutsche
Sweet
Bank,
honey
said
barbecue
that
action.
the inclination as a policymaker is to go with the original call and not be swayed by the latest price action. What it does is shift the idea of a hawkish signal. There will be much more open-ended sense of where we're going to go from here with the Fed. Naturally, Powell will keep the door open for more hiking, and the last ADP jobs data suggests data demand or labor demand in the private sector remains solid while inflation is sticky and not coming down. Ed Al-Husani, rate strategist at Columbia Threadneedle, he says Powell has to keep June option alive, and it's likely that June SEP forecast is pushed up a little bit. Expect the bond market to look past this and mainly focus on what the Fed says about tighter credit during the press conference. As it stands, swaps for December show 60 points of cuts are anticipated, with a credit shock seen doing the job of cooling inflation. It's a market bias that also anticipates the familiar playbook of the Fed riding to the rescue, an outcome that looks less likely if inflation is sticky. So while economists and future traders alike reckon that this will be the final rate hike, policymakers may be wary of being.
It takes a little while after you
explicit. Back in June 2006,
sign the disclosure. It might take a
Fed
few
raised
minutes,
rates
but
for
it'll
the last
update.
time in that cycle, the policy statement referred to inflation risks remaining. The FOMC went on to say that the extent and timing
I'm
of
considering
any
even
additional
closing and
firming
just
would
day trading
depend
this
on how
thing.
the growth and inflation
Jeez.
outlook evolved. Even with signs pointing to economic slowdown, the Fed wants there's a lot of uncertainty about future policy. Wednesday's statement will likely see the Fed shift to meeting-by-meeting approach, using data to determine whether more tightening is needed. All eyes will be on the key sentence of FOMC statement, where it previously said some additional firming may be appropriate. Fed watchers expect that to be tweaked and reflect the new data-dependent path. Officials say that policy is sufficiently restrictive to further bring down the level of inflation, and add that they will be watching to see how data evolves. So again, that's That's what we've been talking
I had an
about
order, I
the last
canceled it.
48 hours now. So the final rate hike in a tightening cycle has typically been a positive catalyst for stocks. According to Goldman Sachs, in the 6 cycles since 1984, the S&P has notched an average of 3-month returns of 8% following the peak in interest rates. However, the conclusion of this cycle may differ from historical pattern. Rising valuations typically drive equity rallies at the end of hiking, but the S&P is already trading well above the multiple at the end of the cycle, except the one ending in 2000, after which the S&P declined despite the Fed pause. So if valuations were cheaper, we could rally. Any other time in history, we've rallied, but any other time in history, overall valuations were not this high coming into the last rate hike. Matt Maley, chief market strategist at Miller Talbach. What time is it?
Yeah, we're getting some profit taking. Looks like a little double top there on the
today's announcement press
BBBYQ.
conference should give us a couple of wild moves in both directions.
That or it's just consolidated
before the
before it
market draws
breaks
a
out.
conclusion about the Fed's intention going
That's actually an
forward.
RSI
The
divergence
consensus
too.
seems to be looking for a hawkish pause after a hike of 25 points today. If that's the case, we would think this would cause yesterday's decline to have more downside follow through before long. A key inflation gauge that Powell signaled out late last year is the PCE price index for services excluding food, energy, and housing. That's because services is a bigger concern right now, the thinking being that the goods sector is coming in better balance, but services are where consumers are spending what pent-up demand and savings they have left from the pandemic. Housing prices are affected by long lags, so this gauge set that upside too, and the latest reading of the gauge was helpful. It rose 0.24 in March from February, the least since July. Let's see if Powell offers any take on the outlook from here. Assurant, all right, it's slowing down. Both the market and the data. Just above 5 minutes, Chad. So Powell's inflation gauge, you can see the higher trend over the last couple of years.
So here are my futures on it. So I've just got 4 of these micros.
Will it stay down? Core services are thought to be influenced by wages. Remember,
I have a limit order to close
them. Fresh measure of that on Friday.
If I wait till the FOMC, the papers come out, it's quite possible we rip up and it stops me out.
Dog, people really.
There's also a possibility though it just
I guess we're gonna find
straight
out
dumps on it before it rips.
That statement is going to be unreal.
So I could either close it for whatever small profit I have,
preferred recession rate spread indicator. The
just leave that on there.
18-month forward is now flashing red, implying a 94% probability of recession within the next year. Application specialist Owen Mind
maybe just get stopped out for a tiny
maybe
gain.
argued the spread is distorted with the 3-month yield move higher from escalating debt limit standoff. Something big. It might not. Again, this meeting right now is the least amount of pricing for any Fed meeting. And again, the interesting part is after this rate hike, the Fed will be at the terminal rate projection that they have outlined over the last couple of years or the last year. So it's going to be important, but they're going to hit SEP or the terminal rate. But then next month is when we get a new SEP. So
thanks, Jeff.
So Powell will have his work cut out for him in Wednesday's press conference. If policymakers agree on a pause after this meeting, he will need to communicate to the markets that they won't hesitate to hike again if warranted. It has been tricky to convince markets of the Fed's resolve over the past year. Market participants are currently pricing in a cut as early as September, even as no Fed official has a cut penciled in for this year. A key element to watch for during the press conference is how Powell talks about the impact of reduced bank lending on the broader economy, especially in light of last week's renewed stress among regionals. Banks were tightening credit even before the collapse of SVB in March caused the broader sector turmoil, and policymakers are now carefully assessing how much that pullback in lending will contribute to tighter financial conditions. This could also mean that we see a dissent at this meeting. Chicago President Austin Goolsbee has signaled he may be more hesitant to further raise rates, and a dissent from him would be the first in nearly a year. So bonds hit that little high and coming back down. Again, bonds are already tweaking out even more than stocks if you think about it. And we got Meta, we got Tesla. Yeah, very low volume, but it's all going to rocket up after this. Chad, 3 minutes. Wow. Are you ready?
Yeah, good thing I closed out and stopped that right there.
Data comes on, 30-minute reaction, and then we get the press conference. Holy. What? All right. That's it. I'm not doing any pre-plays unless I've already been holding it. So a couple of the post-earnings plays, a couple of older ones I've been down on. I took some profits. I got Uber, closed out my bond plays. I got a decent amount of cash to play with, and I'm really just going to be going for bonds after this. So other questions that could come up are First Republic sales of JP Morgan, Vice Chair Supervision, Michael Barr's report on SVB, and then questions on the debt ceiling following Treasury Secretary Yellen's announcement. The Fed may start to begin the transition to focus on inflation to labor market data soon, says application specialist Owen Mind. Who is this guy? I've never heard of Owen Mind until today. All righty. Get ready. Man, right at 41.33. So just watch the 2-year. I think this is going to be the big one. If it's pause, we buy. If not, we sell.
I've kind of been chasing a limit sell on this thing. It keeps kind of getting away from me. You don't get a little
this is
rip.
It, bro.
That closes. I'll just hold, I guess.
God bless all of you again. Hopefully you like the
video.
Share the stream. Subscribe. But it's game time, baby. You
Crazy
got
with that little move.
1
that percentage.
minute
Here to
remaining.
here is big.
1 minute remaining, baby. 1 minute remaining. Wow. Wow. Well, I wish you luck, my friend. Okay, 15 seconds or 45 seconds. Woo! Thank you, man. Good luck. We'll see. I mean, we're going to find out right away.
42
right
likes.
away.
Appreciate
we're going to
it,
get
guys.
an answer. That statement will be key. Let me see. I already got
all right,
one
10 seconds. Here we go.
with it. Let me check. All right, 20 seconds. 2 years down 3 basis points. Spot index is down 0.43 on the spot.
Getting excited.
SPX, 10 seconds. Get ready. Again, volume. Everything's going to tweak out. Watch the bonds, too. That's the 10-year.
UI little gap down there. Oh, big flush.
There it is. There it is.
Initial reaction is a flush to
on.
VWAP on the futures. Now we rip.
Fed raises 25. Extent to which more firming needs hinges on the economy. Hold on.
What
all
the
right, 10 years
frick?
popping off of that.
Oh my gosh.
I think they changed the statement. Come on, low.
My stop limit.
It's not loading on the website yet. Extent to which more firming hinges on the economy. They omit prior language that signals more hikes ahead. Federal funds rate is now returned to the level of the global financial crisis. So there you go. I don't have the statement on the website yet.
My
man.
best wins on futures are always accidents.
I'm
tell you
waiting
guys what's
for it
going
on
on
the
here in a
website,
second.
but they changed something. There it is. The committee achieving support. The committee will closely monitor incoming info and assess the implications for monetary policy and determine the extent additional policy firming may be appropriate. No, they didn't. Wait. They added it. No, that was a no. That's a pump fake. Hold on, because look, it says the exact same shit. They just added. They added that they will closely monitor, but look in determining the extent additional policy firming may be appropriate to return to 2%, and they'll take this into account with cumulative tightening. Yeah, no. It's a pump fake. So 25 basis for it, tweaked his statement to say that they'll be data dependent, but then they kept additional policy firming. I don't know. So some people like it. But
I don't even know
some
if I made
people
it on
are,
that.
again, they kept
So I
the
had
exact same phrase.
That's what's annoying when you
so it seems like
put in
the
a stop
pause is
limit
potential,
order.
but
It
it's
doesn't.
not as clear. And then
you go to close a
tightening will
position.
continue on
It doesn't
pace.
cancel that stop
Stocks
limit.
are headed higher a little bit.
So I had to buy to close.
Let me
Open.
see the 2-year.
What the frick?
No,
Hang on.
again, they added a part to it
Oh,
that
that's
said
selling.
pretty much they're going to be looking at data dependent.
I had to
but
buy
then
to
they kept
close.
additional
It
policy
actually ends up
firming.
just buying to open. So I bought to open futures contracts. I bought to open a bunch. Revenue is ripping up, which ended up working out. But
I'm buying one.
I wasn't
I'm buying
expecting
one
it, so
DT for
I'm
now.
very surprised.
Buying one 2-year. Because I don't think it's. I think the statement was the
And then
same.
actually I just
think
closed
it's
my
kinda
BY shares,
bearish,
so-
but I think people might eat up.
Oh,
the
it didn't
first
totally
part
fill
for a
though, just
little
some of
bit.
them.
So they kept half of it the same, and then they made one other different change. So they made one change to say
That's
data
crazy.
dependent, but then they kept additional policy firming the same. So again, I'm 1/3 the size of my initial one.
It's all up to Powell. I mean, they figured 25 basis points. Like, yeah. Liechtenstein.
On the little changes. Yeah, it's all about the press conference. But then again, though, I don't know, because do you realize nobody's right or wrong? That's the fucked up part about
that previous language.
So me and Bloomberg
yeah, I
and
think we got out
everybody
of that
else
future.
are both correct. What happened?
I got it both mine.
They kept the
for
phrase
small
of policy
profit
firming.
somehow.
That's what I expected.
Let's see, this
but then
would
they
have stopped
also
out
made
anybody.
a change to add that they're data dependent. You see what I'm saying? So that's why I said it was like it's a little bit of a pump fake. There's now both of us are right. So everybody who was like, oh, there's going to be this, is that, everybody got what they wanted. The press conference now will have a little bit more. So like I'm saying, I think it's bearish, but we'll find out. How was I right? You could go watch the video from yesterday, but I was saying they are not going to take out this statement. So like I said, in determining the extent to which additional policy firming may be appropriate, they didn't take that one out. All they did was they added that they will closely monitor and assess, and then they kept the same statement. So that's the only, and that's, I mean, again, that's why the market's not really moving off of this. I think they gave everybody what they wanted in writing on both sides, and now we have to wait for Powell. But it's not like, it wasn't a clear-cut pause, and it wasn't a clear-cut no pause type beat. Honestly, kind of wild. So that's the pump fake. Yeah, gold loves. I think gold in general.
Everyone got what they wanted.
Of gold. It's kind of the
yeah,
same situation.
That's what I was saying. You'll have a better entry for your call or your put
no
after
either.
this. So on the pump, you get your put. On the dump, you get your call. Basically it. Doesn't always play out like this, but almost always you have a huge move both ways, and then you'll have a continuation one direction. But now the market will just kind of wait on Powell.
So here it is. Let me get you it. This highlights it perfectly. That's weird. It's not weird. It's just, again, Powell does it again with
selling
their
off
little,
here.
With their little trickery.
This is on Webull watching it.
So again, they said economy expanding. They changed growth to pace. They changed spending.
I don't know.
To
Might not be a double top. We might be consolidating.
They added robust.
I did close out those shares though.
They
look
said
for
recent
re-entry.
developments. They said tighter credit.
Back here if we hit this.
They're likely to weigh on the economy.
If we break out, I'll be buying on the breakout.
They said in determining the extent, they kept additional policy firming, and then they took out sufficiently restrictive, and then they said in determining extent of future hikes, they took that out. So they added the extra statement, but then they kept additional policy firming, and people thought that was going to change. So they added a little bit of pause language, kept the original, and then that's it. So that's why I'm saying the press conference is going to be the press conference is where it's going to be at now. But that's a small reaction so far because I think they gave everybody a little bit of both. Yeah, they just took out the first half. They didn't, and then take a look at what it says. They took out the part that says, in order to sustain sufficiently restrictive,
now
they
the
took that out and they said in determining.
I don't understand because it didn't fully fill it.
There, they said.
So do I pay commissions on
they said
each time it gives me a fill?
Bill should be a little bit better.
For the whole trade, right? Probably look at.
But then again, let's see what Powell says.
Okay, yeah.
He announced the hike. So you have a hike now. Your Fed funds rate is now higher.
Okay.
Than it's higher than.
So it doesn't matter how it fills it.
Inflation, CPI, but we don't know the path. So again, now June is that much more important. But we still got to listen to the guy. Just wait till Powell starts talking, and then we'll find out.
Some fees they put on there.
But that's crazy.
Why do I have fees?
Each September meeting, did they go up or down?
So here's the. And
there's the 2 year.
Here are the ones I bought this morning.
Still at the same level.
Bought a 10,000.
Like I said, I think it's bearish initially.
10,000.
I think that little change has people excited.
For the commissions on both those were
really
$4.
Like,
so
for the pause,
scaling in, you want to be careful because
but then it's not.
The fewer scales, the less you're paying fees.
It's not a clean statement
commissions,
change.
no fees on
they're
those.
Closely monitoring to assess implications.
But then on the exit,
Yeah,
I tried to exit all of them. So I put an order to exit 20,000.
That's the only bullish part is now by
And
taking
it sold
out
it off in
restrictive from the last
tranches
time,
because
you
I
could
couldn't get
assume
fills.
it's there.
That's
No,
another problem
they
with
took
such
out restrictive.
large orders. Oh,
But last
it
time
might
they
be breaking
mentioned
out.
it, so if they mentioned it last time, that means we weren't at
pick up some
restrictive.
more if it is.
So if you bring it up now, maybe they're arguing they are, but Powell fucking did it again.
But yeah, on the
So
exit, it just charged me one of the
reacting
commissions
to that.
and
Bonds
filled it
coming
as it
down.
could. But then I got these fees, $1.17, 6 cents, $1.68. So I think those fees.
There's a couple of them. They said the tighter credit. So what is a surprise here is that the vote was unanimous. Traders are taking this outcome as dovish. The dollar index is down 0.6. It's worth noting today's hike is indeed the last. The 5.2 peak is a bit lower than people thought. It shows how the slowdown.
So that doesn't make
the
me want to
analysts
scale
are
at all.
taking this as a pause. I don't know why, but some people are still eating up the pause idea.
If yours is delayed, you have to apply for OTC.
Honestly,
so to do that, just try and buy or sell.
These analysts right now are
a share
all
of BBYQ
they're
or
saying
barbecue
this is the last
on
hike
Webull.
now, even after the release. So they're
So
saying
go to
initial
buy
bond
or-
market read is dovish, 2 years.
And then it'll say you have to apply, and then apply, and then
3.9,
it should.
And the belly is leading the
You
rally.
have to sign a disclosure, agree to the
Fed hikes
terms.
25, largely priced in, but it's
And then
not
it should
signaling
update
any
the-
more hikes. They're
the
clearly
price.
worried about tighter credit conditions. I guess so. Pretty
Which
much
says
the
delayed.
idea of taking out any signals.
Yeah, do what I
of
just
more
said.
hikes,
Should work.
That's your pause, I guess. And then Treasury curve is bull steepening with more cuts being priced in for 2024. That's the market shift we could get once they reckon the Fed is done. The change in language was consistent with our view, and historically, the evolution over the prior few meetings signaling the end of the tightening cycle. All right, interesting. The bonds are still way too stable on this. Even the
Might get a
market,
break.
we're
Might
like
be getting
barely
back in.
moving. It's been about 9 minutes, so give it like 6 more
101.7.
minutes. We'll see at 15, and then we'll probably get our final move.
So you are going to get some
A
latency.
lot of people are, again, I think.
Oh, my stream's,
just the idea
it's not,
of and no reference of more
it's
rate
behind.
hikes is having people double down on the pause rhetoric. Even though the
I've been
statement
checking it with
did change
E-Trade
a
though,
little
and
bit.
it's been
but I think
up to
it's
speed
all
with
in Powell's
E-Trade, so I
hands
think
right
that's
now.
right.
That's it. You need to see if Powell comes out with that beginning of the year dovish attitude, or if he bats it down. But like straight up, I mean, the market is eating this as a pause for now. But the what's it
They
called?
want it, dude. The
bonds are
breakout
starting to chill out.
breaks that.
Which
I mean,
is weird because
yeah,
if the
we've
market really is going to eat this up,
we got
as
some
a
more
pause,
volume in
the
here,
bonds
so
should catch a bid.
not a huge
So that's
gap
why I
like we
bought them.
just
I said I don't
ran
believe
up.
it, but I'm going to
It
buy
might
one.
slow down a bit,
And then
I don't know.
scale in throughout the bonds throughout the day.
13 cents
until
would
we
be
get
the
the press
next
conference.
bigger resistance. That range,
But if anything,
13.35.
I think we might, unless Powell is
pushing
like
on
a bombshell.
Could've gotten a
get
better
ready
exit,
for
though.
BS
Wow.
until June now, but we'll see. They
That's
ain't
10%,
pausing, but
just
they're
in
not
the
talking
just in the
about
flag
more.
of the
That's the thing.
full
In
flag. It's
writing,
a 10%.
they are not talking about more hikes, and that's what has people getting geeked up right now. Because they're saying they're going to assess the
Triple top.
implications for monetary policy.
I mean, it still looks
They-
like
in
a
determining
bull
the,
flag,
the
so
extent of firming, not more rate hikes,
I
not
don't know.
anything. So they're just not saying
Is there
more rate
resistance,
hikes.
though?
And that omission is what has people feeling this bullish for now.
Eyes coming
You
down
need
here.
clarity from Powell, sadly. Again, that statement change wasn't clean enough. It was unanimous,
Trump
yes.
picking
That's
bar.
the surprise.
What's on banks?
But again, it's not, that wasn't, I thought it was going to be clean, change the statement or not. They literally did both. So we were talking one or the other, and a hybrid of both happened. They kept additional policy firming. They removed any recognition of, they took out the word restrictive policy, and then they also were saying that they have just no mention of more rate hikes, further rate hikes, additional increase. None of that is included in there. So that's how the market's taking it for now. But we gotta have Pow.
I don't think I'm gonna hold
He is
overnight.
going to give it to us all. Because again, Powell saying restrictive, that's what we want to look out for now. That's still in
I don't
play.
know how this thing
Just
trades.
anytime you hear restrictive
Overnight
territory out of
OTC.
Powell's mouth during the press conference, you will probably get a
I
reaction.
might. I mean, if I get a good entry and I don't want to close it, I guess. Okay. We'll mute him for a bit. Thanks.
The next couple of months, especially that debt ceiling crisis that's going to happen. So it may be appropriate for the Fed to stop here.
What did you think about the unanimous vote? I mean, they did say that the economy expanded at a moderate pace. Everybody was betting on 25 basis points. What did you think, knowing the committee, that they got this unanimous vote?
I think it was very important for the committee to put forward a unanimous vote here to create the conditions for a potential policy pivot. Austin Goolsbee simply did not want his first vote to be a dissent. Now,
we've got a J-Pow stream up.
There absolutely is, and there may be more than one. Because I got to tell you, as somebody who spent my life studying monetary policy, there are a diversity of views on the committee on how to proceed and at the intensity we should proceed. So you'll have Austin Goolsbee on one wing and Jim Bullard on the other, and a lot of them in between.
Yeah, you know, you mentioned at one point the debt ceiling, right?
Yeah.
And so Janet Yellen has said, look, it's really a bad situation, right? She went from June
barbecue
1st, and now we're hearing that we're going to see a lot of political posturing going forward. But you know, she's had to also really study what's gone on with these regional banks. She has to look at what's going on with the debt ceiling. And the question, too, is with the regional banks, is this 25 basis points extremely hurtful to them, or not really, because this was all in the cards?
So the majority of the pain is based
on
the lagged impact
order that opened while that thing ripped.
I know 25 basis points is like turning the notch one more. It's turning it up to 11, right? No one wants to do it.
Right.
May have to do it, and it's going to hurt a little bit. The real problem the regional banks are looking forward is how will firms in the private sector roll over those commercial real estate loans? Because if they can't, then we're going to have a problem between insurance, the financial system, and real estate.
And that was the problem before SVB happened.
That's right.
I mean, this has been a problem ongoing.
That's right.
Because as those loans come due and commercial real estate has to now, you know, get those back up on those loans, they have higher rates to face, right?
Yeah, and to link it back to your question, I really hope our policymakers are paying attention. This is no time for an artificial crisis induced by the political sector. This is not the time for another debt ceiling debacle.
We're getting close.
Kick that can down the road at the end of the year. We got to work through some issues here, because if you're thinking about how does the economy go from resilience to recession in 6 months?
1009. If we close above 1009.
That's Barron's next week quote. They're going to put his picture again, and then
if we close here, we're golfing.
It's nice to see you. Joe Brusuelas, thank you so much for being with us. RSM, Joe Brusuelas. Our Fed coverage continues.
Another bull flag within a bull flag.
Jerome Powell's press conference live at 2:30 p.m. People are saying this is the biggest Fed meeting in 10 years. Okay, is it? I don't know. But I will tell you that
everyone has been
on to every single word that is said in this press conference. Keep it right here. We'll be right back. Watchlist returns.
Fed drops language that it anticipates more policy firming, but may be appropriate to attain a sufficiently restrictive stance. FedWatch notes U.S. interest rate futures price in a pause in June and July meeting. U.S. rate futures show traders price in rate cuts in September after Fed decision. Fed repeats that U.S. banking system is sound and resilient. U.S. authorizes additional $300 million in arms and equipment for Ukraine. Fed increase brings rates to 16-year high. Fed says it will continue reducing balance sheet as planned. Opens door to rate hike pause. Hikes by 25 basis points. White House says Congress should deal with debt ceiling immediately. Ford F-150 production disrupted by missing door handles. Large hedge funds, yeah, that's what you said. Large hedge funds will have just 3 days to privately tell U.S. regulators about extraordinary investment losses and major margin events under a new rule from the SEC. I like, great. Then nothing will happen. The SEC will know more about it, but they probably just won't. But maybe it's a good thought. And what happens if they don't? You pay us $5 million. I kind of want to take the short here on BY. Not gonna lie, the barbecue down to here, cool it off. Oop, some of the losses have to play both ways on the way back up. Ripping up here by saying, "We want Powell. We want Powell." I'd use up a day trade taking the short here. $1,009. 100% take keeps the 9 to 5 away. Yes. Never see 48 again. Maybe not. Shiba Moon 32,000%. Wee. Rejecting up here. 10 minutes till Powell. You trade just only on OTC, right? What do you mean I can trade just only on OTC? I can trade on the NASDAQ too, New York Stock Exchange. I think a pullback to 82 cents is probably warranted, but it might not happen. I mean, it is consolidating up here still. It started to break support here and then whoop. Yeah, BBBY is delisted. Fed meeting.
Over-extrapolate. I think you're absolutely right with that because they are going to be combing through probably even his breathing style in between, where he gets more worked up. So when you look at what's going on here, I think you hit also the job market, Fed says, remains robust, to your point. Unemployment still low, so we don't need to worry about that at this moment. What I did find interesting was two comments. U.S. banking system sound, that is like a shout out to the regionals, if I ever heard it, for folks who are worried about that. And tightening credit conditions could weigh on households. That's worrisome. I don't love that.
I get excited for Jay Powell.
Two comments.
Well, the first one, they're obviously in the game of managing expectations around what the banking system is going through, and certainly that's a lot of bad assets that were purchased when the Fed and the Treasury was creating a lot of money over the last 2.5 years, and so that line is not terribly surprising for us. I mean, the one that's more surprising is sort of how things are impacting households and businesses on the credit side, and so that's the area that we're paying the most attention to, and so that definitely has our antenna up. I mean, it's a little bit delicate, right? Because that's part of the goal of raising rates in the first place, is to constrain credit to the economy, to loosen the labor market, to contract activity down, but you don't want to do it too much. And so, back to my prior point, we're getting near that inflection point where everything's going to be a little bit
Stock
volatile.
is still in Chapter 11.
Do a lot of reactions to every single data point, but really for us, I think that the key is the labor market, because
liquidating assets.
One person's labor income is another firm's revenue, and that's just really important in an economy that's 70% driven by the U.S. consumer.
Yeah, I wanted to talk about the balance sheet and some of the other things here. The M2, the money supply here, receding from the high, still $5 trillion above pre-COVID trendline growth. So I think that's one piece of information people focus on, but also here.
I'm just stoked on how natural the price action is, and it looks like the algos didn't follow to OTC.
Each month as much as $60 billion for treasuries, $35 billion for mortgage-backed securities. Still on pace for that too.
Yeah, I mean, we could certainly get into the weeds here. Like it is kind of interesting what the Fed is doing. I mean, they're raising interest rates. They're doing QT, which removes deposits from the system. We're likely, after we get probably some sort of temporary 11th hour debt ceiling extension,
I think they'll play Powell in here if Saul just leave this on. Otherwise, I have a screen for him.
Account, their checking account that's at the Fed, and so and at the same time, they're still paying over 5% on the reverse repo
35
facility.
Minutes.
That is very much a substitute for bank deposits, and so there are a couple things that are working at odds with each other, and how that exactly plays out. I mean, there's a lot of chatter in the macro community about which one's going to win out, and plenty of people that are more deeply in the banking system in the weeds than I am are talking about this. But it still seems like, as of right now, the Fed wants to kind of continue with their messaging, continue with QT because they're uncomfortable with the size of the balance sheet, and monitor incoming data around what credit conditions are doing and what employment and inflation is doing to adjust their main tool, which they feel like is still their interest rate here at this point, despite all the hikes we've seen already.
Yeah. I mean, how do you compare this to how a consumer lives? Because it's my understanding consumers haven't really stopped spending. They're still spending the same amount. They're just not getting as much, less bang for the buck, right? Because of inflation. But how do you think the consumer is faring?
Buy ripping, they want Powell.
I remember my parents talking about very high interest rates, which brings me to a look here at the federal funds rate, which I know we're at 16-year highs now with this rate hike. But I was going back, and I saw a chart that goes all the way back to the early 1970s, where the Fed funds, or the effective Fed funds rate, was above 12, let's say. I mean, this is a rough chart. In the 80s, above 20%. So it's still relatively low compared to those times. Were those extraordinary times? Are we in a good place or not
popped up the VWAP there.
For households, for consumers?
BuzzFeed.
Yeah, I mean,
big bull flag today.
Nail on the head. Extraordinary on both ways.
A 5
from
minute.
The 1970s to where we were just a few years ago. But broadly speaking, inflation is not something that consumers have had to really deal with and factor into their day-to-day calculus. Over the last 20 or so years, and quite frankly, that the last 2 years have completely blown that up. And so you've got this divergence between nominal series and real series. They always used to move the same, and now they don't look anything like each other. So that's confusing, right? And that allows you to kind of pick whichever one you want to focus on and kind of go with that dominant narrative. But And also, I think, quite frankly, it makes people just a little bit annoyed. And so when you ask people surveys or businesses, they're like, this is a problem I don't want to have to deal with. And so they answer a little bit more negatively than they actually are, which when we look at it, we still think the consumer is in a really good position. The average mortgage in this country, I think, is around 3.5%, something in that range. So certainly new mortgages are much, much higher, but for the majority of people that are homeowners, they're paying a much lower rate. And so, there's some things that are not necessarily as interest rate sensitive or have not seen the effects of what we've kind of been through over the last 18 months. And so, the Fed is monitoring those lags. They just talked about it in their statement, and certainly we are as well. But, my general thoughts are given where we are and where we've come from, that we probably have a little bit longer, I think, than the kind of the bears think that the economy is going to go over a cliff here just any day now. I think we're more in that muddle through kind of middle scenario.
Okay, Zachary Hill, thank you so much of Horizon Investments. Thanks for being with us. Appreciate it. Joining me right now, George Silas is here to give us his thoughts on what the Fed has done today thus far. Of course, we're waiting on the language. What are your thoughts here? So far, we've gotten the statement.
Yeah, I mean, from the statement, I think it's pretty balanced. I think we've got the situation where the market is certainly pricing in a pause, but there's also some hawkish tone from the Fed within the statement as well. I think they elaborated quite a bit on the labor market, which is still resilient and strong. They are still concerned about inflation. I think the change in language is meaningful so far, at least in the statement. We'll have to see how the press conference plays out. But effectively looking at determining if additional policy firming is necessary versus last time around in March, where they actually talked about anticipating. So they took out the word anticipating and actually put in determining if essentially more policy firming is necessary. So that's a little bit of a change, I think, from the standpoint of last meeting. But with the unemployment rate still quite low, Nicole, at 3.5%, I'm going to be looking to see what their outlook is on the labor market, but also with GDP, because 70%. Last time around they were anticipating quite a subpar GDP growth level, quite a bit below last quarter's 1.1%. They're
5 days left
for the full year about 0.4%. So we'll see if that changes within the commentary coming up shortly.
And I wanted to ask your thoughts here also on the supply chain, because and just the entire from point A to point B, because the concern.
No, you can't breathe. No.
And the thought was
you're in chapter 11.
Was transitory, right? So they were cutting quantitative easing, increasing the money supply, encouraging lending and spending, and trying to boost everything, increasing that liquidity. In the meantime, in fact, it wasn't transitory, but the expectation was that things would naturally slow as the supply chains healed, right?
As far as dates go and stuff.
Came back online, but even today, Spirit
like what I have off the top of my head.
The CEO says supply chain remains
Form 25 or whatever. They still have to file that.
Disruptions are expected this year.
I don't know if that'll be a catalyst for anything.
It's not over, right?
It seems like most of the catalysts are just bullish, but I don't know.
Well, I think so. I think it's not over.
Before discussing today's meeting, let me comment briefly on recent developments in the banking sector. Conditions in that sector have broadly improved since early March, and the U.S. banking system is sound and resilient. We will continue to monitor conditions in the sector. We're committed to learning the right lessons from this episode, and will work to prevent events like these from happening again. As a first step in that process, last week we released Vice Chair for Supervision Barr's review of the Federal Reserve's supervision and regulation of Silicon Valley Bank. The review's findings underscore the need to address our rules and supervisory practices to make for a stronger and more resilient banking system, and I'm confident that we will do so. From the perspective of monetary policy, our focus remains squarely on our dual mandate to promote maximum employment and stable prices for the American people. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by a 1/4 percentage point. Since early last year, we've raised interest rates by a total of 5 percentage points in order to work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by a 1/4 percentage point. Since early last year, we've raised interest rates by a total of 5 percentage points in order to work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by a 1/4 percentage point. Since early last year, we've raised interest rates by a total of 5 percentage points in order to
add servers or
for
something.
anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by a 1/4 percentage point. Since early last year, we've raised interest rates by a total of 5 percentage points in order to
let's try this one.
Reduce our securities holdings. Looking ahead, we'll take a data-dependent approach in determining the extent to which additional policy firming may be appropriate. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. The pace of economic growth in the first quarter of this year continued to be modest at 1.1%, despite a pickup in consumer spending. Activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the first 3 months of the year, job gains averaged 345,000 jobs per month. The unemployment rate remained very low in March at 3.5%. Even so, there are some signs that supply and demand in the labor market are coming back into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. But overall, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE prices rose 4.2%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of these uncertainties, at today's meeting, the committee raised the target range for the federal funds rate by a 1/4 percentage point, bringing the target range to 5 to 5.25%. And we're continuing the process of significantly reducing our securities holdings. With today's action, we have raised interest rates by 5 percentage points in a little more than a year. We are seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In addition, the economy is likely to face further headwinds from tighter credit conditions. Credit conditions had already been tightening over the past year or so in response to our policy actions and a softer economic outlook. But the strains that emerged in the banking sector in early March appear to be resulting in even tighter credit conditions for households and businesses. In turn, these tighter credit conditions are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of these uncertain headwinds, along with monetary policy restraint we've put in place, our future policy actions will depend on how events unfold. In determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will make that determination meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation. And we are prepared to do more if greater monetary policy restraint is warranted. We remain committed to bringing inflation back down to our 2% goal and to keep our longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Gina.
Hi, Gina Smilik, New York Times. Thanks for taking our questions. I wonder if you could tell us whether we should read the statement today as a suggestion that the committee is prepared to pause interest rate increases in June. And I also wonder if the Fed staff has in any way revised their forecast for a mild recession from the March minutes. And if so, what a recession like what they're envisioning would look and feel like when it comes to, for example, the unemployment rate.
So, taking your question, of course, today our decision was to raise the federal funds rate by 25 basis points. A decision on a pause was not made today. You will have noticed that in the statement from March, we had a sentence that said the committee anticipates that some additional policy firming may be appropriate. That sentence is not in the statement anymore. We took that out, and instead we're saying that in determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account certain factors. So that's a meaningful change that we're no longer saying that we anticipate. And so we'll be driven by incoming data, meeting by meeting, and we'll approach that question at the June meeting. So the staff's forecast is so. Let me start by saying that that's not my own most likely case, which is really that the economy will continue to grow at a modest rate this year. And I think that's so different people in the committee have different forecasts. That's my own assessment of the most likely path. Staff produces its own forecast, and it's independent of the forecasts of the participants, which include the governors and the Reserve Bank presidents, of course. And we think this is a healthy thing, that the staff is writing down what they really think. They're not especially influenced by what the governors think, and vice versa. The governors are not taking what the staff says and just writing that down. So it's actually good that the staff and individual participants can have different perspectives. So broadly, the forecast was for a mild recession, and by that I would characterize as one in which the rise in unemployment is smaller than has been typical in modern era recessions. I wouldn't want to characterize the staff's forecast for this meeting. We'll leave that to the minutes, but broadly similar to that.
All right, welcome back, friends, to the watch list. I'm joined by George Sillis. We were just watching Chairman Jay Powell's
it's just as
opening.
important that we never get to a place where we're actually talking about or even having a situation where the U.S. government's not paying its bills.
And just to follow up Was discussion around the uncertainty of a possible standoff, did that affect today's monetary policy decision at all?
I wouldn't say that it did. It was, of course, it's something that came up. We talk a lot about risks to the outlook, and that come up. A number of people did raise that as a risk to the outlook. I wouldn't say that it was important in today's monetary policy decision yet.
Steve.
Mr. Chairman, oh, thank you. Yeah, Steve Leisman, CNBC. Can you tell us what the Federal Reserve Board did in the wake of that February presentation where you were informed that Silicon Valley Bank and other banks were experiencing interest rate risks? And can you tell me what supervisory actions you've done in the wake of the recent bank failures to make sure that banks are currently appropriately managing interest rate risk? And kind of part three, but it's all the same question here. Do you still think this separation principle that monetary policy and supervision can be handled with different tools? Thank you.
Sure. So the February 14th presentation, I didn't remember it very well, but now, of course, I've gone back and looked at it very carefully. I did remember it. And what it was a general presentation. It was an informational briefing of the whole board, the entire board. I think all members were there. And it was about interest rate risk in the banks and lots of data. And there was one page on Silicon Valley Bank, which talked about the amount of losses mark-to-market losses they had in their portfolio. There was nothing in it about, that I recall anyway, about the risk of a bank run. So it was, I think the takeaway was they were going away to do an assessment, a horizontal assessment of banks. It wasn't, it wasn't presented as an urgent or alarming situation. It was presented as an informational, non-decisional kind of a thing, and I thought it was a good presentation, and as I said, did remember it. In terms of what we're doing, of course, I think banks themselves or many banks are now are attending to liquidity and taking opportunity now, really since the events of early March to build liquidity. You asked about the separation principle. Like so many things, it's very useful. But ultimately, it has its limits. I mean, I think in this particular case, we have found that the monetary policy tools and the financial stability tools are not in conflict. They're working well together. We've used our financial stability tools to support banks through our lending facilities, and at the same time, we've been able to use our monetary policy tools to foster maximum employment and price stability.
I don't mean to be argumentative, but the staff report said SVB has significant interest rate risk. It said interest rate risk measurements failed at SVB, and it said banks with large unrealized losses face significant safety and soundness risk. Why was that not alarming?
Well, I mean, I didn't say it wasn't alarming. It was they're pointing out something that they're working on and that they're on the case. That I'm not sure whether they mentioned. I think they did actually. They mentioned that they had taken regulatory action, or supervisory action in the form of matters requiring attention. So I think that was also in the presentation. I think it was to say, yes, this is a bank and there are many other banks that are experiencing these things, and we're on the case.
Go to Victoria.
Hi, Chair Powell. I wanted to ask, obviously, with the recent bank turmoil, we've seen multiple banks buy other banks, and I was just curious whether you think that further consolidation in the banking sector would increase or decrease financial stability, and whether you have any concerns about the biggest bank in the U.S. Getting even larger.
So, we certainly don't, and I don't have an agenda to further consolidate banks. Consolidation has been a factor in the U.S. banking industry really since interstate banking, and before that even. It goes back more than 30 years. When I was in the government a while back, I think there were 14,000 banks. Now there are 4,000 and change. So that's going on. I personally have long felt that having small, medium, and large-sized banks is a great part of our banking system. The community banks serve particular customers very well. Regional banks serve very important purposes, and the various kinds of GSIBs do as well. So I think it's healthy to have a range of different kinds of banks doing different things. I think that's a positive thing. Is it a financial? So I would just say, in terms of J.P. Morgan buying First Republic, the FDIC really runs the process of closing and selling a closed bank completely. That is their role, so I really don't have a comment on that process. As you know, there's an exception to the deposit cap for a failing bank. So it was legitimate, and I think the FDIC, I believe, is bound by law to take the bid that is the least cost bid. So I would assume that's what they did.
So, but do you have any concerns about the fact that they're getting larger in general?
So I think it's probably good policy that we don't want the largest banks doing big acquisitions. That is the policy, and but this is an exception for a failing bank, and I think it's actually a good outcome for the banking system. It also would have been a good outcome for the banking system had one of the regional banks bought this company, and that could have been the outcome. But ultimately, we have to follow the law in our agencies, and the law is it goes to the least cost bid.
Thank you. Colby Smith with the Financial Times. At the March meeting, you mentioned that a tightening of credit conditions from the recent bank stress could be equal to one or more rate increases. So given developments since then, how has your estimate changed?
Yeah, I think I followed that up by saying it's quite impossible to have a precise estimate of the words to that effect. But in principle, that's the idea. You know, when we've been raising interest rates, and that raises the price of credit, and that, in a sense, restricts credit in the economy, working through the price mechanism. And you know, when banks raise their credit standards, that can also make credit tighter in a kind of broadly similar way. It isn't possible to make a kind of clean translation between one and the other, although firms are trying that, and you know, we're trying it. But ultimately, we have to be honest and humble about our ability to make a precise assessment. So it does complicate the task of achieving, you know, a sufficiently restrictive stance. But I think conceptually, though, we think that rates quite as high as we would have had this not happened. The extent of that is so hard to predict because we don't know how persistent these effects will be. We don't know how large they'll be and how long they'll take to be transmitted. But that's what we'll be watching carefully to find out.
Just to quickly follow up, what does it suggest about the scope for the committee to pause rate increases perhaps as early as next month, even if the data remains strong then, if it's having some kind of substitute effect?
This is just something that we have to factor in as we want to find ourselves. So I guess I would say it this way. The assessment of the extent to which additional policy firming may be appropriate is going to be an ongoing one, meeting by meeting, and we're going to be looking at the factors that I mentioned that are listed in the statement, the obvious factors. That's the way we're going to be thinking about it. That's really all we can do. As I say, it does complicate. We have, you know, a broad understanding of monetary policy. Credit tightening is a different thing. There's a lot of literature on that, but translating it into rate hikes is uncertain. Let's say it adds even further uncertainty. Nonetheless, we'll be able to see what's happening with credit conditions, what's happening with lending. There's a lot of data on that, and you know, we'll factor that into our decision making.
Howard Schneider with Reuters. Thank you. So noting that the statement dropped the reference to sufficiently restrictive, I was wondering, given your baseline outlook, whether you feel this current rate of 5 to 5.25% is in fact sufficiently restrictive.
So that's going to be an ongoing assessment. We're going to need data to accumulate on that. Not an assessment that we've made. That would mean we think we've reached that point, and I just think it's not possible to say that with confidence now. But nonetheless, you will know that the summary of economic projections from the March meeting showed that at that point in time that the median participant thought that this was the appropriate level of the ultimate high level of rates. We don't know that. We'll revisit that at the June meeting, and that's, you know, we're just going to have to, before we really declare that, I think we're going to have to see data accumulating and you know, make that, as I mentioned, it's an ongoing assessment.
And a follow-up on credit, if I could you give us a sense of what the SLUICE survey indicated. It was already, I think 45% of banks were tightening credit as of the last survey. What did this one show, and how did that weigh into your deliberations?
So we're going to release the results of the SLOOS on May 8th in line with our usual time frame. And I would just say that the SLOOS is broadly consistent when you see it with how we and others have been thinking about the situation and what we're seeing from other sources. You will have seen the Beige Book and listened to the various earnings calls that indicate that mid-sized banks some of them have been tightening their lending standards. Banking data will show that lending has continued to grow, but the pace has been slowing really since the second half of last year.
Nick Tamaros of the Wall Street Journal. Chair Powell, the argument around the end of last year and the beginning of this year to slow down the pace of increases was to give yourself time to study the effects of those moves. After the bank failures in March, as you've discussed, the Fed staff projected a recession starting later this year. So my question is why it was necessary to raise interest rates today, or put differently, if the whole point of slowing down the pace was to see the effects of your moves, and now you've, for the last 2 meetings, been seeing the effects of those moves, why did the committee feel it was necessary to keep moving?
Well, the reason is that again, with our monetary policy, we're trying to reach and then stay at for an extended period, a level of policy stance that's sufficiently restrictive to bring inflation down to 2% over time. And that's what we're trying to do with our tool. I think slowing down was the right move. I think it's enabled us to see more data, and it will continue to do so. So we really, we have to balance. We always have to balance the risk of not doing enough and not getting inflation under control against the risk of maybe slowing down economic activity too much. And we thought that this rate hike, along with the meaningful change in our policy statement, was the right way to balance that.
And just to follow up, what you said in response to Howard's question, you'll need data to accumulate to determine if this is a sufficiently restrictive stance. Does that data need to accumulate, or could it accumulate over a longer period than a 6-week intermeeting cycle?
As I mentioned, I would just say that this assessment will be an ongoing one. You can't, with economic data, you can't. You've seen take inflation from it. Look back. We've seen inflation come down, move back up 2 or 3 times since March of 2021. We've seen inflation have a few months of coming down and then come right back up. So I think you're going to want to see that that a few months of data will persuade you that you've got this right, kind of thing. And we have the luxury. We've raised 500 basis points. I think that policy is tight. I think real rates are probably that you can calculate them many different ways, but one way is to look at the nominal rate and then subtract a reasonable estimate of let's say 1-year inflation, which might be 3%. So you've got 2% real rates. That's meaningfully above what many people anyway, would assess as the neutral rate. So policy is tight, and you see that in interest-sensitive activities, and you also begin to see it more and more in other activities. And if you put the credit tightening on top of that and the QT that's ongoing, I think you feel like we may not be far off, or possibly even at that level.
Thank you very much, Chair Powell. Edward Lawrence with Fox Business. So if the Federal Reserve gets down to the 3% inflation, as the projections show at the end of this year, or close to it, would it be okay for you for a prolonged period of 3% inflation and hoping for some outside event to move down to 2% target?
I think we're always going to have 2% as our target. We're always going to be focusing on getting there.
But would you be okay with a prolonged 3%?
Let me just say that's not what we're looking for. We're looking for inflation going down to 2% over time. I mean, that's not a question that's in front of us, and it would depend on so many other things. But ultimately, we're not looking to get to 3% and then drop our tools. We have a goal of getting to 2%. We think it's going to take some time. We don't think it'll be a smooth process. And, I think we're going to need to stay at this for a while.
How does the other side of the mandate, the job side, once you get to 3%, going from 3 to 2, how does the other side of the mandate balance?
I think they will both matter equally at that point. Right now, you have a labor market that's still extraordinarily tight. You've still got 1.6 job openings, even with the lower job openings number, for every unemployed person. We do see some evidence of softening in labor market conditions, but overall, you're near a 50-year low in unemployment. Wages, you all will have seen the wage number from late last week, and it's whenever it was, and it's a couple percentage points above what would be consistent with 2% inflation over time. So we do see some softening. We see new labor supply coming in. These are very positive developments, but the labor market is very, very strong. Whereas inflation is running high, well above our goal, and right now we need to be focusing on bringing inflation down. Fortunately, we've been able to do that so far without unemployment going up.
Matt.
Hi, Chair Powell. Matthew Boesler with Bloomberg News. So many analysts noted at the time of the March FOMC meeting that at least half of Fed officials' projections did imply or seem to imply that a recession was in their baseline forecast as well, given the strong first quarter GDP tracking estimates. And so I'm just wondering if you could kind of elaborate on, why you're optimistic that a recession can be avoided, given that that's the Fed staff's forecast, possibly also the broader committee's forecast as well, and also, of course, most private sector forecasters.
Yeah, I don't think, I know what's printed in the Summary of Economic Projections and all that. I don't think you can deduce exactly what you said about what participants think, because you don't know what they were thinking for first quarter GDP at that point. They could have been thinking about a fairly low number. Anyway, in any case, I'll just say I continue to think that it's possible that this time is really different. And the reason is there's just so much excess demand, really, in the labor market. It's interesting, as we've raised rates by 5 percentage points in 14 months, and the unemployment rate is 3.5%, pretty much where it was, even lower than where it was when we started. So job openings are still very, very high. We see by surveys and much evidence that conditions are cooling gradually, but it really is different. It wasn't supposed to be possible for job openings to decline by as much as they've declined without unemployment going up. Well, that's what we've seen. So there are no promises in this, but it just seems to me that it's possible that we can continue to have a cooling in the labor market without having the big increases in unemployment that have gone with many, prior episodes. Now, that would be against history. I fully appreciate that. That would be against the pattern. But I do think that the situation in the labor market with so much excess demand, yet wages have been moving down. Wage increases have been moving down, and that's a good sign, down to more sustainable levels. So I think it's still possible. I think the case of avoiding a recession is, in my view, more likely than that of having a recession. But it's not that the case of having a recession is. I don't rule that out either. It's possible that we will have what I hope would be a mild recession.
The committee also noted in March that wage growth was still well above levels that would be consistent with 2% inflation. Do you see that as well? And could you kind of explain, how you come to that judgment?
Sure. So we look at a range of wage measures, and then that's a nominal. And then so you assume wages should be equal to productivity increases plus inflation. And so you can look at the Employment Compensation Index, average hourly earnings, the Atlanta Wage Tracker, compensation per hour, basically those four, and many others, and you can look at what they would have to run at over a long period of time for that to be consistent with 2% inflation. They can deviate. Corporate margins can go up and down, and there is a feature of long expansions where they do go down, where labor gets a bigger share toward later in a recession. Later in an expansion. So yeah, and we calculate those, and you have to take the precision with a degree of salt. But I would say that what they will show is that if if wages are running at 5%, 3% is closer to where they need to be. Wage increases closer to 3%, roughly, is what it would take to be consistent with inflation over a longer period of time. By the way, I do not think that wages are the principal driver of inflation. You're asking me a very specific question. I think there are many things. I think wages and prices tend to move together, and it's very hard to say what's causing what. But I've never said that, that wages are really the principal driver, because I don't think that's really right.
Great. Christopher Gaber at Associated Press. Well, you mentioned profit margins. Those have expanded, did expand sharply during this inflationary period. And while there are some signs that they are starting to decline, many economists note they haven't fallen as much as might be expected, given that we're seeing at least some pullback among consumer spending. So speaking of causes of inflation, do you see expanded profit margins as a driver of higher prices? And if so, would you expect them to narrow soon and contribute to reduced inflation in the coming months?
So higher profits and higher margins are what happens when you have an imbalance between supply and demand. Too much demand, not enough supply. And we've been in a situation in many parts of the economy where supply has been fixed or not flexible enough. And so, the way the market clears is through higher prices. So I think as goods pipelines have gotten, back to normal so that we don't have the long waits and the shortages and that kind of thing, I think you will see inflation come down, and you'll see corporate margins coming down as a result of a return of full competition where there's enough supply to meet demand, and then you're really back to full competition. That would be the dynamic I would expect.
Michael McKee from Bloomberg Radio and Television. Can you tell us something about what your policy reaction function is, your policy framework is going forward? When you look at the economy at the next meeting, are you looking at incoming data, which is by definition backward-looking? Are you going to be forecasting what you think is going to happen? Are you ruling out the rate cuts that the market has priced in?
I didn't catch the last part. Ruling?
Markets have priced in rate cuts by the end of the year. Do you rule that out?
Okay, I got it. So what are we looking at? I mean, we look at a combination of data and forecasts. Of course, the whole idea is to create a good forecast based on what you see in the data. So we're always looking at both, and it'll be the obvious things. It'll be readings on inflation. It'll be readings on wages, on economic growth, on the labor market, and all of those many things. I think a particular focus for us going now over the past 6-7 weeks now, and going forward, is going to be what's happening with credit tightening. Are small and medium-sized banks tightening credit standards, and is that having an effect on loans, on lending? And so we can begin to assess how that fits in with monetary policy. That'll be an important thing. We'll be looking at everything. Again, I would just point out, we've raised rates by 5 percentage points. We are shrinking the balance sheet, and now we have credit conditions tightening, not just in the normal way, but perhaps a little bit more due to what's happened. And we have to factor all of that in and make our assessment of whether our policy stance is sufficiently restrictive. And we have to do that in a world where policy works with long and variable lags. So this is challenging, but we will make our best assessment, and that's what we'll be thinking.
What about the idea of rate cuts?
Yeah, so we on the committee have a view that inflation is going to come down, not so quickly, but it'll take some time. And in that world, if that forecast is broadly right, it would not be appropriate to cut rates, and we won't cut rates. If you have a different forecast, and markets have been from time to time pricing in quite rapid reductions in inflation, we'd factor that in, but that's not our forecast. And of course, the history of the last 2 years has been very much that inflation moves down. Particularly now, if you look at non-housing services, it really hasn't moved much, and it's quite stable. And so we think we'll have to demand will have to weaken a little bit, and labor market conditions may have to soften a bit more to begin to see progress there. And again, in that world, it wouldn't be appropriate for us to cut rates.
Courtney Brown from Axios. I'm curious how you view the role of the overnight reverse repo facility in the context of the current banking stress. Do you think it's contributing to the stress by making it more attractive for money market funds to compete with banks for deposits? And did the committee discuss any changes to the structure of the facility, or do you see that being put on the table in the future? Thanks.
Sure. So we looked at that very carefully, as you would imagine, and it's really not contributing, we don't think now. It hasn't actually been growing. It moved up, moved down, and then moved back up to where it was. What happened in the when there were the big deposit flows, which by the way have really stabilized now, what happened was institutional investors took their uninsured deposits and put them in government money market funds, which bought paper from the Federal Home Loan banks and things like that. Over the course of maybe the last year, retail investors had been gradually, as they do in every tightening cycle, they've been gradually moving their deposits into higher yielding places such as CDs and other things, including money market funds. So that's a gradual process that is quite natural and happens during a tightening cycle. What was unusual really was the institutional investors moving their uninsured deposits and spreading them around and things like that. But it doesn't seem to have had any effect overall on the overnight repo facility. That is really there to help us keep rates where they're supposed to be, and it's serving that purpose very well.
Sarah Ewald-Weiss, CBS News. I want to go back to the debt ceiling for a moment. I know you talked about that in terms of fiscal policy, but can you just speak towards what the impact of a default would mean for Americans across the country, the markets, and borrowing?
Yeah, I would just say it's. I don't really think we should be. We shouldn't even be talking about a world in which the U.S. doesn't pay its bills. It just shouldn't be a thing. And again, I would just say we don't. No one should assume that the Fed can really protect the economy and the financial system and our reputation globally from the damage that such an event might inflict.
Thanks, Mr. Chairman. Scott Horsley from NPR. In his report last week, Vice Chair Barr identified a couple of the factors that he thought contributed to the regulatory, the supervisory lapses at Silicon Valley Bank. A policy change in 2019 to exempt all but the biggest banks from strict scrutiny, and also what he called a sort of cultural shift towards less aggressive oversight. You were here in 2019. Do you share that view, and what would it take to get the stronger oversight that you and he said in your release would be necessary?
So I didn't take part in creating the report or doing the work, but I have read it, of course, and I find it persuasive. I mean, I would say it this way. A large bank, not a very large bank, a large bank failed quite suddenly and unexpectedly in a way that threatened to spread contagion into the financial system. I think the only thing that I'm really focused on is to understand what went wrong, what happened, and identify what we need to do to address that. Some of that it may just have been technology evolving, we have to keep up with all that, but some of it may be our policies and supervisory and regulatory, whatever. What our job is now is identify those things and implement them. And that's kind of the only thing I care about is, and I feel like I am accountable for doing everything I can to make sure that that happens.
Thank you. Evan Reiser with MNI Market News. Chair Powell, are we in the early stage or nearing the end stage of the banking turmoil among regional banks? And secondly, do you still have a bias to tighten rates? Is that what the statement is saying?
So, I guess I would say it this way. There were three large banks really from the very beginning that were at the heart of the stress that we saw in early March, the severe period of stress. Those have now all been resolved and all the depositors have been protected. I think that the resolution and sale of First Republic kind of draws a line under that period of, is an important step toward drawing a line under that period of severe stress, okay? I also think we are very focused on what's happening with credit availability, particularly, with what you saw in the beige book, and you will see in the SLOOS is small and medium-sized, small and medium-sized banks who are feeling that they need to tighten credit standards, build liquidity. What's going to be the macroeconomic effect of that? More broadly, we will continue to very carefully monitor what's going on in the banking system, and we'll factor that assessment into our decisions in an important way going forward.
Thank you, Fed Chairman. Greg Robb from Market Watch. I just wondered if you've done any reflection on your own actions during this crisis and leading up to it over the last, since you've been Fed Chairman. I think I've heard you say a couple of times that you deferred to the Vice Chair for supervision. Do you think that was the right way to go about this? And yeah, comments on that. Thank you.
Sure. So let me say, first of all, I've been chair of the board for 5+ years now, and I fully recognize that we made mistakes. I think we've learned some new things as well, and we need to do better. And as I mentioned, I thought the report was unflinching and appropriately so. I welcome it, and I agree with and will support those recommendations. And I do feel that I'm personally accountable to do what I can to foster measures that will address the problems. So on the Vice Chair for supervision, the place to start is the statutory role, which is quite unusual. The Vice Chair, it says, shall deploy policy recommendations, develop policy recommendations for the board regarding supervision and regulation of depository institution companies, and shall oversee the supervision and regulation of such firms. So this is Congress establishing a 4-year term for someone else on the board, not the chair, as Vice Chair for supervision, who really gets to set the agenda for supervision and regulation for the Board of Governors. Congress wanted that person to have political accountability for developing that agenda. So the way it works, the way it has worked in practice for me is I've had a good working relationship. I give my counsel, my input privately, and I offer that, and I have good conversations, and I try to contribute constructively. I respect the authority that Congress has deferred on that person, including working with Vice Chair Barr and his predecessor. And I think that's the way it's supposed to work, and that's appropriate. I believe that's what the law requires. And, but it isn't, I wouldn't say it's a matter of complete deference. It's more, I have a role in presenting my views and discussing, having an intelligent discussion about what's going on and why, and that's my input. But ultimately, that person does get to set the agenda and gets to take things to the Board of Governors, and really in supervision has sole authority over supervision.
I just wondered if you had any regrets, or was there anything that, decisions that maybe you regret now in light of what's happened?
I've had a few. Sure. I mean, who doesn't look back and think that you could have done things differently? But honestly, you don't get to do that. Again, my focus is on control the controllable. As one of my great mentors used to always say, control the controllable. What we control now is make a fair assessment, learn the right lessons, figure out what the fixes are, and implement them. And I think that Vice Chair Barr's report is an excellent first step in that, but we've got to follow through.
Hi there, Megan Casella with Barron's. Did the possibility of pausing at this meeting come up at all, and how seriously was that considered? I'm curious if you can give us any color as to whether there were any initial concerns about raising rates again, or what those discussions entailed.
So support for the 25 basis point rate increase was very strong across the board. I would say there are a number of people, and you'll see this in the minutes. I don't want to try to do the head count in real time, but people did talk about pausing, but not so much at this meeting. That there's a sense that we're much closer to the end of this than to the beginning. That as I mentioned, if you add up all the tightening that's going on through various channels, we feel like we're getting close or maybe even there. But that, again, that's going to be an ongoing assessment, and we're going to be looking at those factors that we listed in to determine whether there's more to do.
I'm curious, too, how to interpret that and the changes to the statement. Is the bar higher now to raise rates at the next meeting, or would a strong jobs report or inflation print be enough to push the Fed to tighten again?
I don't want to. I couldn't really say. I just think I think we've moved a long way fairly quickly, and I think we can afford to look at the data and make a careful assessment.
And we'll go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. You mentioned a few times about the lessons you learned from the banking crisis, that you would learn the right lessons. What are those lessons?
Well, I just would start with something that's changed, really, which is the run on Silicon Valley Bank was out of keeping with the speed of runs through history. And that now needs to be reflected in some way in regulation and in supervision. We know now that we know it's possible. I think no one thought that was possible. No one had. I'm not aware of anybody thinking that this could happen quite so quickly. So I think that that will play through. It will be up to Vice Chair Barr to really take the lead in designing the ways to address that. But I think that's one thing. I guess I would just say that then that we're going to revisit. It's pretty clear to me anyway. It's clear that we need to strengthen both supervision and regulations for banks of this size, and I'm thinking that we're on track to do that as well.
Can you be any more specific on stress testing or looking at banks that have specific concentrations in certain parts of the economy?
Yeah, that's what Vice Chair Barr's role really is, and he'll take the lead on that.
Okay, thank you.
Thank you.
Okay, I actually got out here in my shorts and I just got back in. So yeah, that's it. See what stock market has to say about it.
Small. We didn't even move out of this range. Now the speech ended like 20 minutes early, and we're holding up right here. There's zero reaction to this. This was a complete dud. He had the opportunity. He's just saying anytime you asked him about a pause, he said, well, we've done this, we've done that, we've done this, we're getting close. That last question where he said we might be there, that's the closest thing, but he is not committing to anything. So that's just all. I just think it's a pump fake on the pause. I think everybody wanted it. You got a little bit of an olive branch. We got closer towards the pause, and it may very well be there, but you're not going to get any clarity on that until June or until like you get something way, way, way more concrete. He already knows the jobs report. He knows inflation. He had every chance to kind of guide the market, and I like that take that somebody said. I think he's trying to step away from forward guidance, and he said it's data dependent. We have made a lot of progress. We're towards the end rather than the beginning. But, yeah, he's being very careful, very careful. That's why I'm like, it's a dud. He doesn't want to unleash the front run, nor does he want to box himself in. So we'll see how the bond market takes it, because if the bonds really want to call his bluff, everyone's going to buy it up. But I'm going short for now, and I'm going to hold that. I'm short on the bonds. I'm getting washed on them, but thankfully I kept it small. And then I did a micro play, sold out a couple of longs, still have a couple of other longs, but then still also have some downside. But it's
wanting to
nothing
test
has
down here,
changed
but
in the
keeps
last couple
wicking.
of days now. You're closer towards a pause, but
Buy selling off
if you
here.
get too aggressive off that,
Got
I think
407
you'll
for
pay
the
for
low,
it.
408.
And now we're back to 4,100 here.
See what happens.
My goodness, Chattadonia.
Expose some of those other problems, and that's the downside risk here. Is you could find ourselves in an environment in say 6, 12, 18 months where, hey, maybe the commercial real
I don't
estate
know if I
stuff
wanna
is much
hold
worse than
these.
expected. Maybe some of these consumer loans are much worse than expected. That's the big sort of
Yeah, I might just hold these through.
asymmetric risk to the
I
downside.
think we've had enough data. I
We
think
had
market can
S&P
sell off
500
now.
earnings decline about 1.5%
All those
according to the
claims
Schwab
tomorrow,
team's
that
data
could move
here,
it too.
which is better than the expected 5% drop that was marked in for analysts this quarter. We're seeing from the GDP numbers, things are a little slow. We're seeing some of the jobless numbers creep higher, but then we get an ISM services like we do today that's above 50. We get prices paid from PMI earlier in the week that is warming up again. And of course, our inflation is just below 5. What timeline do you think, Colin, we will have here to understand
Pretty big
if
wick there.
this bank problem is truly going
A lot of
to
volatility.
set off something else in the house? I mean, because if you're the Fed and you're looking at that sub 5% and prices paid, I mean, you're probably looking
Candle
for
from
the
red to
opportunity
green,
to
wow.
start hiking again, I would think, rather than start cutting. What's the timeline to know if the economy demands cuts, you
Didn't
think?
hang out down there long at all.
That's the hardest part about all
I think
of
we'll be
this
back down there.
because the Fed really, they can't cut rates until we're
no,
much
wow.
closer to their target. And just given where all the trends are, we're very unlikely to come anywhere close to 2%, maybe 2024 at some point, at probably the very earliest. I think they're going to be still at 3.5% core
Ooh, big
inflation
dip
by the
buyers.
end of this year. So that's the other worrisome thing is that the Fed has to keep the water main shut off, meaning that they have to basically keep rates at 5% throughout
Delay
all
on
of
it?
this year, I think. That's been my estimate since the beginning of the year. And so
Having
the
fun.
water
It's
main is
showing
going
it's
to
the
be
same
shut
as
off
E-Trade.
this whole year, which means that the credit markets are going to be tight the whole year. I mean, if you're a higher risk borrower or potentially
Nice
even
dink.
a moderately higher risk borrower, you're not getting that loan. So that's the thing. And it's a question of nobody really knows, and this is what the market is grappling with now, how risky does that environment become? I would argue the asymmetric risk is to the downside with all of this, that the inflation trends are clearly moving down at this point.
Showing
Commodities are
0.9.
down 20% plus
My
year
E-Trade
over
showing
year. They're down 10% year to date.
0.087.
That's one of the best real-time metrics of inflation. And so, to me, I think the Fed has
You guys are
defeated
delayed.
inflation. We just don't know it yet in the data. And so
The stream is delayed
we're
some
gonna
too,
realize
guys.
this, especially I think as we move into 2024.
There, it just
but
popped up to
all of
9.3.
this creates this environment where we are still in wait and see mode. I mean, if I'm wrong, then the Fed is totally right to keep things really tight, and maybe the credit
Should've got
markets
back
don't
into
blow
the
up,
shorts.
and
We'll see.
they defeat
They're taking
inflation, but
profits.
it takes longer, much longer than expected. But I would argue the
hold
sort
them.
of asymmetric risk at this point is lower because I think this is evolving more into a credit risk environment rather than being a high inflation sort of 1970 style spiraling, inflation environment.
All right, let's hope it's not both as the third option. Colin, thanks a lot, and noted for sure. We'll keep in touch. Definitely very helpful.
Yeah, you guys are
And,
seeing the delay in the stream.
Take care.
Thank you, Oliver.
This isn't
absolutely.
delayed, though.
That's a fairly, Colin's been telling us coming into this year that credit would likely be the bigger issue.
You should
but
not be
remember, he
trading based
also
on the
was,
numbers you're
very
seeing here.
cautionary about high inflation. And
have your own
said
chart.
The transitory thing was
You're
nonsense.
trying to
so
scalp
to hear him
or
say that the
anything.
Fed probably has defeated inflation is an important thing to ponder here. William Lee joins
It's
us.
almost as dumb
Bill's
as
the
me
chief economist at
trading
Milken
futures,
Institute.
looking
Glad
at the
we got
SPY
you
chart.
This afternoon, Bill, as well. Thanks a lot for joining.
It's actually more dumb than that.
Thanks for having me. What do you think about Colin's view there that the Fed probably
I've been like 35
has
minutes.
killed
It's getting down to my
inflation, or at
price.
least
We're getting
done
there.
the majority of the work
I like
here? We just don't
BWAP.
know it
I
yet.
like 83. It's getting there.
Inflation is very much like a cancer. When you think that it's all
No
gone,
panics.
you're really not
No
sure.
panics.
And that's one of the messages that I think Chair Powell has been telling everyone. We may be able to see inflation coming down, but it keeps surprising us by resurging in different pockets, and we never know that inflation's gone until it's gone, and gone for a while. And that's really I wish I were as confident as Colin to say, oh, gee, the Fed has done its job and we can now ease up and maybe start putting in some of those price rate hikes, rate cuts that the markets have programmed in. But one thing I think we should keep in mind is the reason why people are on edge right now is because of the so-called banking problem. Well, we don't have a banking crisis. We have a supervisory crisis. Supervisors didn't do
Oh
their
yeah,
job.
maybe it is a
and
little
so
delayed.
bad banks were allowed to continue until they failed
Not keeping
badly.
up.
They failed
Just
badly
the
in a way that
5-minute
caused
candles.
people to think that maybe something systemic going on. So
Yeah, it
we
does
have
get a little
crisis
behind, actually. You're right,
of
guys.
supervision here, and that has to be addressed, not monetary policy.
It's weird. It's just like not quite as fast as you
The
trade.
potential for inflation to resurge, I do find that history is a bit disturbing on that point. When you look at the 70s, it's a pretty epic chart. It had a big drop off, and then it came roaring back, and it was to some degree as they were hiking too, the Fed at the time. So, what will you be watching to know if that's the case? Because it kind of looks like maybe we're plateauing right now. We got 2 month
I have a double bottom there. I might put an order in for
4.5% for inflation.
Below there.
For a while there, I came on your show, and every time I pointed to the market pricing for break-even inflation rates, I said the market seemed to have inflation expectations pretty well anchored. And one of the things that I've noticed is that surveys don't always correspond to where the markets are. People's spending doesn't always follow where markets think they should be going. GDP has slowed down, investments slowed down, real estate slowed down, but consumers have not. And that's because the unemployment rate is so low, people are not afraid of losing their jobs. And so they just keep spending until they get that fear. I'm going to be watching what the reaction of the labor market will be to the slowdown in the economy. If people start to get scared because jobs are no longer as plentiful as they think,
SPY's ready to
start
flush
cut
back down.
on their
There it
vacations,
goes.
cut back on their demand for services, that's my sign that the Fed policy is finally working.
And how compelling is the evidence that's happening right now? Do you have a timeline of your own, Bill? I love me calendar to look forward to.
I was really glad to see the fourth quarter gross domestic income
408,
numbers actually
33
turn
break
down.
there.
That means that the gasoline that fuels a lot of consumer spending
level
is starting
here.
to be shut down. But consumer spending was the one piece of strength in the economy in the first quarter that the Fed, I think, is just scratching its heads about, because it's saying we raised rates by 500 basis points and people are still spending like crazy. We've already hit the interest-sensitive parts of the economy, but because that unemployment rate is at 3.5%, people are just not scared enough to cut back on spending. So my timeline is watch those income numbers. When the income numbers start to drag far enough, and remember, it's the very rich two quartiles of the economy.
There's a big range on it. It's not like a small amount. You're putting in, 4 or 5 grand, 10 grand.
Working stiffs,
looking at 18, 20% from here up to the highs of the day.
Starting to
Crazy.
push up their credit card balances. So there is
Like,
a lot of
it's like
strain
no
in the
big deal.
economy, and we have to
This is
watch
huge,
out to
huge
see
ranges.
how much of the economy is going to be strained by the
Get out of my head,
persistently
kitty
high
daddy.
interest rates and the slowdown.
We'll talk
If the
sweet,
Fed
sweet
can really
nothings to
pull it
Jenny.
off and get that inflation expectations down, get the actual inflation rate down to 2%, it can ease up, and we will not have the kind of social stress that I'm anticipating. Because right now, we're going to have a class warfare of the rich versus the poor.
Ugly.
The rich will always have enough money to spend, and they keep spending, and that keeps the inflation rate going.
All right. Important stuff, like the perspective, a very good addition to our convo. Bill,
winding wedge here, channel, whatever.
Thank you very much.
Thanks for having me, Oliver.
Sure thing. William Lee, Chief Economist at the Milken Institute. All right, 2 different takes here and 2 different angles. Very important stuff, good macro analysis. We're going to give the market some time to breathe here, figure it out. Take a look at some of the options trades from today's action, a few of the big contracts that Tom sees. We'll keep our eyes here on the broad market. There is some weakness coming in. Bonds are staying firm, though. The dollar is down, but stocks unable to catch a big bid here.
Micron, need NVIDIA, need these things to sell. Micron needs to come down a lot. NVIDIA needs to come down less. I'll just be over by the barbecue. Barbecue is moving. You tell them it's around 8 or 9 cents, and they think you're fighting over $10 worth. I don't know quite what you're saying, but yeah, it doesn't seem like much, but it's percentages, right? It has nothing to do with cents, percentages. And when I'm not like buying to hold it for 10 years, if I was doing that, then yeah, this wouldn't matter. But it's possible I'll be exiting this trade today or even tomorrow. So extra, 10, 15, 20 points matters. Everyone barbecue jacks. This is the way. There it is, SPY. Yes. Got this channel. Let's see if it bounces here. That line there. Got this one up here. Line also lines up with that horizontal support. Oh, you're saying it is a lot. Yeah, exactly. Yeah, for sure. Yeah, if I'm buying maybe 1,000 shares or 2,000 shares, it's not a big deal. If we close above, what is it, 1013, I think? If we close above 10 cents, I think it's an engulfing candle. I'll have to look again, but you close up here and it's an engulfing candle, the daily. I don't know if you can cross TA from one exchange to another, but hey, I don't see why not. Okay, starting to drop more. Still kind of in this range. Ready to close these if it starts to rip. You can hear my thoughts. Oh. I'm gonna close them, take profits. See if it makes it back up to the top of this triangle.
8.5% move in Micron over the next 44 days. Might seem like a stretch, but if we start getting some good news, they won't have earnings during this cycle either.
Okay. Micron Bulls. All right, there it is. What about in Paramount, which has got earnings coming up?
Yeah, no, me too, Daniel.
I'm
kind of kidding.
It's been a tough trade.
So, yeah.
As far as streaming
this
goes,
was BBY
hasn't
here.
quite had the big rally back that Netflix has had.
This is
but
BBYQ.
it
Started
also
right
didn't
here.
quite crash as hard. So
the barbecue started, and
what do we make of this right now?
Buyer made it
Earnings
rise.
tomorrow morning.
Got
Option
another
markets
bull flag
pricing
on
in
the
about a
hourly.
plus or minus 8.5% move in the shares. I think if you look at what we saw out of the Comcast earnings, we've got WBD also on Friday morning. But if you look at what happened with Comcast, big jump post earnings. If Paramount can control some of their costs moving forward, they still have the content that everybody wants. They've got the different streaming services, Pluto TV and some others that they're involved in. But I think this is an earnings type play as far as unusual option activity goes, because we saw some real short-term call buyers in there. And they used the May 5th weekly cycle that expires in just 2 days to capture that earnings event tomorrow morning. Really. They bought over 10,000 of the May 5th 24 strike calls for an average debit of only 55 cents. So that break even of 24.55 over the next 2 days. It's only about 6% above the current share price with call volume of about 3 times normal daily average volume.
I like that.
And this break even is within that one standard deviation move that the option market's pricing in at this point. So yeah, maybe an earnings play here. Maybe we get some response like Comcast did post their earnings, where we could see Paramount move a little bit higher. Shares are still up about 37% this year. Still down about 22% from year ago levels. So yeah, this is going to be one to watch in the morning. See if we get that pop. This trader's betting that we will see a rally.
Okay. All right. it looks pretty
It's
decent.
more or less the
If
support
it
we
gets
have
to
there.
$25, could get really exciting.
I mean, when Comcast went up, what was it, 7-8%
Like it.
post earnings? When was the last time you saw Comcast, you know, a telecom company move
Grab the
that
shorts up here when
much
you're talking.
in one day, especially
Made a nice
post
ride down
earnings?
to
I
here,
mean, you look at a
closed them,
10, 20-year chart in
reopened somewhere around
Comcast.
here.
Whew, you know,
Closed them here.
you just don't expect those outside moves. So
I was doing
this,
like
this person's
6 to
buying
7
cheap upside calls
micros.
with the expectations that, hey, maybe we'll see
There's
a
the
pop
red
in this
candle.
thing
I'm
too.
gonna get filled
Alright.
here. Watch.
Okay, last one you got here,
It's gonna be so
Activision. This is
garish.
your bear trade, and stocks still just kind of drifting aimlessly lower, though.
Yeah.
You know, since the Microsoft deal got kiboshed by the European regulators.
Yeah, the UK CMA, Competitive
Bunch
Markets
of party
Authority.
spoilers, wet blankets.
Hey, they had some good reasonings
European
that they laid
type.
out.
Okay.
But we'll see. Microsoft and Activision both said they're going to appeal and fight this. Now the shares are flat on the year now. You see that move down
Sell puts on
here near
SQQQ.
three-month lows in today's session. You know, some of the analysts have been coming out, Oliver. I thought this has been interesting because they're giving probabilities or
heavy there.
odds on, you know, this deal going through now. Deutsche Bank dropped the chances of to only 10% that this goes through now. Citi dropped it to about 20%. But
I feel like 20 is pretty generous.
So we've got an RSI divergence here.
Made their will pretty clear here.
Yeah. And, you know, they've already, remember this, before the CMA came out with that decision, Activision and Microsoft already came out with concessions about allowing some of their games, Call of Duty, maybe on some other platforms, but that was what the CMA kind of pushed back on. So we'll have to wait and see how this plays out, but somebody, you know, positioning for some downside in here that we're going to see Activision continue to slide here. We saw a trader buy 10,000 June 70 puts. Average debit of only 61 cents, so that break even just under 70 bucks over the next 44 days, about 8% below the current share price in this name. So giving themselves a little bit of duration. They just had earnings, which were pretty good, but this is all going to be based on the commentary that we hear. Whether, you know, somebody else comes out and says, you know, we don't want to allow this merger or takeover to take place. But, you know, I always wonder, Oliver, is this probably good news for Microsoft? Because the outlay that they were using to buy Activision was a pretty hefty price tag. So maybe if somebody else comes in or maybe this
coming
deal
down more
gets
here. Let's
reworked,
see.
maybe they get it at a cheaper price. I don't know.
Okay.
But somebody betting for downside here.
Yeah, it seems like Activision maybe kind of lost its sea a little bit right now.
Yeah.
Not that it's you know, gonna sink. It's still got a whole reason why Microsoft wants it. It's because it's got a great suite of products, and of course one of the main flagship games people are still into. So they'll be all right. But trader betting that maybe the downside still is the path of least resistance.
Right.
All right, thanks, Tom. Two trades here to the upside, one to the downside. Markets still kind of meandering themselves, a little listless without a lot of buying activity, but no real deep selling either. When we come
Retest this
back,
trend.
we'll talk about big drug breakthrough. A couple of those today. We started the conversation with Eli Lilly's Alzheimer's development, and Immunogen next has had some breakthrough care for ovarian cancer. Exciting stuff. Jenny will take us through it, and then we'll do some more trading into the bell. 20 minutes left.
Barbecue is still heating up. It's pretty widespread. Compared to other OTC stocks, probably really good, but yeah. Let's see, 910 and 945 right now. I continuing this channel. Barbecue will be spicy. 10 minutes coming up. I kind of want to go long. It's a Fugazi. They've got to pump it, right? Oh. Yeah, you've got, I don't even know what the cents are because it's decimals, but it's 945. Oh, barbecue, come on. 945 and 980. Panic buying at market. Dang it, it's ripping. I couldn't get the double bottom. Eyes moving up. Should I front run the Fugazi? Alright, I picked up some right here. Basically, not quite where I sold it. Close though. Whew. Yeah, I need those. I'm going for the futures. Going for it. Yeah. The 15. Not enough margin. Oh, because I just bought all that BBY. Whoops. Yeah, I got 5 of them. Got 5 contracts. Try and let's see. I'm gonna put a limit sell for him. 41.26. There we go. Slow cook your barbecue many hours. That's true. Overnight, in the morning, throw a little salsa on there. Sauce? A little sauce on there, and a little salsa. A little hot barbecue salsa. What's up? Good spice rub, exactly. Let's see. Yeah, like 41.26. That's maybe even a little aggressive. Do 41.25.5. Give me a flush into close. Do it. At the support. Everybody's happy they got to hear J-Pal. Buy the close. Still too weak. Barbecue merge. Oh my gosh, such a good idea, Cameron. Yoink, just stole it from you. BBYQ. That'd be so sick. You have so many different phrases and memes with barbecue. Apparel. Great idea. By just shaking people out. This thing's totally gonna pump. 3 minutes. You're not even gonna have a Y in there? I will buy your merch. There we go, there we go. Some limit buy. Oh, I don't have any more barbecue limit buys. All got filled. Hate all these decimal points. Ridiculous. Okay, now I need to close my futures so I have margin to buy more barbecue. This is the dilemma. So this needs to rip. This needs to come down. There's probably not enough time for it to sweep from my futures. Oh well, if it's a blessing. I'll get a better entry tomorrow for more. Here's 10 minutes. Let's see. You get the Fugazi pump. What is this? We're gonna get the 5-minute feast. Isn't it? Clearly Moss. Clearly. Nice intraday bull flags though. 1, 2. I'm just curious what happens after hours. How does this thing trade? So curious. Barbecue spicy, that is. Oh gosh. There we go. There it is. Come on, baby. Oh. it. Air barbecue? No, what is this? Hmm. What an incredible first day for barbecue. Truly. 31% close to close. 100% from bottom to top. Hundred, yeah. 113% from the low today to the high. We opened up at 482. High was 10. Uh, 5 minutes of feasting might be feasting for the Bears. It's a pretty weak last 10 minutes so far. Not at all. There might be an after hours. If there is, it's only for an hour. It only goes till 5. And there might be a pre-market that starts at, I think, 6. But I'm not certain. On E-Trade, I can't trade it after hours. So it might be really limited on who's able to trade it in the after hours. I changed my order on the future to try and just get out for small profit. Maybe I'll get some margin for some barbecue. Dang it. The shorts are still shorting. New low on the day on SPY. Wow. Okay. Yeah, it's going the other way. Dang, gave back some gains there. I closed it out. And this is why I don't like to trade the last 5 minutes. I just ripped up here. I'll probably end up here. Yeah, there's the pump. You. Mm-hmm. Oh, it's because I'm on 1 minute. Gosh, that's so... makes me way more spastic on my trades. Spastic. Spastic. Spazzy. Okay. Oh, what a weak close. It's crazy. Closing at the lows is very, very bearish. That kind of candle? Ooh. We'll be looking for some shorts to hold overnight, probably. Getting kind of pump after hours. I think this might be the top. Might be in for one of these moves. A month of selling. Back to the 300s. Next hours would be bearish. Hours? I don't know what you mean. Like after hours? I think the market will probably have a little rally after hours, but yeah, I think we're starting a trend the downside probably in the market. That's it. Congratulations, guys. 3 seconds. Sorry. Oh, sorry. Yeah, SPY closed at the lows. A little lost there in the end, but up overall in the futures today. See, I can't even see extended hours on Webull. I can see it on E-Trade. Extended hours. I was only able to pick up another 2,000 shares, so it's okay. I'll wait for tomorrow. I think these. Let's see. Yeah, so this should keep trading for another hour. You added some this morning, Cameron? Yeah, it moved out of that low fast. That tension washed away. $0.06. No, you didn't. Shut up. You didn't get a 6-cent fill. Okay, maybe you did. That's like where I sold this morning. $9.79, $9.78. yeah, it's going to be probably so thinly traded after hours. Wide spreads, probably not much to happen, really. We'll see though. I mean, maybe. It'd be crazy. Wow. Yeah, I'm not gonna do a video. Had to stream till the end. I need to start doing videos again though. Not much to recap, I guess. I mean, you guys are probably here. There's the shares opened up yesterday, closed here, reopened back up shares here. Basically back where I opened them yesterday. And then bought some more on this breakout and then sold them here actually. So it worked out. It's a good trade. And then just bought back in like around here. Not as many shares as I had here, but yeah, see what tomorrow brings. I mean, price action looks nice, looks natural. There's enough volume that you can actually chart it and it makes sense. We've got inverted head and shoulders here, head, shoulder, shoulder, bull flag here, another beautiful bull flag on the hourly. So the TA is actually starting to look good. No news though. I mean, that's, you know, kind of need a catalyst still, but to have a retrace back up to some of these support levels would make sense. Just needed to get out of the manipulated NASDAQ, seems like, for that to happen. See if it continues though. So I'm just curious how it trades. I've not watched OTC this much at all. So I don't know if it's like a Monday, Tuesday, Wednesday rally, and then Thursday, Friday it sells off. That stuff probably still applies somewhat. People taking profits before the weekend. Got an engulfing candle here on the 4-hour. And daily, I don't think it made an engulfing. Nice big green candle, but quite engulfing. Yeah, not quite engulfing, but looks good nonetheless. RSI did tick up there. MACD's been bullish for a bit. So now we have an RSI divergence, which anytime we're going to have a bullish move is going to create this divergence because the RSI keeps pumping up and price actually keeps going down. So, but now we've got a confirmed one. Well, really we need tomorrow to close for this to be confirmed, but for now it looks like it is. But yeah, again, tomorrow we'll decide it. So higher lows on the RSI, and lower lows on the price action, the price. So looks good there. Thanks, Chills. Thanks, Cameron. Night for PP's stream. Would you rather have Starbucks coffee or 686 shares of barbecue? Definitely some barbecue shares. Should be $68 now. It's too easy. It's J Pal and they're we'll see. Oftentimes it inverses, so yeah, we do. There is still data tomorrow that could move stuff around a bit. Initial jobless claims 8:30, so entering and exiting positions around 8:30 would probably make sense. All that misinformation on PP show is proved wrong, so careful what you listen to. Take things with grains of salt. This was not suspended for 10 days or whatever until after they filed some 25 form that was going around. It went straight to delisted. I know it didn't show up on the NASDAQ thing, which is weird, but that doesn't, you know, there's stuff we don't know about, and it just didn't show up there, so I don't know. But it's here now. I can't trade it after hours. Maybe some of you guys can. I think it keeps trading. Yeah, it looks like it does. On E-Trade, it's up 0.10%. So in the after hours, so I'm gonna keep an eye on it and see if that closes at 5, which good, and then eventually it opens back up at 6 a.m. So yeah, pretty excited. Should be good. Thanks for watching, guys. Thanks for your commitment. Oh, there's the bounce on SPY, the after hours bounce. Yes. Thanks for your thumbs up. Thanks for your subs. Sub up, like up, comment down. Happy Money sticks around. There's our Twitter at Happy Money YT and our Discord server. Link for both of those are in the description. Thanks, Grumpkin. Thanks, Trader. Thanks, Jay from the Bay. You have a good evening as well. 1 hour after hour. Yeah, so it is trading in the after hours. Not showing up on Webull, but it's only trade. So got 0.10. Probably very thinly traded in the liquid. So only in moves in the after hours might come from big news catalyst. There's the rip on SPY. Could have waited, I guess. Oh well. Thanks, guys. We will see you on Discord. Have a good evening. Thanks, Mohammed. Thanks, Kitty. Thanks, Trader. All right, peace out, guys.